playbook out to the 28 and beyond time frame. Very clearly, I think what the market's doing here is pricing in 26 and 27 earnings growth and fundamentals for that part of the semiconductor and NASDAQ component. But then I think where the rub is okay, what do you do in terms of modeling out 28 to 30? I think there's a question mark here. Growth is expected to decelerate in 28 versus 27 over 26. And I think that's real the linchpin here. So what ends up happening is that, gee, you think these stocks look less expensive or inexpensive on forward PEs, but there is this issue of how you navigate decelerating growth.
Right. How should viewers think about, I mean, there is an argument that, for example, this CoreWeave and Nebius backlog for the moment is giving you better visibility into 28 and in some cases even 29. Is that clean? Is that a clean view?
I think it's it's increasingly clean. That's sort of been the storyline through the Q2 reporting period. You know, we were looking for a bit of a mean reversion lower in semis. We got that, but what we needed was confidence in this hyperscaler CapEx spending component to demonstrate some ROI opportunity, and I think that's what's happening here. And so when you do that, you begin to rejuvenate the whole complex. And in the meantime, let's not forget software, which was sort of left for dead earlier in the year, is now your top performing industry group quarter to date. So again, the various components of the tech complex have come together here. But I would say when you look at the hyperscaler communication services component, it's still lagging the index quarter to date. So as you get renewed confidence in here, I do think you begin to set up for a different version of the broadening playbook where we've gotten the anti-AI trade working earlier in the quarter. Now I think you're set up for, again, a bit of a stability fashion here that I think supports the index.
I mean, communication services and consumer discretionary, those are the two weak links, I guess, for the year. They're the only two sectors that are in the red. So does it make sense to you, or would you be a buyer on the weakness, on the broadening?
Well, where I want to be a buyer, Sarah, is on the communications, on the consumer discretionary part. I still think that what we're looking at here is a setup where, you know, whether you look at, you know, the aggregate consumer discretionary sector, the equal weighted component, or even the retail component, there's still a lot of nagging concern, whether it's regarding the oil price influence, read through to gasoline, et cetera, whether it's the inflation influence, the risk of a hawkish Fed reinvigorating here. But under the surface, when you look at what's happening here, whether it's K-shape or something different than that, I do think the underlying fundamental trends are pretty supportive of money flow back to this part of the market, which has been lagging. It's part of the broadening complex that I think can work from here into the end of the year.
Yeah, especially if the K is converging, as we've been saying. I mean, ultimately, isn't that good for
that'd be a sweet spot.
Consumer stocks?
Yeah, that'd be a sweet spot. And it's going to play through in different ways. I mean, obviously, within consumer discretion, you have to handicap Amazon and Tesla. But away from that, like I said, the market's been pretty reticent to come back to the traditional retailers. And I think, honestly, for good reason. But again, that's part of the broadening playbook that we think comes with, I think, you know, an improving setup here whereby the hawkish dynamic that's priced into rates right now gradually comes out as we go into the fall months.
Scott, we'll try to tackle the war and energy in future appearances. It's a much tougher read at the moment than the other stuff we've been talking about. Scott, as always, our thanks. Scott Cronin over at Citi.
Take care.
Take a look at our roadmap for the rest of the hour. When we come back, we'll talk about some major AI movers today, including Lumentum, up more than 600% in a year, adding to gains on these recent results. Company CEO is with us exclusively.
Plus, President Trump reportedly considering a new tax cut push ahead of the midterms. It could have a big impact on investors. We're going to explain.
And much more on the inflation picture and what it means for the Fed when we are joined by Goldman Sachs' chief U.S. economist, David Mericle. Clock on the Street. We'll be right back after a quick break.
Strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track.
Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better.
Call now for your Comfortable Retirement Kit. Call 1-800-759-4477.
Call us today. You don't have it coming to you unless you plan for it.
If your portfolio is $1 million or more, call 1-800-759-4477.
Watch top movies and series for free with Fandango. Stream iconic action favorites like Armageddon.
The United States government just asked us to save the world. Anybody want to say no?
Speed.
Are you insured?
Yeah, why?
Predator.
Knock, knock.
Explore a library of fan favorite movies and binge-worthy series with no subscription or login required. Download the app and start watching today. Only on Fandango.
Could you please submit your expenses today?
You could keep reminding your coworkers to submit their expenses. Or you could let Ramp do it. Never chase a receipt again. Ramp. Love finance.
You shouldn't have to sacrifice your well-being for your workplace. That was the idea behind the original VeriDesk, and it transformed offices all around the world. It proved that when you sit, stand, and move more, you can work happier and healthier. So whether you're furnishing a whole office or outfitting your home office, Veri has everything you need. Our bestsellers are on sale at Veri.com.
Here, we're trying to make $1,000.
Simple setup, unmatched strength and stability. Minimal noise, maximum enjoyment. Simple enough for one, better with two. Explore beds and home essentials at Thuma.co.
Let's get to some big moves in the AI space today, including Supermicro. Stocks higher after upbeat guidance. Company's earnings outlook now in the range of $1.01 to $1.10. That's well above the 76-cent estimate. Revenue guidance of $14.5 to $15.5 billion, also above projections of just under $11.7 billion. NeoCloud Nebius also jumping after a better than expected quarter on the top and the bottom line. Gross margin stronger than estimates. And then, of course, there's CoreWeave surging today. The revenue doubles on accelerating AI infrastructure demand. Michael Intrater joined us here at the desk last hour, detailed the outlook for margins and the value of these existing GPUs.
We brought on 500 megawatts of power, which is astronomical. Our installed base is now 1.5 gigawatts, right? We are a massive supplier of this. Enterprise companies are beginning to adopt our platform. Contract margins, the contribution margins, as you said, are rising. And one of the debates that has followed this industry has been on older generations of GPUs. And what we have, I hope, put to bed here is that those older generations of GPUs are going to have a longer useful life than anyone anticipated.
Backlog $104 billion is roughly 4x year ago. And then, David, you tried to pin them down on some of the additional commitments they've gotten quarter to date.
Yeah, in the last 5 weeks, more than he said, $25 billion in commitments. Best we got from him is it looks more like it's similar to what they have already in place. The momentum obviously is there. He is talking about margins obviously inflecting in a significant way. We talked about that. The longer term, though, Carl, is still, of course, the larger question. Given the indebtedness of the company, somewhat $35 billion, has raised a lot of capital and debt over time. And when do you get to that nirvana of real free cash flow? But investors clearly see it coming at some point, given the way their business is inflecting.
Yeah, I think the high, the stock right around 160 or so.
Yeah.
Of course, got down to the 60s in recent months. And then Jim tried to pin him down, too, on some of the cultural and societal friction on data center development, midterms less than 90 days away, all that stuff.
Also, we're flashing this thing about the older generation of GPUs, and basically what that looks like. It was a funny line from a trading note of Bank of America today. Depreciation bears getting defenestrated as we speak. So that had been part of the bearish case as well.
Yeah, it's not insignificant, of course. Is that? I mean, you did the opposite on this yesterday, didn't you? About data center and all the things.
I did the economic boost, yeah, basically, because there was just so much negativity around. And look, I think there are valid concerns around water, right, and the environment, electricity costs, and noise. But I showed that basically job growth comes with it, and housing units come with it, and housing values rise, at least according to some of the data that Wells Fargo put out there, and that we've gotten from some of these counties in Virginia, where tax revenues are also skyrocketing, and that is able to lower their property taxes. So there are positives there too.
Let's stick with AI and the movers. Lumentum stock is up, got it up about 5.3%. This follows an earnings beat from the company. It's a maker of photonic and optical technology that has become a key part of data centers. Of course, it's a way to enable the data to move even more quickly around the actual data center within the server. Shares, they're only up some 620+% for the year. Joining us now on the CNBC Exclusive is the company's CEO, Michael Hurlston. Michael, good to have you.
David, good morning. Good to see you.
And you as well. You know, let's just start off. I mean, I think you raised Q1 revenue guidance to sort of that $1.25 billion midpoint. It's more than a quarter ahead of the target you laid out only not that long ago at your OFC. So things are accelerating, and I'm just curious, I guess, is it more customers? Is it bigger orders? Is it the same number of customers and the hyperscalers you had before?
Look, you've been talking about it all morning. I think the demand signal that we're seeing is better than we expected. As you correctly said, we were talking about this just a few months ago at the Optical Fiber Conference where we had an analyst day, and here we are less than 6 months later, and the demand signal that we're seeing from the hyperscalers is just incredible. So we see really no end in sight to the demand.
I think you said on the call you're now much further behind on ultra-high power laser supply than you were 3 months ago. Maybe that's a high-class problem because of this demand, but I'm sort of curious, how do you view that? Are you leaving revenue on the table as a result of not simply being able to get these high-power lasers that you need?
Trade till 9. Yeah, the high-powered lasers, you talked about it in the preamble. We are connecting data and making it move faster and faster. Everything, our company is based on optics. Optics is light. Nothing moves faster than light. So these data center customers that we have are trying to move traffic using light as the optimum medium. And we have a partnership with NVIDIA that's well known. NVIDIA invested in the company, and they are looking to deploy more and more photonics because they're building ever faster compute. And in that context, the demand for these high-powered lasers that drive and connect the traffic has gone up substantially over the last couple of quarters. We fabricate these, we have to manufacture them, so our lead time is relatively long. And so we're having trouble just keeping up with the demand that NVIDIA and other customers are currently putting on us.
49. Okay, so back to sort of demand as well. How much visibility do you have then? I mean, how long, in your opinion, Michael, does this continue?
89, 90. Yeah, we have long-term agreements with a good number of our customers, and those long-term agreements now are spanning out to 2029. We're effectively sold out through that capture period. Based on the demand that our customers are putting on us, we don't see, one, any end in sight, and two, our ability to kind of catch up to this demand signal is severely constrained. Our lead times to build our manufacturing facilities are 2 to 3 years, and we have visibility out that far, David, that says at the end of that, we're still behind. When it breaks to 14,
so you don't buy into the obviously the overbuild concerns, and that's how you would answer some of those? You know, if the hyperscalers are just spending too much and building too much?
Yeah, just, you know, we have committed orders from them, and those committed orders, Sarah, go out, as I said, 3 years. They are essentially take or pay. So these guys are really putting teeth into what they put on us. And if they don't meet that bill, they have to take the goods anyway. So we really feel like this is a 5-year cycle, and again, given the commitments they've given us, we don't see that this is slowing down anytime soon.
The other topic of discussion I know investors are asking you around these reports that the FCC may make a move, new rules to limit the imports of these optical transceivers, especially getting at Chinese suppliers. How would that affect you specifically, considering Chinese suppliers are customers and your competitors in the industry?
Too much. 15 seconds.
Yeah, look, it's a great question. I think it's good for us, sort of in the near term and in the narrow narrative. What our concern is around this proposed rulemaking, again, everything is speculative at this point. We haven't seen any real rules come out of either the FCC or any other agency in the government. But I think they have to be thoughtful. If there's any disruption to the supply chain, it's going to be a problem, not just for us, but for anybody else that's supplying into it. We would be a beneficiary because obviously we manufacture these transceivers, which are an issue. But think about it in the macro, we supply, U.S. suppliers probably are about a third of the transceivers that go into these data centers.
It's just that we're
limiting 66% of the transceivers, and I think if it's not done thoughtfully would be a big problem.
I'm looking for a break.
Finally, Michael, given our conversation with you, we spoke with Michael Intrater in the last hour, obviously. Things look so incredibly strong in terms of at least the overall growth story for compute and everything that comes along with it. But I am curious, is there one thing, one major sort of concern that you might have that would derail the overall growth story? And if so, what is it?
But
we're kind of unique. We have, like I said, there's a major shift going on in these data centers. The data centers, generally speaking today, David, and again, you spoke to it in your preamble, a lot of the connectivity is copper. You have electrical connections that are inside these data centers. And if the data center build-out slowed to a crawl, we'd still be just fine because you have the second effect where those copper connections are shifting to optics. Light is coming in more and more into the data center, just given the speed and bandwidth our customers require. So even if this thing, Sarah asked a good question, just slowed way down, we'd be in fine shape.
Michael, appreciate the update.
I have a feeling.
Obviously, your investors over the last year are also quite happy, I would imagine. Thank you.
Thank you, David.
We've been bouncing on.
All right, up next, the president could call for a cut to capital gains taxes ahead of the midterms. We'll have more on that. Plus, the AI boom came with promises of disinflation, but so far, we haven't seen that materialize. But look at how costly the AI build-out is complicating the Fed's overall inflation fight. And speaking of inflation, we'll talk with former Treasury Secretary Jack Lew about the read on today's data.
If this candle closed, I'm gonna have target. Okay, first target is at 48. First target 48.
And you get
That's what the target is.
You could end up with this.
Get
unexpected out-of-pocket costs.
On a buy.
Which for those on Medicare or soon to be is a good reason to take charge of your health care.
It came up.
So consider this. An AARP Medicare Supplement Insurance Plan from United Healthcare. Why? Because Medicare alone doesn't pay for everything.
Come on. Are you going to do this?
And what it doesn't pay for, like deductibles and copays, could really add up. Even thousands of dollars a year.
I'm a close.
Medicare supplement plans help by paying some of what Medicare doesn't. And making your out-of-pocket costs a lot more predictable.
Just might need
Call United Healthcare today and ask for your free decision guide. Learn more about plan options and rates to fit your needs.
Maybe a slice.
Now, if you like this,
then go for the
greater freedom,
as long as we don't,
you'll love that Medicare supplement plans have no networks and no referrals needed. See any doctor, any specialist, anywhere in the U.S., as long as they accept Medicare patients. These types of plans also give you more flexibility when traveling in the U.S.
But we're still above.
Your plan goes with you anywhere you go in the country. Even better, Medicare supplement plans with the AARP name are plans endorsed by AARP. Call United Healthcare today for your free decision guide. If you're on Medicare and want less out-of-pocket costs and more peace of mind, consider adding this, an AARP Medicare supplement plan. Take charge of your healthcare today. Just use this or this to call United Healthcare about an AARP Medicare supplement plan.
Come on, stop the nonsense. Come on, bulls. Come on, bulls.
From senior to childcare to pets and more, the new Care.com makes it easier than ever to find the care you need. And you don't have to hire just anyone. You can find a background-checked caregiver who's the right fit for you. Join now and find care at Care.com.
When I started Walton Goggins Goggle Glasses, I needed a website. GoDaddy Aero uses AI to make a beautiful website so fast it'll blow my customers' noggins while they're shopping for Goggins for their noggins.
That's your down signal right now. But
become a smarter investor with CNBC Pro. Exclusive live events.
Seeing all my favorite anchors, it's been kind of like a dream come true. The opportunity to come here, it's unmatchable.
Become a CNBC Pro. Go to cnbc.com/getpro now.
Welcome back. President Trump reportedly considering a push for a capital gains tax cut in hopes of gaining a boost for the Republicans in the midterms. Megan Cassella in Washington with the story. Couldn't be going in a bigger, different direction than the socialists here, Megan. That's right, Sarah. So this comes according to current National Economic Council Director Kevin Hassett and former Director Larry Kudlow. They were discussing various ways of cutting capital gains taxes on Fox Business on Tuesday. Hassett said that President Trump is looking for promises to make to voters on what the administration will do if Republicans have power in the future. So he says, quote, you could expect a lot more policy between now and the midterms. Kudlow then replied that he had spoken to the president, and he says the president likes the idea of indexing capital gains taxes to inflation and the idea of a bigger exemption. I asked the White House about this, and a spokesman told me this morning that President Trump is always exploring new ideas to make America wealthy again, but that any policy announcements will come from the administration directly. Now, a couple of things to note on all of this. This is very preliminary, something that the president is considering asking Congress to do. The odds that Congress would tackle something like this ahead of the midterms are very slim. There has been some bipartisan support for pieces of it. There was a Senate bill introduced late last year that would index capital gains taxes, specifically on home sales, to inflation, but the calendar and momentum are just not on Congress's side. Lawmakers are here for about 3 weeks in September, but otherwise they're mostly campaigning in their districts between now and November. Now, some conservative senators and analysts have argued in the past that the Treasury Department possibly could take some action on this without Congress to index gains to inflation. That would be on shaky legal grounds, though, and it would very quickly end up in the courts. Guys,
yeah, I was just thinking of all of the other promised or at least hoped for legislation, Clarity Act, SAVE Act, that wasn't able to get in before the recess. I mean, 90 days is not a lot of time, Megan.
It's not a lot of time, and it's especially not a lot of time to get things done where there's going to be a lot of debate. Yes, some Democrats, especially moderate Democrats, like this, but maybe not enough Democrats to get something over the finish line. There could be some Republican pushback. To the cost of this specifically, Yale Budget Lab had estimated that indexing capital gains to inflation would cost $1 trillion over 10 years. So not something that they can easily attach to something that does have to pass, like the NDAA or funding the government. Those things will have to get done between now and November, but you're likely not going to see a lot of things like this attached to them.
That was a flush candle.
Megan, thanks. Megan Cassella watching the possibility of further tax policy evolution. Dow's up 42. Let's get a news update with Pippa Stevens. Hey, Pippa.
Good morning, Carl. A federal judge in Boston expanded her order blocking the Postal Service from implementing parts of President Trump's executive order to overhaul mail-in voting policies ahead of the midterms. The provision called on states to provide lists of eligible voters to the USPS, and if they didn't comply, the agency would not deliver the ballots. The White House is appealing. Major U.S. freight railroads and industry groups just lost an appeal that challenged a new rule from the Federal Railroad Administration requiring trains to operate with at least 2 crew members. The rule came about after intense scrutiny of railroad safety following a 2023 derailment in East Palestine, Ohio, that resulted in cars spilling toxic chemicals that caught fire. And the Chicago White Sox held a Pope hat giveaway last night in recognition of Pope Leo's love for his hometown team. The team's marketing chief says they originally only ordered 2,500 hats, but tickets started selling so fast they bumped up the order to cover a sellout crowd of 40,000.
That
The team says it's
handle
unclear
that
whether
flush
Hope
hit
knew
both
about the event.
downside
Guys, back to you.
So I don't know if
Jeff, thank you. Did want to bring some M&A news involving a well-known name, to say the least, courtesy of reporting originally from ESPN, although we do have a statement as well from the two people behind a deal to acquire the Los Angeles Lakers, of course, for $12 billion. Both Josh Kushner of the firm Thrive, right? Very successful venture capitalist. And Bob Iger, longtime CEO of Disney, former CEO of Disney, of course.
That's the biggest.
In a statement saying and confirming that they have reached a deal to acquire the Lakers. The price, according to ESPN, we have not, calls into Mr. Iger have not had them returned, is $12 billion. Statement as follows. They say, as lifelong NBA fans, they're deeply honored for the opportunity to become stewards of the Los Angeles Lakers. Iconic sports franchise. They also talk about having respect for the longtime owners, Jerry and Jeannie Buss, and their long-term commitment to building on the foundation, of course, and competing at a very high level. Now, interesting to note in the statement, they talk about the Buss family, but of course, people may recall that it's only a year or so ago, I think it closed last October, that Mark Walter, also the owner of the Los Angeles Dodgers, the Chelsea Football Club, purchased the Lakers for $10 billion. So you're talking about a franchise that will have changed hands in the space of a year at a 20% increase over the last price, which, by the way, was a record when it was sold. This is a new record. It would certainly seem, if the $12 billion is confirmed as well, for a sports franchise. And Sarah and Carl, it is also interesting to note that Mr. Walter was the subject of a recent story in the Wall Street Journal about a federal probe into his loans that he took to help finance the purchase of things such as the Lakers. The U.S. Attorney's Office in Manhattan, the SEC, were reported by the Journal to have been examining about $16 billion in loans extended to companies tied to Mark Walter or his conglomerate. Remember, he controls life insurance companies as well. And whether or not those loans, after having passed through a third entity, should have still been called related party transactions.
Yeah, they just never.
And there was a probe into whether they were mischaracterized, and that should have been perhaps
where you got the red
disclosed to insurance regulators. It's the rule meant to limit conflict of interest, as you might imagine.
That's your entry.
That gets taken care of. Those loans get paid back when you're getting paid $12 billion for a team you just bought for $10 billion. So kind of another part of this. Not clear that it has a lot to do with it or anything, but certainly did want to note it, given it is tied into it.
I mean, it's also interesting given Josh Kushner just in the last few weeks tried to make a bid to basically buy the World Cup, right? This private enterprise of FIFA, which failed spectacularly after there was a revolt. It was very controversial by most of the soccer federations, including the European League. That deal was supposed to happen with Gianni Infantino, which is the head of FIFA, and Kushner for that, I guess, 20% stake in a private enterprise that would be attached to
Sarah, obviously I know Iger quite well. He's certainly a wealthy man as a result of many years at Disney. You know Kushner, I believe, to some extent. But neither one of them wealthy enough to put up $12 billion. And so I don't know if this is being done. Again, we don't have any details as to where the money is all coming from, how much is being financed, where other equity is coming from, whether, I mean, Kushner is a venture capital investor, so that doesn't necessarily go along with, although you said he was interested in buying FIFA. I don't know, is that a possibility that it is also coming in part from his own fund?
I mean, look, I just looked, Forbes gives him a net worth of $5.2 billion. He's had a number of home runs, both in terms of fundraising and investments on some of the most successful startups. Notably, OpenAI has been a big bet for him. SpaceX was a big bet for him. Others include Instagram, Stripe, Spotify. So he's been at the center of.
But they're buying net worths to the extent they are, and certainly you're not going to put your entire net worth into buying a basketball team.
Also, Iger is an investor, I believe, in Thrive.
Yes, he is.
And
he works,
there was a portion
with him as well.
And also when he, in between his last 2 Disney CEO stints, he was at Thrive.
Yeah.
You could make a decision
so they're very close.
Certainly hope to get a little more information around the financing of the actual $12 billion, Carl, which is just a stunning number.
It is stunning. Thanks to Vital Knowledge, Bus buys the Lakers, the Forum, and the Kings in '79 for $67 million.
First
but that only works out to about 11-12% annual
Is that all?
First target hit.
Would have been
First target
not
hit.
bad.
Not bad.
I don't know what the S&P is in '79, but that's interesting.
You're staying in. That's
sports teams, I mean,
target one hit.
Like, where's the ceiling?
There doesn't appear to be one, even though they really, on a return on invested capital basis, they don't return a lot in any given year. Or certainly many of them don't. But they do when it comes to asset value, that's for sure. They just keep going higher and higher.
I'm telling you.
$25 billion in assets under management. Right, that's what I was looking at. That's as of this year.
Yeah, just wonder if he has the leeway to actually invest in sports franchises. Of he does. I don't know. It's not necessarily under the venture.
I think we should also note, not necessarily tied to the financing, but he's the brother of Josh Kushner, of course, advisor to the president and son-in-law to the president and son of the ambassador to France.
Right. When we come back, the AI boom came with promises of disinflationary effects. So far, they've yet to materialize at scale. We're going to look at how that costly build-out may be complicating the Fed's inflation fight. CEO of Honeywell Quantum spinoff Quantinuum, its first earnings report since going public in June. Stay with us.
You can't hesitate. As soon as it crossed that 200,
if you're on Medicare, and you get this, you could end up with this.
Remember, we just spoke about
unexpected out-of-pocket costs, which for those on Medicare or soon to be is a good reason to take charge of your health care. So consider this: an AARP Medicare Supplement Insurance Plan from United Healthcare. Why? Because Medicare alone doesn't pay for everything. And what it doesn't pay for, like deductibles and copays,
that probably made
even thousands of dollars a year.
$20.
Medicare supplement plans help by paying some of what Medicare doesn't, and making your out-of-pocket costs a lot more predictable.
Just now?
Call United Healthcare today and ask for your free decision guide. Learn more about plan options and rates to fit your needs.
Now you need it to blow.
Now, if you like this, greater freedom, you'll love that Medicare supplement plans have no networks and no referrals needed. See any doctor, any specialist, anywhere in the U.S., as long as they accept Medicare patients. These types of plans also give you more flexibility when traveling in the U.S. Your plan goes with you anywhere you go in the country. Even better, Medicare supplement plans with the AARP name are plans endorsed by AARP. Call United Healthcare today for your free decision guide. So, if you're on Medicare and want less out-of-pocket costs and more peace of mind, consider adding this, an AARP Medicare supplement plan. Take charge of your healthcare today. Just use this or this to call United Healthcare about an AARP Medicare supplement plan.
When you have
the market's brightest opportunities may be the ones most portfolios miss. At EQT, we believe private markets performance is built, not bought. For 30 years, backing tomorrow's businesses before they're public.
You get a close above that 14, you're back in the trade.
Long-term value. That is alpha.
But like I said, this is my turn
private markets.
And there's no dominant.
I did start as a volunteer candy striper, and I am lucky enough to have found my passion in healthcare. Parexel is a global clinical research organization, and we partner with companies to run all phases of clinical research. I am a huge CNBC fan, I will confess. This is my first CNBC council. What I'm noticing already is just the generosity, frankly, and openness of the discussions. I think that's signal. The ability to be here and have a wider lens, I think, is a real opportunity.
Give you a chance to get in.
Welcome back. Inflation was in line with expectations in the July CPI report as the Federal Reserve waits its next move on interest rates. Let's bring in David Miracle, Chief U.S. Economist at Goldman Sachs. Welcome back. It's good to have you.
Thank you.
Anything surprise you about today's inflation data?
No, for the most part, I think in line with expectations. I think the big picture takeaway is this is the second consecutive month of better inflation news. We came in a few basis points above our expectation, but we actually think we're going to come in a few basis points lower than we had thought on core PCE inflation, the Fed's preferred measure at 23. That would include a large impact from the stock market, so we actually think the news is even better than that. This is what the Fed wanted to see. Of course, there's one more round in early September, the August data, but I would say so far we think we're on track for the Fed to hold at the September.
Nothing in here makes you think they need to hike?
No, I don't think so. I think generally over the course of the last several months, our take has been the reasons that we are above 3% are the combined effects of the war, tariffs, and some statistical mismeasurement that amplifies the impact of AI demand, and all of those things are fading, so that we're on a better trajectory.
That's a very rosy view.
Like I said, you're toying with the 200.
Although your view on the consumer has been pretty cautious, yes? And we did get average hourly earnings negative on this print, right?
So on the consumer, I would say the last few months have been surprisingly okay given the increase in gasoline prices. We think the explanation of that is that the gas price increases coincided with the tax refunds. At this point, the impact of the tax refunds on consumer cash flow should be over. So in the back half of the year, you're looking at mediocre real income growth, a saving rate that's already quite low, and we think that translates to below potential consumption growth, call it something like 1.5%.
What do you think is supporting then retail spend on the consumer's behalf? Is it wealth effect? I mean, household debt went down in the quarter, did it not?
Yeah, so I would say a handful of things. One of those absolutely is a wealth effect. We think that's been worth maybe a few tenths boost to annualized consumption growth, led basically entirely by the stock market rather than housing prices. The other is the tax refunds. And then the third is, real income growth is mediocre, but not quite zero. We've also seen a pullback in the saving rate. That's a volatile number, but so far that's been also a contributor over the last
But it hasn't been a credit story or a leverage story on the household front.
We've seen a small decline in the saving rate, but that's normal. Suddenly you get hit with higher gasoline expenses, you cushion the blow a little bit by saving a tad less.
Is the labor market weakening?
I would say there was a meaningful change in our perception of trend job growth after last month's number, because we got both a decline last month, but also negative back revisions. It's hard to get too worked up about weaker jobs numbers when the unemployment rate is falling rather than rising.
It's
also hard to
falling because participation is also
that's right, and I think there is a bit of a puzzle on why the participation rate has fallen quite so much this year. It should be falling a little bit just because of population aging, but it's fallen more than a little bit, and I don't know that we have all the answers to why.
There's a great debate, speaking of wealth effects, on whether or not people are retiring earlier. I've seen some age-adjusted work that suggests maybe it's not that dramatic over time.
So I would say that's right. Just the pure population aging, you would think is worth maybe a couple tenths per year. And relative to January, we're down 7 tenths, so we're moving faster than that. So I wouldn't say that population aging explains all of it. It's possible that wealth effects make people willing to retire a little earlier, but the decline in participation is not just a story about older workers.
Interesting week in that you have ADP down 7 straight weeks and a sub 10K print today on the week. And yet NFIB hiring plans was really strong. How do we square those?
So I like to look at a measure that we call our Slack tracker that brings together many different survey-based and hard data-based indicators of labor market strength. The message has generally been that things are a little bit worse than the unemployment rate alone implies. Most of the surveys have been more downbeat. Workers say it's hard to find a job. Employers say for the most part they're not struggling as much to find workers. I wouldn't say it's a hugely different message, but a little bit worse than the 4.1% unemployment rate suggests.
I mean, so add it all up in this economy, and there's a lot of concern, for instance, on the political front about inflation, cutting into wages, making cost of living harder and affordability. How would you characterize where we are right now on that?
Yeah, I think that's right. The fact fact that inflation has stayed high for another year means that real income, inflation-adjusted income growth this year is going to be mediocre. Now, we think that things that have surprised to the upside on inflation, namely the effects of the war and the effects of AI demand amplified by statistical mismeasurement, are retreating at this point. So going forward, if wage growth stabilizes, as it appears to have been stabilizing in the mid-3s, and inflation comes down, as we expect, then real wage growth would look better next year than it looks at the moment.
And I was just going to say, how much is AI driving the economy at this point?
Yeah, I think less than is widely thought. I mean, it is for one technology. This is an enormous contribution to the overall economy. So if you kind of look at it realistically, it's just that there are claims out there that this is the majority of U.S. GDP growth, and that's a bit exaggerated because a lot of the production of equipment used for that AI investment is actually done abroad.
Really want to take that top.
Yeah, you did some work this week looking at it's crowding out some things, but maybe not crowding out as dramatically as some fear.
I think that's right. It just so happens that this big data center construction surge, for example, coincided with a kind of lukewarm at best housing market and a big decline in manufacturing facilities investment from a high point where subsidies under the Inflation Reduction Act and the CHIPS Act had led people to want to build a lot of extra factories. So that has let up or offset a little bit the pressure from suddenly building all these new data centers.
All right, David, thank you for joining us.
Thank you.
With all the hot topics in the economy. David Miracle from Goldman Sachs. After the break, a different angle on the inflation story. We'll look at the big promises from Silicon Valley about AI's disinflationary powers and why we have yet to see them materialize. Be right back.
Executive Decision is sponsored by CrowdStrike. We secure AI. We stop breaches.
If you're a business in Ohio,
the
opportunity for growth is high.
Don't do that to yourself.
Like, really high.
You pick and choose. You're gonna
because in Ohio, the cost of doing business is low.
It takes you out, it takes you out.
Really low.
The thing is,
it's one of many reasons why Ohio is ranked the #1 state for business in America.
If you pick and choose, you're going to put yourself back in a position of trying to guess.
Are you retired or planning to retire and worried your portfolio won't meet your long-term goals? Fisher Investments can help. You'll get a team of professionals specializing in investing, retirement income, Social Security, tax optimization, estate planning, and more, working together for your future. If your portfolio is $1 million or more, we have up-to-date guidance you need now.
Call or scan for your free Smart Retirement Action Kit. 3 essential guides to help bring confidence and clarity to your retirement plan. Call 1-800-280-3659.
Unlike some money managers who sell products to earn commissions, we do not. We have a transparent fee, structured so we do better when you do better.
Don't miss your free Smart Retirement Action Kit. Call 1-800-280-3659.
As a full-time fiduciary, our goal is to grow your wealth and help you retire comfortably.
Call or scan for your free Smart Retirement Action Kit today. Call 1-800-280-3659.
And you break that,
get the essential post-market edge, after-hours action, and opportunities.
That's your all due in the next few minutes.
The economic impact is just beginning.
Closing bell overtime, 4 p.m. Eastern, CNBC.
See, that's how
These bills are crazy.
You gotta be willing to flip. The first bounce.
She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy. Even a term policy?
Matter of fact, when it first hit was your sell entry, but there's always a
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit CoventryDirect.com.
It's not really.
You shouldn't have to sacrifice your well-being for your workplace. That was the idea behind the original Veridesk, and it transformed offices all around the world. It proved that when you sit, stand, and move more, you can work happier and healthier.
Wait for it to come back.
So whether you're furnishing a home office or outfitting your home office,
that way you'll only
Very has everything you need.
For the 14.
Our best sellers are on sale at Very.com.
Welcome back. Try again.
Like I said,
those at the forefront of the AI industry have been promising record deflation and a utopian view of this technology for at least the last 7 years. For example, here's what SoftBank CEO Masa Son told me in 2019.
You're not going to make the decision.
Roman citizens, they were so rich that they didn't have to do primitive jobs because they had servants. Did the Roman citizens became all sad? They lost job and they lost things, and did they have a sad life? No, they enjoyed because they got the free wine, free bread, free entertainment in Colosseum.
Buy off the bottom.
It's funny looking back at that. Kate Rooney joins us now. She's got to look forward in part and how AI hasn't kept its inflation of productivity promises, perhaps.
This is what happened.
Well, David, Masa Son is such a prime example of this dynamic. We've heard from tech leaders for years now hyping this deflationary effect of AI and have really promised record productivity as part of all this. So far, none of it is showing up in the data. Instead, AI is causing some near-term inflation and producing very little evidence of any sort of widespread productivity boom. The multi-trillion-dollar spending spree on data centers is one of the biggest factors boosting prices. Latest CPI this morning shows about a 3.5% jump in personal computers and equipment, rising memory cost overall, very big factor there. And then you have software prices up about 21% from a year ago, modest jump sequentially. We spoke to Ronnie Chatterjee, he's the chief economist over at OpenAI now. He does argue that this is a short-term shock since demand right now is so drastically outpacing supply. He did say some of the immediate costs of AI are a lot easier to spot than potential benefits.
I do think that this is one thing we sometimes miss. We think about AI, we think about all the amazing things it can do. For it to impact the economy, it has to be adopted by organizations, and those organizations have to realize value. That's the process that we're in right now, and that's why focusing on enterprise AI is probably the most important thing we can do in terms of understanding AI's impact on the economy.
OpenAI with a new report out this morning addressing that and then in part highlighting this disconnect between some of the biggest users of AI and then everyone else. So the power adopters use it about 8 times more than the median user. That gap is also widening. It was only about double that usage a few months ago. There are some questions over how much more productive AI will make us if it is widely adopted, and in the meantime it is posing a dilemma for the Fed. Kevin Warsh has been a big believer in AI, but the Fed, of course, cannot set rates on potential gains that just haven't shown up yet. Worked on this story with Matt Peterson. You can read a lot more on CNBC.com, guys.
Love stuff from Matt. I think one of the more compelling early examples or case studies, Kate, might be Airbnb. The stock is broken out this year, and when they posted earnings the other day, they said probably the AI, the best thing that's ever happened to the company. We've reduced the time from concept to launch on key initiatives by as much as 60%. I mean, that's the kind of thing you'd want to hear from a lot of companies.
It's a great point. I think Airbnb is a good example, but Carl, I would probably put them in the power user category, where you have these companies that are able to harness AI. They're able to use it really well. I'm sure their employees out here are using it in a big way, but there's this disconnect where the rest of the economy isn't necessarily seeing the gains. I think where you really want to see it are places like healthcare and education, where inflation tends to be really sticky. If they can actually use software, use AI to bring that down. I also spoke to Peter Bookvar when I was reporting this out with Matt. One of the things he talked about was sort of this question of, looking back to the internet, which was probably the other moment you can think of as sort of this big productivity boost from technology. The gains were actually not that eye-popping. Over a 30-year period, it was less than 2%. So there is this open question of, yes, it could be adding to productivity, but is it a step function change? And I think that's still an open question here.
I brought this up a little bit with Kevin Warsh and Sintra in July about whether AI build-out is inflationary or disinflationary or deflationary, and it sounded like he first of all characterizes himself as an AI optimist, and it sounded like in those comments and even in subsequent comments he buys into the disinflation story, and maybe is willing to not think about the inflationary impulse that we're seeing now in terms the build-out as inflation-led monetary policy can help fight because of the disinflationary promise on the other side. It's different than the war, for instance, and the energy.
I think
he made that comparison.
He's also surrounded himself with some serious techno-optimists, including people like Mark Andreessen, who is now on this Fed task force to help talk about and translate some of the AI productivity gains. So no question that he is a believer, I think, of the potential. I wonder about some of the dissenters and people pushing back. Neil Kashkari, I know, had some commentary about this. And if it sets up a bit of more of a debate when it comes to inflation. But it's one of those tricky subjects. I think he's going to have to. He's a believer, but what do the numbers say, and what can he do as a result?
I just think about, David, when we come into work every morning and Jim shows off his Claude-generated notes.
Kramer
how he processes information from 5,000 companies.
That's how you do it. I mean, there's no doubt it is becoming a more important part of some of our workflows.
All of ours, but he's not firing his research assistants, so not disinflationary.
Would he have hired more in absentia? It's hard to say.
I don't know, man. I just want to know when we're getting to that, somebody feeding us grapes or some robot, and we're just sitting back in the Roman baths the way NASA described to me 7.5 years ago. Abundance. There it is, yes.
Kate, thank you. A really provocative piece. Everybody should go online and read it. That's our Kate Rooney. When we come back, former Treasury Secretary Lou is with us in a few moments. We'll talk about some of the stuff this morning, CPI print, the Fed's inflation fright in a few minutes.
Either it's going to continue down or...
Hennion and Walsh was made for people like you. People who've achieved everything by putting in the hours. Who value speaking to the right people at the right time. That's why we answer the phone ourselves. As the more we understand your needs, the more we can help you build the life you want. Because you've earned it. We're Hennion and Walsh, and a human connection. Get in touch today.
Do you feel stuck with an unsafe, outdated bathtub you hate? Skip the weeks and months of messy, costly, unpredictable construction and choose a proven jacuzzi bath remodel in as little as 1 day.
I feel very safe as I'm taking my shower.
Right now, we're waiving all installation costs, plus no interest and no payments for up to 1 year.
I feel safer. I don't have to lift my foot up over a tub anymore.
Choose from custom designs, including my Christina Preferred collection. And you know I've got to talk accessories. I love the handheld shower heads, grab shelves, and custom seats. Plus, a lifetime limited warranty from Jacuzzi. You could be 1 day away from the shower transformation of your dreams. So call now.
Call 1-800-384-1407 to schedule your free in-home consultation with our design experts. We'll give you a quote that's good for a year. We're waiving all installation costs, plus no interest and no payments for up to 1 year. Call 1-800-384-1407 today.
Make the bed safe. With meds that prime your brain for arousal.
I don't know
blood
why.
flow where it counts.
Because we officially closed
And help you last longer in bed.
20 on the 15th.
Regiet's ED meds are personalized to you
and we have
and delivered right to your
82
door.
is
Your best
the buy side on the 15th.
Today
There
at
it goes. There it goes. See?
The impetus for Element was just a recognition that my health was impacted by inadequate electrolytes.
You can't.
There was nothing on the market that met the needs. It tended to be super high in sugar, woefully inadequate in sodium. When I finally did get my electrolytes on point, it was like a light switch was flipped. We've seen this play out across thousands of health journeys. I hope Element can be just as meaningful for me.
This is some real crappy price action.
The FedEx Cup playoffs. Just 3 events and a field that dwindles every week.
They're going to give another buy stick.
Tommy Fleetwood.
This is when trade in the 15 second is no fun when you have
on Golf Channel.
There's no trend. I'm playing too many sticks.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla live from Post 9 at the New York Stock Exchange. Today, inflation cooled last month despite higher oil and gas prices, continued cost pressures, and ongoing geopolitical risks. We'll discuss what it all means for the economy, the Fed's path forward, with the former Treasury Secretary, Jack Lew.
The quantum computing trade, shares of Quantinuum surging following its first earnings release since the IPO. Revenue nearly quadrupling with a new deal with Oracle. We'll break it all down with the CEO this hour.
And Meta back in federal court today, challenged by a coalition of state attorneys general, and the biggest test yet over claims the social media platforms are addictive to children. We'll be all over it.
Also, check out shares of Wendy's today. Busy morning for restaurant stocks. This one jumping on a report out of the FT that Nelson Peltz at Trian is preparing a take private for the chain. Trian is already Wendy's largest shareholder with 16%. Wendy's telling the FT it would, quote, thoroughly review any proposal submitted by Trian consistent with its fiduciary duties. Follows an FT report from May saying Peltz was in talks to raise some funding for a bid. Stock was halted, but has since reopened, as you can see, up gaining about 12%. Let's begin with two tech earnings movers this morning. There's CoreWeave and Supermicro. Our Christina Partsenevelos with more on probably the two biggest stories of the day.
To me a lot.
Yeah, there's actually a few more. There's a wave of earnings driving the chip trade higher this morning. Foxconn overnight in Asia, plus Lumentum, and then you mentioned CoreWeave. There was Nebius this morning and Supermicro, and they all delivered. And it really just lands after a brutal July sell-off. The message was pretty consistent across all of those earnings. You can see them all in the green right now. The world remains short on compute. GPU pricing keeps rising, and order visibility now stretches into 2027 and even 2028. Let's start with CoreWeave, though, because shares are popping 17, almost 18% after its best quarter as a public company. It raised its guidance on revenue, it increased its active power, as well as CapEx. Backlog sits around $104 billion, which is up sequentially. That doesn't even count more than $25 billion in new deals signed in July. What moved the stock is better operating margins as well as guidance. GPU rental prices keep climbing, even a 6-year-old chip like the A100, and then roughly 25%. That with borrowed money and ballooning interest bills is keeping it in a net loss, even as its operating margins did improve to 5%. Then you have Supermicro. Margins came in more than double than the guide, driving a big earnings beat, though revenue landed near the low end. The standout was $60 billion of orders in a single quarter and record backlog. Again, this is an AI server assembler, and they had enterprises upgrading to newer systems, which obviously is strong for demand. One overhang remains the open investigation into its China GPU server shipments. There's been some drama there. But overall, just after a tough July, this earnings stretch gave the AI trade its best argument in weeks. Demand is real, it's still growing, especially with these long-term contracts, and so is the bill for building. Carl?
Yep. All right, Christina, thank you. Never boring in these semi stocks. Let's get more on the market, the tech trade, and how investors should be thinking about this morning's CPI report. Joining us here at Post 9 is Neuberger Berman Private Wealth Managing Director Holly Newman-Croft. Welcome back, Holly. It's good to have you. I mean, the big number was inflation today, in line, still higher than the Fed and most people would.
So did you take that
to see what is your sense on how that's going to ultimately impact equity market and where we go from here?
Yeah, the CPI number came in this morning as expected, met expectations. I think we're off a second quarter earnings that is exceptionally strong on the heels of the Q1 earnings. So Q1, Q2 earnings both up more than 25%, which suggests that the market strength is real and fundamental and not just a story of multiple expansion. We expect to see that continue, but there are a lot of concerns as well as the seasonality effects. So August is historically a very volatile month in the market. September is historically the weakest month in the market. So we're halfway through August. We can expect more volatility. Inflation stays higher than the Fed target of 2%. We have ongoing conflict in the Middle East, which contributes to the price of oil, which directly impacts inflation. We have the midterm election coming up. We had a weaker jobs number. So we think that there is still room for these equity markets to grow. We are expecting increased volatility and keeping our eyes on some areas of concern.
Are you changing allocations at all or recommendations for investors?
You know, our outlook remains the same as the last time I saw you. We continue to be overweight small cap. We continue to be overweight. Yeah, continue to be overweight emerging market equities. You'll remember at the end of the second quarter, we went back to neutral on international developed, specifically Europe, because of their heavy reliance on oil. But I think we really need to focus on the price of oil because that impacts the election. The focus on the election is going to be affordability. Lower income households are tired of paying more at the pump, more at the grocery store. And the president wants to have a successful midterm election. So he's focused on no more military action in the Middle East, trying to impose economic sanctions. There's just a lot happening, and it can almost all filter back to the price of oil.
Yeah. I mean, you talk about volatility. The VIX is below 15 this morning, and there's all this like bull recipe of leverage reset, passive buying's intact, the buyback window's open, right?
Yeah. I mean, we could see more volatility at the end of August, but what we're seeing is volatility, and yet every 2 weeks the market hits a new high. Hit a high on August 7th. We will probably see it hit a high again.
Yeah.
But as we enter the fall, as we get closer to the election, active managers are going to do some window dressing and lock in some returns as we near year end. So we do expect volatility, but it all gets back really to your asset allocation, and your portfolio needs to be able to weather the volatility. And when you look at the market, we think that there is still room to grow. The numbers do not suggest, we're not seeing any signs of an impending recession, downturn, anything like that. So we remain cautiously optimistic and believe that investors should stay the course and stay invested. And when the market goes down, I mean, it's going right back up. So our expectation is that will continue.
What about, I mean, we just heard from Christina, just a normal day in semi-land where we see 20% moves higher or lower off earnings. When your clients say, okay, how exposed do you need to be to the AI build-out trade? Because, I mean, there's probably a lot of FOMO out there.
There's definitely FOMO. And look, by virtue of passive investing, you have a heavy reliance on that trade and the Mag 7, the top 10, whatever. But we are still continuing to see the broadening out, which we really like.
Remember,
11 of 12 sectors reported positive earnings growth last quarter. The only down sector year over year actually was healthcare. And I think 8 of those 10 sectors had double-digit earnings growth. So by virtue of being invested in the index, you have an overexposure to those companies that are really driving the returns. But the concentration risk does remain. Those companies that went up the most when we have a downturn or a reversal, they will go down the most. So you've got to keep an eye on your overall asset allocation and make sure that you're protected on the downside with a healthy exposure to fixed income, which is still attractive, especially for taxable investors, with commodities, which is a hedge against both inflation and geopolitical risk, both of which are very present in today's market.
Looking at gold today, almost to 4,500.
Yeah, don't go buy jewelry. It's too expensive today.
Except for diamonds. Diamonds are plummeting, but gold's up.
Well, if your wife is listening, Carl, she's going to like that statement.
Yeah, nice of you. No, what's the most common question you're getting from your investors these days?
Can the market continue to go up?
Well,
I say yes.
Green,
I say yes. The second question is, why shouldn't I just own the Mag 7 or the top 10? And I show them the chart on a down day of what can happen. It's too risky to be so concentrated. As I said before, this is irreplaceable wealth largely for my clients. So my job is downside protection and responsible growth of their portfolios.
All right. Well, thank you for coming on as always and sharing some of the advice with the viewers. Holly Newman Croft from Neuberger Berman.
Coming up this morning, the CEO of Quantinuum joins us on their first earnings since the June IPO. We'll talk about this new deal with Oracle today.
Plus, more on that blockbuster sale of the LA Lakers to an ownership group, including Bob Iger. David Faber comes back with his latest reporting on that when we come right back.
Wait, that's the thing. If you take those quick moves, it might put you in. You stay quick. But if
you can bet on this and win, you can bet on this and lose, this and lose, this and win, this and lose, this and lose, this, lose, win, lose and lose, win. Even this, lose. Betting isn't investing. Investing is owning. It often rewards patience and discipline over shots in the dark. The long run belongs to those who invest in it. Own your future. Don't bet on it.
Because they were buying.
Introducing Flex Seal Epoxies. Just need our Ultimate Putty to unleash incredible bonding power. Just one small stick of our Ultimate Putty can lift this 4-ton pickup. And when you mix our Extreme Liquid, it virtually welds these pistons together. It has the strength to lift and hold this giant 8-ton semi. It's the ultimate in extreme bonding. Get Flex Seal Epoxy at FlexSealProducts.com.
Lime was founded on a simple but radical idea that people and cities deserve a future where transportation is shared, affordable, and carbon-free. Lime is now the world's largest shared micromobility company. We operate in 230 cities across 29 countries on 5 continents. This is just the beginning, and I have so much confidence that the best days of Lime are ahead for us.
Weeknights. I love themes. They help you craft a portfolio with the wind at their backs, not in your faces. The kind of stocks that you can confidently buy more of when they go down.
Mad Money, weeknight 6 Eastern, and streaming on CNBC+.
This week on USA, the temperature rises during rivals.
Wait till it's staying out. Okay, I just got a buy target. I don't know if they'll get there, but I got a buy target at 908. The buy signal was down at 11:11.
You shouldn't have to sacrifice your well-being for your workplace. That was the idea behind the original Veridesk, and it transformed offices all around the world. It proved that when you sit, stand, and move more, you can work happier and healthier.
This one right here, if it goes.
So whether you're furnishing a whole office or outfitting your home office, Very has everything you need. Our best sellers are on sale at Very.com.
One 15-minute candle left.
This is the story of the one who manages the warehouse upkeep to help minimize downtime. And he relies on Grainger for the high-quality products he needs to find the right solution. Because when it comes to maintaining his facility like a well-oiled machine, there's only one partner he knows can cut it. Nearly 1.5 million products and fast, dependable delivery. Call, click Grainger.com or just stop by. Grainger, for the ones who get it done.
Welcome back. Take a look at shares of Quantinuum climbing this morning on the back of the company's first public results, beating on the top line, and announcing this new multi-year partnership to integrate quantum computing hardware into one of Oracle's U.S. data centers. Joining us this morning in a first on CNBC interview is Quantinuum CEO Raj Hazra. Raj, welcome. It's good to have you. Congratulations on the first print and this appearance here. I want to talk about the quarter, but everybody wants to know about the Oracle deal, what they're getting, what it means for you. Can you describe it?
Sure. Thank you for having me here. It's wonderful to be able to speak to you as a public company. Now,
you could make money.
The Oracle deal that you talked about is essentially part of what we've described as the trends in quantum computing. Quantum computing is not going to be used in isolation. All the great use cases that we see across industries, drug discovery, pharma, chemicals, chemistry, optimization, is only going to happen when you put quantum computing and high-performance computing and AI together. The Oracle deal represents a wonderful opportunity, industry first, to do that. What we do is we put the world's most accurate quantum computer called Helios into an Oracle data center. But it's not just the physical integration, it's the integration at the software levels as well, which makes that quantum computer a first-class citizen of data services, compute, network, storage, identity, security, and gives developers and customers the ability to use the quantum computer much more easily and extensively than they would have otherwise been able to do. It's kind of the way we stoke usage, demand, and adoption of quantum computing, partnering with one of the leaders in AI.
Yeah, no, it's, I mean, we've been talking about it sort of in, I guess in theory, for so long. It's interesting to see the rubber start to hit the road. How quickly can you follow on with other deals of similar size?
Well, this we see the tip of the iceberg and the tip of the flywheel getting going, particularly as we build out our roadmap to Sol and Apollo. I mean, these machines are each up to 1 trillion times more capable. The capability of the quantum computer goes up, and integrations like this in the cloud service providers gives us the ability to then reach that customer base, reach and deliver on these hybrid workflows in a much more, what I would say, accelerated fashion and a much deeper fashion. So watch the space, more to come.
Can you just give us some examples about some of the use cases that companies will be able to use with your new Sol computer, for instance?
Absolutely. Let's just take one, which is in pharma. You know, in pharma, it is a complex process to discover new molecules, understand their behavior, test them, and today AI is being used to intelligently look through multiple choices and get to the optimal choices faster and spending less money. Quantum computing is an essential way to actually make that discovery process go faster and be more accurate. So how do you understand which molecules to proceed with down into the wet lab and actually eventually into testing? Quantum simulations along with AI allow you to do that much more efficiently and, most importantly, more accurately than just classical computing alone. And that's one of the many use cases where quantum simulation training AI gives rise to value creation that you couldn't do with either of them.
No, a game changer potentially, I guess, for drug discovery.
Absolutely.
What about other industries?
The other industries in, not just focusing on chemistry, but look at optimizational instance. The tremendous parallel computational power of quantum computing, along with the very, very low energy usage, makes it an amazing tool to be used for very complex optimization problems, where today classical techniques have to look through a lot of data, and quantum can be used to restructure that data and make that search for patterns, whether it's a fraud detection or a portfolio optimization or a supply chain problem, much more efficient and eventually even more accurate.
Would you argue, Raj, that you're in the middle of an investment cycle? And if so, when does revenue and margin start to ramp?
Yeah, we're investing to build what we call the world's most powerful, fully fault-tolerant quantum computers. We're investing in building the hardware. We're investing in building the supply chain. We're investing in building the ecosystem, the developer ecosystem that will take charge or create value from this. And we are investing in building these applications that I was describing. It is an investment cycle. But the reason we're doing that is because we see the tremendous potential through the work we're doing with customers. This isn't about a consultant's report or just a view of the industry. We see this on a daily basis as we work with companies who are looking to use this to accelerate their discovery journey and their businesses. So it's very real for us.
And just on the Oracle deal again, just thinking about how these hyperscalers are building data centers and then incorporating quantum. Are others doing this? Is Amazon doing this?
Ready to go back.
Yeah, there's examples of Amazon and other companies who will offer what's called a quantum backend, and that exists, and we participated in one of those in the past. The unique thing about the Oracle deal is the co-design and the co-development of that data center to actually not just use the quantum computer, but actually integrate the quantum computer into the workflow in a seamless manner. Look, customers they like the computational power of diverse computational things. They hate managing that complexity, and that's what this deep integration allows. Just like you had CPUs, then you got GPUs, but all in one kind of environment. Now you get CPUs, GPUs, and QPUs in that environment
you're
using
letting
tools
it
that
go
you're
to the
familiar with,
bottom.
and that just keeps that
You
software
don't
flywheel
care.
going
The
faster.
noise is really.
Well, while we're on the parallels to AI, I'm just a clarification. You know, you've been talking about Helios, and now you're moving to Sol, and then I guess Apollo is the platform. Is it like? I mean, how should we think about it? Is it like the new language, the new models? Every time they come up with an update, it's just faster, better technology, which becomes the standard?
The other side.
Absolutely. Each of these machines represent fundamental increases in computational power, and they unlock different, use cases at different scales. So this is like, taking, for instance, on Helios, if we were doing molecular characterization, this takes Sol, and then Apollo takes you to much more complex molecules, faster families of molecules. So these are game-changing in each of the generations, not just evolution.
That's usually one of my favorite.
Raj, fascinating. Stock's obviously responding to what may be a new chapter here. Please come back.
For me.
I will be back, and thank you again for having me here today.
I don't know.
Raj Hazra over at Continuum.
For some reason,
All right, still ahead. Much more on this morning's inflation data. Former Treasury Secretary Jack Lew joins us, plus his take on the recent Japanese yen intervention.
Jury selection begins today in a California case against Meta, alleging harm to children. We'll bring you details when we come right back.
A specific trade. We're working our way from the top, right? We fell in. You look how long it took us to break them.
Well, there's a lot of infection in there, Timmy. You're doing really well.
Gonna fly. That's what I'm saying. How
Are you feeling anything?
There is important.
Coffee.
It was a struggle all the way to the other.
I don't understand, but this is going very well. Coffee.
But like I said, if you don't get out of that. See, we both could have made money. The one who took it down took the bounce.
Cell therapy is transforming how we treat many diseases. Meet Fibrobiologics, NASDAQ FBLG, 270 patents issued and pending, leveraging a diverse library of commercial use fibroblast cells that naturally fight disease and repair tissue. Fibrobiologics is developing a new and innovative cell therapy platform to treat chronic diseases, addressing multi-billion-dollar markets, now advancing clinical trials for wound care and multiple sclerosis. Fibrobiologics, symbol FBLG.
Universal Coin and Bullion is my partner for gold, silver, rare coins, and precious metal IRAs. They're offering callers 2 1-ounce American Silver Eagles and a 1/10 ounce American Gold Eagle at actual dealer cost.
Life insurance is a wonderful asset, but what happens when you no longer need it, or you can't afford it any longer? Meet Tom and Susan. They chose to sell their policy for $200,000 cash. Now they're sailing through retirement. If you own a life insurance policy of $100,000 or more, you may be able to sell it for cash. Get an instant estimate at ovidlife.com or scan the QR code on your screen. Or call 1-800-502-0100. That's 1-800-502-0100.
Are you at home wondering if your retirement plan is really working for your long-term goals? Maybe it's time to find out. At Fisher Investments, we're a full-time fiduciary. Our goal is to grow your wealth and help you retire comfortably. We also have a transparent fee, structured so we do better when you do better. If your portfolio is $1 million or more, we have up-to-date guidance you need now.
$300 shy
for your
of
free Smart
1,000.
Retirement Action Kit. 3 essential guides to help bring confidence and clarity to your retirement planning.
1-800-340-8205.
Yesterday I had.
We'll show you ways to minimize excessive fees so more of your money stays invested and working for you.
Don't miss your free Smart Retirement Action Kit.
1-800-340-8205.
Did you grab that bottom?
A second opinion could make all the difference
You're
for your
in,
comfortable
right?
retirement.
Call or scan for your free Smart Retirement Action Kit today.
Are you in the buy?
1-800-340-8205.
Itch, scratch, must not itch.
Stop the itch sanity with Cortisone 10 for bug bites, poison ivy, and other itches. It works
But the
fast and
bottom
lasts
is
for
your
hours.
stop.
Cortisone 10.
As
And for
long
itch
as you
relief
don't
that
break
cools
the-
on contact,
as
try
long
our
as you
new
don't
bug
break
bite
the
release
bottom,
stick
you're
today.
still in the trade.
NVIDIA working with some of the biggest names on Wall Street to secure financing for its
You would have been
customers.
stopped out now, but you had a couple of
independent long-term
no, but you had a couple of attempts at profit off the 14.
You're starting to see asset-based financing
saying?
You didn't have
Against
to wait
this infrastructure.
till it came back
The first
down.
few
You
years,
know
there's no income.
when it
Once
hit
these
the
are
bottom,
yield-based products,
you know
then
it's going
easier to sell them in the public markets.
We need to make
And
sure
that
that you're broadening participation in AI.
And the bottom is still holding, by the way. It wouldn't have took out
Welcome
your
back.
stop
Jury
loss.
selection beginning today in a California case against Meta, alleging harm to children. Julia Borston joins us with more. Julia.
But how
Sarah,
long are
this
you
federal
holding
trial
it? You
beginning
got
in
it off the
Oakland with
bottom.
opening
You
statements
would have
next
been
Tuesday
up
is the
big.
biggest
Why
test
would you
yet
give
of
all
youth
that
safety
you would never
allegations
had to
against
dealt
Meta.
with that.
California, Colorado, Kentucky, and New Jersey allege that Meta designed
For
its
profit?
platforms to addict users and
Oh, okay.
misled
I
them
thought you
about
said
their safety.
I
The
thought you
trial is
said you
also
closed
addressing
it when
claims
it
by
came
29
back
states
down.
that Meta
You-
violated the Children's Online Privacy Protection Act by collecting and
Wait,
using children's
yeah,
data.
oh, that's what I'm
Meta
saying.
said in a
That's your
filing
level.
that the
When you
damages
get
could be as
bounty,
high as
your first level
$1.4
is the
trillion,
14, the
which is
second
close to its market
is
cap.
34.
And just as
So,
potentially damaging, the
when
states
you're
are asking for
countering,
big
you're
changes to
looking to
Meta's
counter
algorithm,
on those.
including
If you're
eliminating features such as
trend-trading,
infinite
you're
scroll and
looking to enter
notifications,
on those.
asking
You
the
get what I'm
court to
saying?
make Meta prioritize content focused on
Depending on which
well-being instead of
position
engagement,
you
to implement age restrictions and time limits for young users. Meta saying, quote, we strongly disagree with these allegations and are confident the evidence will show our long-standing commitment to supporting young people. We've listened to parents, worked with experts in law enforcement, and conducted in-depth research to understand the issues that matter most. Going on to say we're proud of the progress we've made and we're always working to do better.
34,
Now, Meta CEO Mark Zuckerberg and Instagram head Adam Mosseri are both expected to testify in this trial that could last about 7 weeks. It's presided over by the same judge who ruled in favor of OpenAI and Sam Altman in Elon Musk's lawsuit against that company. Carl?
Yeah, shares still deeply in the red year on year, down about 30%. Julia, thanks. Let's get a news update this morning with Pippa Stevens. Hey, Pippa.
Hey, Carl. The Trump administration is reportedly spending at least $900 million on construction projects on the White House grounds, which would be primarily covered by taxpayers. That's according to the Washington Post, citing records. The Post reports instead of getting the money directly from Congress, the administration is collecting funds from other federal agencies and private donors and putting it in an account that's traditionally used for routine maintenance of the grounds. Last week, a federal appeals court ordered construction to be halted on the East Wing ballroom, saying only Congress could approve it.
I might have
Sterling
tried to get a
Graham, the
little
sister
too
of late
greedy on
Senator
that.
Lindsey
Okay,
Graham, who was appointed to serve out his term, advanced to a runoff last night in the South Carolina Senate primary. She will face Congressman Ralph Norman on August 25th. And Google announced its Gemini AI app is surging, topping 1 billion monthly active users and keeping pace with ChatGPT, which hit 1 billion users in June. Google says the milestone makes it the fastest growing product in Google history. Sarah, back to you.
$70.
Okay, thank
back
you.
$300
Pippa Stevens still
profit.
ahead. Former Treasury Secretary Jack Lew
That
joins us. His
bottom
take on
held.
the morning's inflation data, his reaction to the historic yen intervention, and much more.
Google launching some new Pixel
gave me
phones today,
so much
although
chance
they're going to be a
to
little
take
more
a decent
expensive. We'll talk
profit.
about how that ramps up the competition with Apple over AI
Okay, I'm
integration
back
and
to
consumer
200
devices,
again.
and we're back in a minute.
Yeah, it's okay. All right, 400, hit it, target hit, hit, $500.
We're advocates.
That's
which means
how it
wherever you're
goes,
coming
bro.
from,
It's never
we're right
easy.
there with you.
You
Wherever
have to
you're going,
trust the
we'll get you
levels.
there.
It's
Sierra,
not easy.
CPAs,
You can't
consultants,
really
and wealth
teach
advisors.
this. You
I
can
wanted to
tell
have
people,
control
but
over drinking
in
instead of
real
alcohol having
action,
control
I
over
mean,
me. I started with
how
Our
much
Health about a
times
year
I coulda
ago.
gave
Put
up-
the brakes on that I had been
gave
looking
up the
for. I can
profit.
drink less and say
Oh my
no, and it's the
gosh.
best feeling
I
in the
worked
world.
hard
Text
for that
CNBC
$500.
to 710-710 to learn
Okay, I just hit the 1,000 for the day.
If you're on
It took me
Medicare
an hour and a half.
and you get this,
All right,
you
dude.
could end up with
Go
this.
get you some sleep.
Unexpected out-of-pocket
But
costs.
that's how it happens, bro.
Which for
That
those on
you have to
Medicare or
trust.
soon to
It's
be
the
is a
level,
good reason
the
to take charge
14,
of your
the
health care.
34, and the upper
So consider
level,
this.
and your 200.
An AARP
And you
Medicare
have to
supplement
have,
insurance
you have
plan
to
from
have
United
them
Healthcare.
working together
Why?
in a way
Because Medicare
that
alone doesn't
you
pay for
can
everything.
sequence, because it's
And
to
what it doesn't pay
just
for,
think,
like deductibles and copays,
to be
could
able
really
to
add
take it
up.
from one
Even
side
thousands
to
of
the
dollars a
other
year.
side, if you watch the candle,
Medicare
it's
supplement
hard.
plans help
Even
by
I
paying some of what
almost gave
Medicare
up the
doesn't,
profit there.
and
And it
making your
shook me off
out-of-pocket
and went
costs
to
a
the
lot more
other
predictable.
side.
Call United Healthcare today and ask for your free decision guide.
You have to trust the play.
Learn more about plan options and rates to fit your needs.
It's not going to work out. It never looks like it's this. You're doing the
Greater
play.
freedom.
Just trust the play.
You'll love that Medicare supplement plans have no networks and no referrals needed. See any doctor, any specialist, anywhere in the U.S., as long as they accept Medicare patients. These types of plans also give you more flexibility when traveling in the U.S. Your plan goes with you, anywhere you go in the country. Even better, Medicare supplement plans with the AARP name are plans endorsed by AARP. Call United Healthcare today for your free decision guide. So, if you're on Medicare and want less out-of-pocket costs and more peace of mind, consider adding this, an AARP Medicare supplement plan. Take charge of your healthcare today. Just use this or this to call United Healthcare about an AARP Medicare supplement plan.
Hey Siri, call Ange.
At GovX.com, service wears many uniforms. Military, first responders,
Hey
government
Siri,
workers.
call Angela.
Your service should be rewarded. Unlock special savings at GovX.com on over 2,000 top brands. Join for free today at GovX.com.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash, even a term policy. Visit CoventryDirect.com to find out what your policy could be worth. Or call 800-419-2500. That's 800-419-2500. Coventry Direct, redefining insurance.
Hair can be complicated, but your hair care shouldn't be. At Kitsch, we listened to our customers, what they want, and that's what we gave them. Rich lather, real results, with no luxury markup. Kitsch, hair care without compromise.
Breaking news here on Truth Social. Megan Casella with the details. Megan. Sarah, the president, some of his top aides, and the White House are now being sued over the decision to sell Truth Social's API to Wall Street firms to allow Wall Street firms to get some information on Truth Social fractionally faster than the general public. So this is a new lawsuit filed by the Intercept Media, the Freedom of the Press Foundation, filed in the Southern District of New York today. And they argue that this scheme, they say, is extraordinary, corrupt, and unconstitutional. They say it's profoundly corrupt because the president, who is the majority shareholder in Truth Social, says that he gains financially by giving market-moving government information to those who are willing and able to pay his personal company. They also argue that it's unconstitutional under both the First Amendment and the Fifth Amendment, and they're asking the judge to stop this sale. They say that the fact that public companies could gain this market-moving information fractionally faster, that's not fair under the Constitution. Now, Truth API has been asked about this. They were saying on earnings calls as recently as last week that they do so far have 10 paying customers. They've called criticism of this misinformed and said that the sale of commercial APIs is a well-established business practice, so they have the room to do this, guys. We'll see how the judge responds. For now, though, the White House getting sued over it.
Yeah, shares have had a rough couple of days on the losses related to some of the losses on those digital assets. Megan, thank you. Megan Casella. Meantime, the LA Lakers getting sold to a group led by Josh Kushner and Bob Iger. Our David Faber brought us that a few moments ago. Has done a little more work on it.
Yeah, I want to provide a little more clarity around it as well, given our last conversation. It is valuing the LA Lakers franchise, of course, at some $12.5 billion. That is according to a source reporting from CNBC. $12.5 billion, of course, is $2.5 billion above where the control stake in the Lakers traded only about a year ago, when Mark Walter, also the owner of the Los Angeles Dodgers baseball team, the Chelsea football team as well, took control of the Lakers. In the latest change in control, it is Josh Kushner and Bob Iger who will now, and through Kushner's Thrive as well, will now be the control stake holders. But the Buss family will continue, according to our reporting, own its 49%. They held it when Mr. Walter briefly had that control stake, and they will continue to hold that 49%. Obviously, they are beneficiaries of what is now a valuation some 20+% higher in less than a year for that same franchise. So, we were talking earlier, Sarah, about, well, how do you finance this exactly? And we are talking now probably about $6+ billion, not an insignificant sum, that conceivably is being in part provided by funds overseen by Mr. Kushner, and still sort of trying to understand exactly where else money may be coming from for that. In addition, obviously, to what would be a contribution, I would assume personally, from both Kushner and Iger. Iger, obviously, a great face of ownership for the franchise, one would imagine, given his long history in Los Angeles, and obviously an incredibly articulate spokesman for Disney for so long as its longtime leader, not to mention, of course, a huge basketball fan, although I thought he was a Knicks fan. Certainly think he was for many years. I remember talking to him about it. He has not returned my calls to try to get a little more clarity around this. And then a very interesting connection certainly is this probe into Mark Walter that is ongoing and has been reported by the Wall Street Journal, amongst others, involving related party transactions, or what would appear to have been a failure to report what was a related party transaction, namely in loans from Walter-controlled insurance companies to help support his purchase of the control stake in the Lakers and the Dodgers. Now, a great deal of opacity here around exactly how those were financed, what any loans may have actually been financing, his equity stake or not, but certainly this transaction, it's hard to imagine, given the timing, is not in some way related to that. As he puts a statement out and simply says that owning the Lakers was one of the great honors of his life, an extraordinary investment, true, given the return in a very short amount of time. And he says he'll carry with him the community, the fans, and as well says he's grateful to Jeannie Buss and the Buss family. Again, they will continue to own 49% of the Lakers.
He also owns part of the Cadillac F1 team. I mean, they have so many teams through this TWG Global, Walter.
Yes, he does.
Yeah.
Yes, he does. And again, we've referenced this probe. I don't have reporting my own on. I'm relying on others, obviously, but continue to look at whether there was a failure to report related party transactions to the insurance regulators. But conceivably, those loans or whatever they might have been will now be made either taken off the books or, I don't know, or perhaps transferred to the new ownership group. But regardless, they will not be related party any longer.
Yeah, Thrive Eternal that's the permanent capital fund, basically, from Kushner under Thrive, that also invests in the San Francisco Giants. So this is, the next move, I guess, for both of them. I'm told Bob will have more of a hands-on role here in the Lakers.
One would imagine that would be the case. Again, with Iger, certainly his management experience, not to mention, of course,
probably looking for something to do,
great face
right?
for the franchise. Yeah, I think he's been pretty busy, but it's not bad. And a huge basketball fan, as I well know as well. So we should all be so lucky in our semi-retirement. Now I'm going to go on and
own an NBA.
Have a control stake in the Lakers.
All right, David, thank you. Keep us posted on what else you learn. Meantime, other big story this morning: CPI inflation comes in line with expectations, though remaining above the Fed's 2% range. Let's bring in former Treasury Secretary Jack Lew with his reaction. He's also the former U.S. ambassador to Israel. We've got a lot to get to with you, Secretary Lew. Thank you for joining us. And any big concerns that you have about the direction of inflation from here, now that we're starting to see the pressure come down?
Good to see you, Sarah. Today's CPI data was pretty much along the lines of what was expected internally. There were some things that were moving around. But I think, it paints a picture that's very challenging in terms of the future direction, because it shows that it's still going to take a good while to get down to the 2%. And just a few days ago, we saw a jobs report that showed a weakening economy. My expectation would be that this gives a lot of room to stand pat for a bit, but there's going to be a lot of attention on whether or not the Fed sticks to the importance of getting to the 2% target. The new Fed chair, I think, has tried very hard to make it clear that is a priority of his. But ultimately, balancing the kind of trade-off between worrying about a weakening jobs market and worrying about inflation is going to be a hard decision. I wouldn't expect a move right away. I think that if I were there, I would be waiting for some more data, even tomorrow when the PPE data comes out.
I was thinking of you and other former Treasury secretaries when we learned of the Japanese yen intervention that the U.S. participated in alongside Japan, because it was pretty unusual that we did that. I mean, it's happened before, but not in a really long time. Coordinated intervention to stop the yen from getting too weak. Look, it doesn't appear to be working that well. At least half of those, half of it has come back. What do you make of that? Was that the right move for the Treasury to do?
Well, it was an unusual move. I think it was motivated in large part out of a concern that Japan would potentially be selling dollar-denominated securities and having Treasury bonds kind of flow into the market at a time when the federal government's borrowing a great deal was something that there was good reason to want to at least avoid. I think that the challenge, and we don't know the details, is the extent to which there were understandings about what the ongoing policy in Japan would be, and whether there were conversations with other governments, other treasuries, other monetary authorities. When there was the Fukushima disaster, there was a coordinated global intervention to stabilize the yen. There have been cases where intervening with another country in a cooperative way actually can serve both interests. I think the fact that the benefit has pretty much half run off in a very short period of time suggests that without some action by Japan on its own policy, any benefit would be short-lived. And it was interesting that the transaction was done in euros, not in dollars, to try to keep it out of having an impact on U.S. Treasury market.
Yeah, then there was the added complication, if you believe the FT, that the ECB was blindsided by that, and there might have been some erosion in, I don't know, relations between our central bank, or at least our Treasury, and them. Jack, do you believe that?
So, look, I think moves like this made in a coordinated way tend to be more effective. I don't know the extent to which there was coordination here. I think there's been a pattern of interventions by Treasury that suggest a greater willingness to use the Exchange Stabilization Fund. I think it raised a lot of questions when that intervention was done with Argentina. This is a very different case. The first in Argentina, it kind of had all kinds of issues about whether or not it was to prop up the government or for U.S. economic interests. This one, there were legitimate arguments that there were U.S. economic interests, but when you look at the two together, it does raise questions about how the U.S. is using this ability. One of the things that I think is little understood is how limited the Treasury's authority here is. When I last checked, there's about $40 billion of liquid assets and another 200 in encumbered assets. Really, they're the IMF special drawing right holdings. So it's not a huge amount of firepower, and it has to be used very carefully.
I guess why? Like, what is the risk? It's not. I mean, it's not using taxpayer funds directly, right? And the idea that, that it would prevent. I think they're our largest foreign debt holder now from potentially having to sell treasuries to do more. Feels very prudent.
Well, first of all, there's the need to have assets at your disposal when you need them. If there's a true financial crisis, the Exchange Stabilization Fund is really important. It's what was used in the 1990s during the peso crisis. So there's the question of just conserving the resource. Secondly, there's a question of potential loss, and you say it doesn't affect the taxpayer, but if we were to have lost what we had at risk when we did a swap with Argentina, it would have shown up as a loss to the Exchange Stabilization Fund. It turned out not to do that. We were able to exit without the loss, but it was a very risky move. This one is a little different. I'm sympathetic to the desire to avoid external pressures distorting U.S. Treasury markets. I think the question of coordination, the question of sustainability, they're also important.
Meantime, Jack, there's a lot of pieces being written about Besson's 333 hopes 3% deficit to GDP is clearly not happening. We're almost double that. 3% economic growth, we're doing 1.5. Oil production missing on that count. And then he's getting a little more strident, criticizing journal reporters on social media posts. I just wonder what you make of the tone coming out of Treasury right now.
You know, look, the tone is a little different than anything we've heard in recent years. It's not a tone that I think is the right tone for Treasury. Treasury should be above politics to the extent that you can be while you're a policy agency of the president. The respect and trust that the world have in the Treasury is a big part of our ability to have an impact economically around the world. So I would be a little bit more constrained in my rhetoric. You know, I think that the language and the policies with regard to Iran just don't add up. I mean, we're hearing Treasury talk about Iran caving to pressure, but there's no evidence of that. In fact, the evidence is that Iran feels emboldened by the fact that the United States has used its economic tools and then, kind of pulled back when Iran responded by deploying its ability to close the Strait of Hormuz. I think the United States is in a vulnerable position right now where we made very strident moves and then couldn't absorb the impact of the response. That makes it harder to negotiate, but it also weakens our credibility. So I think it's important to use these tools of economic statecraft with great care.
Finally, I've really been wanting to ask you, Jack, how you feel about the socialist takeover of your party. I know that we saw an upset yesterday in Wisconsin for the Democrat governor, but I mean, otherwise, there's been such momentum. And I do wonder if you see, for instance, El-Sayed win in Michigan as a turning point. And how you're making sense of it.
I don't see it as a turning point. I think you've seen through this primary season mixed results. Even in New York, which I watched obviously very closely as a New Yorker, there's a lot of attention on the congressional primaries that went to progressives, much less attention on the Hudson Valley seat that went to a moderate that could be a flip, and the East Side primary that went to a moderate. I think yesterday was another indication that there's a division and a bit of a debate going on about the Democratic Party. I don't think it's any secret that my comfort level is with the center of the party. Though when I say that, I'm sympathetic to many of the policy concerns that are expressed by progressives. I don't think the mode of splitting the party is going to be a constructive one. So I hope there's an ability to heal, but some wounds are harder to heal than others, and we will have to see.
Although Andy Ogles lost the primary in Tennessee 05, I mean, this is kind of like how primaries go.
Yeah, and there's also in each primary question of the individual and personality. I think it's hard to draw national trends. The fact that last week the Michigan vote was really very close and that yesterday the Wisconsin vote was as thin as a margin can be, it shows that this is not a decided question. And I think if Democrats are going to win in a national election, if they're going to win the Senate, it's going to require people who need to have some comfort that the center will hold, finding a place to call home. So we'll have to see where the rest of the primary season goes and how the victors in the primaries rearrange their campaigns as they approach very difficult general elections.
All right, we're going to have to do a whole nother segment on this and some of the economic ideas that these guys are floating. But for now, it's good to get your take on it, as always. Thank you.
Good to be with you.
Jack Lew, former Treasury Secretary, former President, Chief of Staff, former Ambassador to Israel.
Take a look at some restaurant stocks. Cava and Brinker with some impressive comps. We'll talk about what's driving shares of both of those companies higher this morning, and we're back in a minute.
The next generation of ETF investing is here. Join RedChip's exclusive virtual ETF conference on August 19th from 9:30 to 5 p.m. Eastern. Hear directly from thought leaders and CEOs behind some of today's most innovative exchange-traded funds as they discuss emerging investment strategies, market trends, and opportunities shaping the future of ETF investing. August 19th, 9:30 a.m. to 5 p.m. Eastern. Register now at redchip.com.
I'm Boomer Esiason. My mom died from cancer. She was only 37 years old. And that's why having life insurance is so important to me. Ethos lets you get life insurance in minutes, 100% online, no medical exam.
Check your price today at ethos.com.
You've put up with your old shower for too long. It's outdated, unsafe, and it's time to replace it. But why struggle with a lengthy shower remodel when Jacuzzi can do it in just one day? And there's no need to break a sweat or your budget.
Right now, we're waiving all installation costs, plus offering 0 interest and 0 payments for up to 1 year.
So you can finally convert your old bath to a safer, easy entry shower, complete with a custom seat, grab bars, and slip-resistant floor installed in 1 day.
My overall experience with Jacuzzi has been wonderful. Everything was customized to the way I wanted it for the price that I wanted to pay.
I've had a great experience from start to finish.
Don't take matters into your own hands. Do it the smart way. Give Jacuzzi Bath Remodel a call.
There are only weeks remaining during our limited time offer. We're waiving all installation costs and offering no interest and no payments for up to 1 year. Go to jacuzzibathremodel.com or call 800-632-6799.
You had it, then ED took it. Take it back with Rougiette Ready, the 3-in-1 ED med that's up to 3 times faster than pills. Works in the brain and the body. Can start working fast and last up to 36 hours. Personalized to you, delivered to your door. Make your 20s jealous with Rougiette Ready. Get started today at Rougiette.com.
No application fee if you apply by September 1st at University of Maryland Global Campus, offering online and hybrid courses and lifetime career services. Learn about our more than 100 online degrees and certificates at umgc.edu.
For a lot of people, debt doesn't come from living large. It comes from simply living. At National Debt Relief, we'll put together a plan to get you back on track. And step by step, the weight will start to lift. We've helped over 1 million customers break free from debt. Life throws curveballs, but with National Debt Relief, you've got a powerful team on your side. Call or visit GoNDR.com to get started.
Don't miss a members-only event.
Get invested. Join the club.
I really enjoy the monthly meetings. We go through the club portfolio. It's really helpful.
Join the CNBC Investing Club to access Jim's monthly meeting. Go to cnbc.com/monthly meeting.
August is Golf Pass Members Month, and we're celebrating with exclusive rewards, bonus points, and special perks. Not a member? This month only, Golf Pass points are worth double when you use them toward a Golf Pass Plus annual membership. Join today.
Welcome back. Cava and Brinker International jumping after earnings. Brandon Gomez has his tails. Morning, Brandon.
Hey, good morning, Carl. Cava reported a Q2 beat. Top takeaway there, though, was the 9% pop in same-store sales, the second straight quarter of 9% growth. Now, CEO Brett Schulman on the call last night saying exiting Q2, the company saw sales dip from Cyclospora's industry-wide impact, but that started to rebound recently, giving the company confidence to maintain its annual guidance. Now, the stock really popped last night when the CFO said there is nothing in today's trends to indicate that the company would land at the lower end of their guidance range. She also said the company is seeing significant strength in the lower median household income markets and that they're actually outperforming better than all of the company's other channels. And then you have Brinker International this morning higher. The Chili's parent reported in-line revenue of $1.54 billion, a slight miss on EPS. The biggest driver once again was Chili's, with same-store sales jumping 5.6%, making the brand's 5th consecutive year of same-store sales growth. Maggiano's came in weaker, with comp sales falling 2.5%. Now, the company said food and beverage costs at both chains were negatively impacted by higher beef costs and temporary increase in produce costs. But investors seem to be looking ahead. Brinker gave 2027 guidance, adjusted EPS between $12.60 and $13.40 a share, with revenue between $6.15 and $6.27 billion. The company also increased repurchase authorization to aggregate of $750 million. Now, I also know you talked about Wendy's earlier this morning as well. Reports of a take-private bid from Nelson Peltz and Trian, which hold a significant stake in the company. Still awaiting a response from Wendy's. I did reach out, but Trian did respond saying that they declined to comment on the FT's reporting. We know the company trying to do a turnaround there, so I'll keep updates coming to you as I get them. Guys, Sarah?
Okay, that was a lot. Thank you, Brandon. Brandon Gomez. Still ahead, Google launching a new Pixel lineup today, showcasing AI capabilities. How that sets the bar for Apple's hardware refresh in September. We'll be right back.
Hey, small business owners, pickleball is kind of like bookkeeping and accounting, right? Lots of strategy, lots of effort, and if you don't have the right partner, you just won't win. It's time to team up with a winning partner. Call Zendu, and let's get that win today. Zendu, the official bookkeeper and accountant for small businesses.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
So we called Coventry Direct.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash. Even a term policy. Call Coventry Direct to find out if you can sell your policy.
It couldn't have been easier to sell our policy.
Coventry has delivered more than $6 billion to policy owners for their policies.
And it only took one phone call to get started.
Don't sell or let your policy lapse before calling Coventry Direct to find out what it's worth. Visit CoventryDirect.com. Call 800-234-2600. That's 800-234-2600. Coventry Direct. Redefining insurance.
When I started Walton Goggins Goggle Glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
Welcome to Closing Bell Overtime.
Get the essential post-market edge, after-hours action, and opportunities.
Big earnings, all due in the next few minutes.
The economic impact is just beginning.
Closing Bell Overtime, 4 p.m. Eastern, CNBC.
I like winning on the field, but it's even more fun winning on Deal Dash.
Lori won $2,000 Tiffany earrings for just $1, and Joseph won an iPad for just $6. There's millions of fast auctions. So try today at DealDash.com for $50 of free credit and your first win guaranteed.
Bathfitter didn't just fix the bathroom. We engineered a revolution. The PermaFit system, custom built to the millimeter, delivering the ultimate watertight solution. Bathfitter, more than a renovation, a revolution.
We started Row with a simple idea: create supplements that actually do what they say. I spent years in manufacturing, learning how these formulas are made, what works and what doesn't. Every product we make is built around one thing: absorption. We use liposomal delivery to help your body actually use what you're taking. That's the whole game. You're not guessing, you're not hoping, you're feeling the difference. That's Row. Built to work, built with purpose.
Tech Check is sponsored by Comcast Business, powering possibilities.
Welcome back. Google launching a new Pixel lineup today. Mackenzie Sagalos has the details. Mackenzie, what do we expect?
Hey, good morning, Sarah. So Google is launching the Pixel 11 and a new Pixel 11 Pro Fold this morning, built around its biggest push yet to make Gemini the way that you operate your phone. Now, Gemini Intelligence can understand what you're doing, connect information across apps, and then take actions for you, really moving closer to this autonomous agent sitting on top of the operating system. And Google gets to show that off just weeks before Apple rolls out its rebuilt Siri, powered by Google's Gemini models. I asked Devices chief Rick Osterloh in an exclusive interview whether Gemini Intelligence is essentially a preview of what Siri AI will offer.
I think obviously Pixel and iPhone are
going in very different directions. It's always been at the forefront of Pixel's product strategy to lead with new technologies, and in particular with Gemini and AI. And so, we think we've been able to go really far in deeply integrating that into the user experience. All these things are unique to Android and Gemini Intelligence. So I think these are things you're going to want to get a Pixel or an Android phone to try to experience.
And the new Pixel lineup is also more expensive, and Osterloh says that the memory shortage could push prices even higher.
There's quite clearly a shortage of memory, both RAM memory and flash memory, both. What's happening in the near term, I think, is everyone's needing to raise their prices. We've also discussed that we will need to raise ours like all the other.
Bet with a much bigger installed base. Guys?
Mac, I guess the question will be after Tim Cook already talked about the difficult decisions when it comes to pricing in the face of those memory price pressures, sort of which is more competitive, where margins come in, what the consumer's willing to withstand?
And that's something that came up when I spoke to the Google Devices chief yesterday, Rick Osterloh. They actually took down their base RAM from 16 gigs down to 12 gigs while also raising prices. And that's just a reflection of the reality at this point. But what he pointed to is also part of this hardware upgrade is this new Tensor G6 processor that's actually 20% more efficient in terms of battery life, in terms of what they're able to do with Gemini efficiency. So that is meant to basically safeguard against cutting into this new Gemini intelligence experience.
Oh, interesting. Mac, thanks so much for that. Meantime, another really narrow range intraday as you got the VIX sub 15. Pretty amazing.
I think we got through CPI and there was no big surprises, in line with expectations. Keeps the Fed maybe not having to raise in September, and that's good news for the market.
Yeah. Let's get to the Judge at Post 9.
Carl, thanks. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Food for the bulls. The CPI hits in line, yields down, CoreWeave surging after earnings. We trade the markets with the investment committee. Joining me for the hour today, Joe Terranova, Shannon Sakosha, Brian Belsky, Bryn Talkington. Check the markets here. Green across the board today, so a little bit of relief, obviously, after the CPI print. Certainly the AI bulls getting a nice lift from Supermicro and CoreWeave, the beats, the raises, etc. And Ed Yardeni goes to 8,400 now on the S&P. 8,250 was the prior target, which at the time he said could be a little conservative. All right, so the words, then the action. So he raises it. Says, quote, "We've never seen consensus earnings expectations rise so quickly for the current and coming years as they have since mid-2025. The result has been an earnings-led melt-up in the stock market to record highs." That's where we find ourselves. There's no reason to think that that's going to change as long as the earnings picture remains what it is.
No, and congratulations to Ed on calling the 20s for exactly what it is. It is the roaring 20s, specifically attributable to the earnings growth. Now, Ed is the highest on the street. If you look at the S&P targets, the actual consensus price is 78.45. But we're looking now at taking profit margins towards 17%, which is absolutely staggering if you think about where they were just 5-6 years ago, kind of wallowing around 10%. The earnings growth is the driving force for sure. Ed right now is the highest on the street, and I think what we will benefit from is continued participation as we move higher from the systematic funds. We're kind of sitting in place right now off of this 3% gain that we've had in the month of August, really strong out of the gates. But I'll tell you what, we break out above that August 5th 77.93 high. I expect systematic to engage further and move the market towards 8,000.
Okay, so I mentioned, obviously you get the news that you really needed, Bryn, today. Does the Yardeni target sound reasonable now to you? Because I said yesterday, I think 8,000 is the floor. It feels like it from the street, at least. Everybody's gotten now to at least 8,000, or certainly most people are getting there. And now he ups the ante at 8,400 because of this FEMO, right? Not FOMO, FEMO. It's the earnings-led momentum.
So I typically, ignore year-end price targets. That being said, Ed's been doing this for decades. He has a very good track record. And so I think directionally what he's saying makes so much sense, because you also have to think about how the construct of the S&P and the NASDAQ, but for the S&P for earnings has changed so much. So yes, NVIDIA is still the #1 holding in the S&P, But now Broadcom and Micron are also in the top 10. Obviously, Broadcom's been there for a minute, but Micron's now broken to, I think it's like number 7 or 8 position. And those earnings from those 3 companies are going to continue just to be monster. And so I think if you are looking at earnings from these specific companies, especially the Micron and NVIDIA, you can math out very easily why his number at 8,400 sounds plausible. And so I do think investors do need to understand that huge shift of the constitution of the S&P and the NASDAQ has changed, which is going to continue to push those earnings growth numbers higher.
Shan, what do we think about this market?
Well, I mean, the crazy thing, right, is that the S&P 500 is actually underperforming other global equity markets. And so I think if you look at the tech PE ratio, we've seen that compress pretty markedly. We're seeing the opportunity for this pivot, if you will, in terms of the next phase of AI. But I think it's most important to kind of counter some of the enthusiasm with the fact that many are still concerned about the recent unwind in memory. Was that fundamental? Feels more technical to us, certainly the degrossing. The reality is, too, you also have the news from NVIDIA about these memoranda of understanding. That clearly is indicating that there is going to be a wider participation. We've seen it in the credit markets already in terms of funding investment, this issuance, increase in investment-grade issuance. You're seeing it now utilizing the alternative private equity managers, private credit managers to also fund this growth. The bottom line is that all of this is underlying the economic momentum that we have globally. We're no longer, especially here in the U.S., Scott, our economy is not based on what's happening with the consumer. And so all of these concerns about the labor market and inflation and the Fed, the reality is that the tenor of economic growth has changed in the United States, and the companies that are performing well from an earnings perspective are benefiting from that and are likely to continue to benefit from that, even if there are pockets of weakness in parts of the consumer market, for instance.
Big week for the AI bulls, undoubtedly, right? The NVIDIA financing news, no money to be seen yet, obviously, but the announcement enough speaks to the environment and the expected demand that's going to be there. CoreWeave blows it out, stocks ripping. Supermicro gives a good guide, stocks higher. So this has been a week of AI trade validation in many respects.
It's been about validation. It's been about the messaging and how they're doing it. Remember, people were worried about how and why companies like Oracle and Microsoft going out into the private sector and gaining debt. This consortium, even though it's still not completely tied together, this consortium in terms of how NVIDIA put this together, number one, and number two, how they communicated it, Scott. We need information in the market, and they did a great job talking about how that's number one. Number two, in terms of the tech trade, we've said for 10 years that tech is becoming the consumer staples of the U.S., period. And so earnings have become excessively stable, but Ed nailed it. And we talked about this on the show yesterday. In the second quarter, we've never seen in the history of watching earnings revisions for well over 30 years, we've never seen a revision of earnings like that. And when you see that, that is real. That is real. And so what's going to end up happening is you're going to continue to see these types of revisions over the next 4 to 6 quarters, and 8,400 is clearly in the way.
I mean, Bespoke today talks about the beat rate for tech, the highest, 85.1%. 1 of every 100 tech stocks that have reported, 85 of them have beaten expectations. You have had, according to Bank of America, who watches the flows of what their institutional clients are doing, tech's second biggest inflow ever. So driven by hedge fund clients. Remember, we've been talking a lot about the degrossing from hedge funds. There's been a lot of deleveraging. The positioning environment, the field, if you will, is cleaner now. Tech saw the second biggest inflow week of all time. Money's going where they think they can get a nice reward. There's no doubt about that. This trade seems to be back in a big way. If it wasn't gone, it was parts of it at least were just taking a rest. Now the chips and the momentum trade, they were taking more than a rest. They had to puke up a little bit before they felt good enough to get back in the party.
So we had this 19% move from the end of March through June 2nd that took you up to 76.20, an all-time high. And then the market, to your point, Scott, it kind of had this consolidation to lower trade as you moved through the month of June. We're now rebuilding positioning once again. The catalyst is clearly earnings. And I think, Scott, we're getting in front of NVIDIA earnings. I think if you...
Exactly 2 weeks from today.
Exactly 2 weeks from today. So if I can, let me just walk you through why I think we're getting in front of it. First of all, analyst community, 96% buy rating, 303 price target. Here's what happens with the revenue growth. The revenue growth reaccelerates. Remember we were hearing about revenue growth moderating? You're coming in, the consensus number is 96%. That's the best figure in nearly 12 months for NVIDIA. Now you're going to see earnings growth, 114%. You're talking about free cash flow generation that's going to come in at $47 billion. Next quarter, they're going to guide to $100 billion in revenue. Think about how staggering that ultimately is. So I think the market is getting in front of what I think universally people believe is going to be a really good quarter. Be a little bit careful with that on the other side of earnings.
I was exactly thinking
Be a little careful with that on the other side of earnings, but I think we are working ourselves up towards that that previous high at 236 for sure that we had in May.
Bryn, and Goldman says it's going to 285. They reiterate their NVIDIA buy, but Joe makes, I think, a really great point that we just came off one of the best weeks that this stock has had in an awfully long time. It's been on a nice run here, okay? You can look at it over, that's month to date. Thank you, guys. That's a good chart. That shows exactly what I'm talking about. Therein lies one of the problems, okay? So expectations are elevated too. Watch out on the other side of earnings in a couple of weeks.
I mean, the growth of this company, though, is so ginormous that I think it's been a huge laggard with the growth, which tells you it's like people just still don't believe this growth is going to continue. But to Joe, walking through those revenue and earnings numbers, they are, and to do $100 billion next year is amazing. And so the stock continues to get cheaper. I think it's just been consolidating, right? What do we have, a $5 trillion market cap? But this stock is cheap. It should be at 280. 220 is 223 is inexpensive. So we'll see if it can break through that technical ceiling around 230s. When it does, I do think it will. I think it's off to the races. But that 230 definitely is a ceiling that it needs to pierce through. But it's been an underperformer relative to the Microns, a bunch of different stocks year to date. And so I do think there is an opportunity for catch up, especially with Elon saying with SpaceX that they're pushing all of their chips in with NVIDIA. That's a huge, huge new customer that was not underwritten a month ago.
You make a good reminder to people, too, about the valuation. Let's show that again, if we could, because the stock, we've been saying for the last few weeks, the stock is the cheapest that it's been. I don't know, what was that, since 08? In 7 years? I'm sorry, in 7 years. I was thinking 2007, 2008, but in 7 years. So therein tells its own story, right? Of a stock that earnings expectations continue to go up, and the stock continues to get cheaper. There's other news today as well. So Morgan Stanley comments on Meta's new Muse Spark, re-entering the open weight game through Muse Spark, reads positively for the ecosystem. So that's a story that we continue to follow. Google getting its first crack today at the iPhone. That's interesting, a new Pixel lineup. We're following that. There's the SpaceX news today of the target getting cut. The stock has been teetering right around the 135 level that it had gone out at. It got below that, now it's back, at least above it there. I want to move and talk about a stock that reports earnings tonight. We don't talk about it all that often. It is Cisco. Brian Belsky, you own it.
Yeah, we do. We've owned it for about 10 years, Scott. And this is a company that has really benefited from the Russell 1000 value technology sector being a place with respect to where momentum has been, especially when Micron was in the sector. So this is also a name that value investors have been able to buy, not only for the cash flow and the consistent earnings, but this stock throws off a dividend. So now that they've talked more and more the last couple, 3 quarters about their AI development, this stock has a lot of fundamental momentum behind it.
Why is this stock done so well?
I think 2 things. Number one, it is obviously participating in AI, but it's participating in AI through optical. And you see today,
look, Lumentum.
So let's talk about how strong the optical story is. It is Lumentum.
Corning.
You see this strong earnings. Corning is the traditional way. It's more of a reasonable valuation, and that's how I'm playing the trade. You could look at Lumentum. You could look at Coherent. Coherent's up 59% so far month to date. Applied Opto, if we could show that, that's up 84% year to date. So Cisco is there. It's participating in that optical component, which is critically important, because years ago, everyone was saying in AI infrastructure, what do you need? You need copper. Everyone said own copper. Well, now optical is replacing the copper wiring because the light is actually moving the data faster and more efficiently.
Copper's been ripping too.
Well, no. But optical is absolutely the trade. And if you don't believe that optical is the trade, NVIDIA earlier in the year announced $2 billion deals with Lumentum and with Coherent because they understand that's where you have to be. Last point is also keep in mind, and this is not confirmed as of yet, but the FCC consideration in terms of limiting Chinese imports of optical is obviously going to turn us more reliant on U.S. optical that plays right into the names like Cisco, like Corning, and the others I mentioned.
Let's talk more about software. Okta today upgraded to market outperform from perform at Citizens. The cyber trade, Brian, has been really where it's at in terms of software. It had that momentary blip months ago and then has had just a strong rebound. CrowdStrike taken to 230 today from 195, also at Citizens, so they're sort of reevaluating the whole group. They take Palo Alto to 415. What do you think?
Stock's up 100%. But remember the blip. The blip came at a great time for this company because it was in the process of folding in CyberArk and everything that was happening in terms of their operations. And now Palo Alto, to us, is the creme de la creme in terms of that type of space with respect to cybersecurity. So we like the company. We've been adding to the company over the last few months, and it's our core holding in that space.
You have some?
CrowdStrike, Fortinet, Palo Alto, cybersecurity. That was the dominant theme as software was entering this corrective phase. And even as we've now witnessed other parts of software come back and have the mean reversion recovery, cybersecurity is maintaining the strength, and it's attributable to the fundamentals and also the fact that if you are a CTO, you are not cutting the budget as it relates to security.
I'm starting to get more conversation that software has some legs, that this rebound is not punk.
No, I was just going to say that. I mean, we heard so much about both software and business services, this AI disintermediation, and what I think was overlooked or under-acknowledged by the market is that the companies that are outside of the technology sector that are going to be integrating and implementing AI, they are accustomed to utilizing the software that they have on their desktop today. They want that software to be and created greater efficiency AI into that software, not necessarily upsetting their entire stack, especially large Fortune 500 businesses, Scott. They don't have the opportunity to just tuck something entirely new in. So they're going to rely on software providers, perhaps at lower take rates in terms of annual revenue, but they're going to rely on their software stack in this AI introduction and implementation that they're going to have to achieve.
How about this space, Bryn, software?
I think that Microsoft a week and a half ago in their earnings was a game changer. And so I think that puts a ton of support. It's obviously a big position of IGV. And I do think that we're all starting to understand, especially with these open weight models, whether Meta can be successful, that's yet to be seen. But these open weight models is that ultimately these LLMs become commodities, and you do need a trusted application layer, which is where the margins are. And so I think that you're going to continue to see IGV specifically make these higher lows, which is great for the chart. And I think it creepies, up there for the remainder of the year. But I think that I was frustrated with Microsoft. I think it was a game changer to say this, software application layer is here to stay, and there'll be winners and losers. But I do think IGV, because you have a little bit of everything, is a decent way to play the software space if you don't want to have an individual risk of one single name.
I'm going to maintain a degree of skepticism until I hear from the three names in software that I think the problems exist most.
Salesforce.
At the end of the month, we get Salesforce. I think August 26th, September 9th, somewhere around there is Oracle, and the following day is Adobe. Let's hear what each one of those reports are all about before we get this enthusiasm that a return to software in totality is warranted.
Do you think those are equally important? Because I would think about Adobe in maybe a different context of that, just given the narrowness and the creative aspects of that company that might be unseated more so than a Salesforce.
I was thinking the same thing.
Yeah,
I was going to say, I thought you were going to say ServiceNow.
No, I actually think ServiceNow of those four is probably the best positioned. And that's
so you're not as concerned about that.
The stock doesn't reflect. I mean, the stock has bounced nicely over the last month, but that's about the only green you're going to find if you look at it, at least on my fact set.
Yes.
Quite literally.
Yeah.
Week to date, it's down in the course of what's been a decent bounce. Over the last 1 month, yes, it's up 15.5%. Year to date, red. 12 months, red.
I feel as though the trouble has been, and ServiceNow is challenged for sure, but I feel as though the real trouble is specifically related, and all began 1 year ago with Oracle, and then it trickled down and it went to Adobe and it went to Salesforce. So I'm maintaining this disbelief.
So is Oracle the #1 problem child? And
I think so.
So
Absolutely.
Is that the one that needs to provide clarity in terms of getting out of the penalty box?
Candidly, Brian, I'd like to go 3 for 3. I'd like to hear something really good from all three of them universally, and that will shift my sentiment.
Okay. Let's talk about financials for a moment, because you put out a note today. The good folks at Humulus were working all night on this note, and they said today that they're buying into the rebound in financials.
We are.
Why?
Well, we wrote the report because we knew that you would really appreciate that today. So
I appreciate that. I do.
It is really all about Wapner today. And this is a sector that we think, you talk about earnings, the next great earnings win, aside from tech, is going to be financials. And we're going to see rates moderate. We're going to see spreads continue to increase, but more from a thematic perspective. You see the really big banks and the really small banks doing well, but the broker-dealers are a great business, and that's why we highlighted Bank of America and Goldman Sachs in terms of the two stocks in focus with respect to where and why we own those names. We think there's a long runway here in financials.
And if I remember correctly, didn't you either sold or you trimmed Regional Bank yesterday, right?
Fifth Third.
Yeah, Fifth Third in our value portfolio because we were up 30% in the name. We're really worried about their loan book for the next couple of quarters, but we're already 32 or 33% financials in our value portfolio, so we just added to a couple of our more favorite names.
My take is JP Morgan continues to break out. If we could show a chart, I think JP Morgan trades to an all-time high today. Bank of America, very quietly, I probably fail in mentioning this name enough as it relates to the money center banks. I tend to focus on Goldman Sachs and Morgan Stanley and JP Morgan, but it continues to work higher. And Brian, you pointed out yesterday, I thought it was excellent as we talked offset, just about the value in the wealth management business for Merrill Lynch. Really strong.
Remember we talked also offset. All the good stuff is off. That's where the good comments come. When the cameras are on.
Maybe you should bounce off right now.
See you later.
If you're not going to.
Good night, everybody.
If you're not actually going to deliver when your mic is open.
Not really. I mean, I get so nervous on air. But if you think about how they communicated their second quarter earnings, think about how much talk there wasn't about wealth management, because they were talking about net interest margins, commercial bank, the investment bank, the deal flow. The creme de la creme, I think, in all of these major banks is going to be wealth management the next 6 to 9 months period.
These guys deliver, by the way, their best stuff during the actual hour of the program.
I'm still a rookie compared to these two. I mean, honestly.
I don't know, man. Should we do it this guy? The hook?
The hook?
The hook.
Wow.
Okay.
Executive producer says the hook.
See you later, kid.
Go to the bullpen. Go to the bullpen. All right, coming up. Speaking of sports, a bombshell basketball buyout. The Lakers sold for the second time in about a year. We have more on this still developing story next.
Hi, folks. By now you've been hearing a lot about investing in YRefi. Why invest in YRefi? Well, How about an investment where your interest is calculated daily and you're paid monthly? Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. Why refi? You'll like investing in America's future.
Sometimes the same thing might not be the right thing, especially when it comes to your investing strategy. Discover Cboe, the exchange that pioneered options trading. With versatile trading products and global data, Cboe gives you the tools to trade in any market environment. Life is better with options. Your investments could be too.
NVIDIA working with some of the biggest names on Wall Street to secure financing for its customers.
These partnerships are going to pull together independent long-term capital to fund AI infrastructure build-out.
You're starting to see asset-based financing against this infrastructure.
The first few years, there's no income. Once these are yield-based products, then it's easier to sell them in the public market.
We need to make sure that we're broadening participation in AI.
You shouldn't have to sacrifice your well-being for your workplace. That was the idea behind the original VeriDesk, and it transformed offices all around the world. It proved that when you sit, stand, and move more, you can work happier and healthier. So whether you're furnishing a whole office or outfitting your home office, Veri has everything you need. Our bestsellers are on sale at Veri.com.
Sweet new boots, man. Where'd you get them from?
Thanks, I got them from
GoBex.com. Why did your voice just...
Hey, Fat, you got the new Yeti cooler? Yeah, man. I got this baby at
GoBex.com. Why is everybody's voice...
Natalie, tell me you got the tickets.
Yep, I got them from...
There's no way her...
All right, let's go.
What?
Los Angeles Lakers changing hands for the second time in less than a year with some big name buyers in a deal reportedly valued now at $12.5 billion. To give us more context, put all of this into perspective, Alex Sherman with CNBC Sports. This is a shocker to a lot of people.
I would say a shocker across the board, including to the league itself, to Jeannie Buss, the current governor of the Lakers. In fact, I would say even right now, there's still more questions than answers involved with this. Let's get to what we know off the top, which is that Mark Walter, who formerly acquired the Lakers in October of last year, is now, in essence, flipping the team. He bought the team at a valuation of $10 billion. He's now selling it to a consortium led by Josh Kushner and Bob Iger for $12.5 billion. Of course, Joshua Kushner, founder of venture capital firm Thrive Capital, Bob Iger, former CEO of Disney. These two had been looking to buy the Las Vegas NBA team. They were one of many bidders, potentially, for that expansion team, now turning around and buying the Lakers instead for a record price. Now, there's a few questions I just want to rattle off here. We can talk about it a little bit, Scott. We don't really know the financing at this stage. I don't know exactly what Bob Iger's net worth is, but he is not a multi-billionaire like some of these tech founders that you see, so we don't know exactly what ownership stake he will have in it. The NBA has rules around private equity ownership that caps it at 30% in the aggregate, so we don't know exactly what percentage of this will be owned individually by Joshua Kushner and how many other investors they're going to need to bring in order to hit a $12.5 billion valuation. Mark Walter bought more than 70% of the Lakers when he bought that stake from the Buss family last year. Like I said, we don't know what Jeannie Buss's role is going to be moving forward. She's still the governor of the Lakers. She basically is the person in charge of that team's operations. Does that carry on moving forward? I'm not sure. We also don't really know why Mark Walter sold the team yet. There is an ongoing investigation into several of his insurance companies I don't know if that factors into this or not. Nobody knows yet, but it is certainly unusual that you would buy a team and then turn around and sell it less than a year later. Now, he is making a lot of money on this transaction, so it was clearly a good investment by him one way or the other, but we don't know exactly what the motivating factor in selling the team is to this point. So still a lot of questions to be answered.
Good point you make. I mean, obviously, the headline is the sale. The subplot is the financial empire and the federal probe, and we do need more details. Most of the people that I've been speaking with in and around the sports investing landscape were just stunned by the news itself, as you alluded to at the top. Let's welcome in, you stay with us. I want to welcome in Mark Gannis. He's the CEO and the founder of Sports Corp. He's a consultant. He's sort of a sports deal guru, if you will. Has his hands in a lot of things that are going on in professional sports transactions. Mark, it's good to hear from you. Thank you for joining us.
Thanks, Scott. Pleasure to be here.
Just to get everything in full transparency, you didn't, your company or yourself, you didn't have anything to do with this transaction, correct?
That's correct.
Okay. What do you make of it? I mean, I told Alex here, you know, the people that I've been speaking with this morning in and around the arena, if you will, are pretty stunned.
Yeah, it is stunning, and the speed by which from when Mark Walter bought the team to selling it, there's a lot more going on here that we don't, you know, that has not been made public. He's not a person who flips. His history in sports, his history in business has been he buys, he fixes, he develops, and he holds. The Dodgers are a great example of that. What he's doing with the Cadillac F1 team, another example, the Professional Women's Hockey League. So that he's flipping this so quickly, there's something more to the story here of why he's doing so, and it may have something to do with his personal situation.
Sure, people are trying to hypothesize, was this transaction pushed by the probe? We'll just have to wait and see, but it's certainly being discussed in sports circles today. I thought Alex made a good point as well in talking about the role that private equity can play when it comes to NBA deals relative to what the NFL, for example, allows. And that's where you really have your hands deep in so many of the biggest deals that have been done in the NFL. We don't know a lot about the financing here. We know the parties that are said to be involved. But can you speak to the fact that trying to get a transaction done in the NBA, and dare I use the word easier, it may be just that relative to the NFL in terms of the percentage of private equity that is allowed, the introduction of sovereign wealth money that is allowed in a way that the NFL does not?
Right. So transactions are much easier to do in the NBA, and that is reflected in the high valuation of NBA teams as compared to the NFL. For example, in the NBA, you can have corporate ownership, public company corporate ownership. The NFL doesn't permit that. Sovereign wealth funds you talked about. You can have direct pension funds investing in the NBA. You cannot have that in the NFL. Those are self-imposed governors at the NFL that any time they want to release the brake, they can increase valuation significantly. So Josh Kushner and Bob Iger have been out in the marketplace raising money for a Las Vegas expansion team. So they have a pretty good idea of what's out there. And by doing so, I think they have probably a significant amount already lined up for this deal that has not been made public yet, and they don't have to compete for an expansion team like they would have in Vegas.
Interesting. Alex, I'd love your opinion on that, you know, based on you've done so much reporting of late, and we've had conversations about the role of private equity, maybe the ever-increasing role of private equity in sports, and also to some degree the growing criticism around it.
Yep. So just to tack on to what Mark was saying there, the speculated price for a Las Vegas NBA team was in the $10 billion range, up to $10 billion. Some people think maybe it would end up going for 9 or something like that. But the point there is that quite a bit of money would have already been needed to be raised in order to make that a winning bid. So I do think that there's likely some credence to what Mark was saying there with this valuation at $12.5 billion. And again, for only a 70% plus stake rather than what would in essence be a 100% stake, because that stake was being built from the ground up. There is no previous owner, so you'd be buying the team from scratch. So all of that money would need to be raised by Iger and Kushner and whoever else. So logic suggests that there are multiple financial backers already backed up. And just by the way, even if there aren't yet, we saw as evidence with the Boston Celtics sale last year that you can always bring on investors after the announcement of a sale. So in the coming months here, this sale would need to be approved by the Board of Governors of the NBA. So there could still be more money that comes to the table in order to get this deal approved by the league in however many months down the road that happens.
Mark, lastly to you, the Lakers are obviously, I guess, what we could call in our business a special situation in many regards. It's a trophy franchise, obviously, in professional sports, to the degree that you can sell a franchise for $10 billion less than a year ago and command 12.5 today and actually get it. And just where valuations are going in your mind, the fact that the Seahawks just went for near 10 to Vinod Khosla, this is a one-way train, it appears, and every time I've asked you where valuations are going, you continue to say higher. You told me many months ago that the Seahawks would get 10 or close, and here we are. I'd love your insight into where we go next.
These trophy assets in sports in particular are going to continue to go up in value. Look at what just happened with the Yankees with Apollo at $2.6 billion coming in, and basically selling almost none of the team. These trophy assets cannot be replicated. Sports is an asset class that is going to continue to grow. And as we move to AI and globalization, sports is the one asset class that will be advanced, will not be hindered by AI and globalization. So when you take the combination of the asset class, the future, and the limited trophy assets that are out there, these things are going to keep going up, and we're not anywhere near the end of the road on these. There's a lot of runway left to go.
It certainly seems to be that way. Great insight, Mark. Appreciate it as always. Great reporting from you and your own insight, Alex. We'll see you later at 3 o'clock. That's our Alex Sherman. Now to Pippa Stevens with a CNBC News update. Hi, Pippa.
Hey, Scott. A specific threat about a shoulder-fired missile was reportedly behind the decision to move President Trump off of Air Force One as he left the NATO summit in Turkey last month. That's according to CNN, citing a person familiar who said the threat was detailed enough to hide the president in a catering truck and move him to an unmarked military jet. Air Force One departed separately as a decoy, carrying aides and reporters. A desperate search continues for survivors of Colombia's magnitude 7.4 earthquake as the critical 72-hour rescue window closes. At least 181 people are dead and nearly 2,600 are injured. In Pereira, crews pulled a young woman alive from the rubble after a painstaking 12-hour operation. Thousands are now living in shelters and parks. And millions are gathering across Spain, Iceland, and Greenland for today's total solar eclipse, with darkness lasting up to 2.5 minutes. Spain has deployed more than 33,000 officers as crowds enter wildfire-prone rural areas. Authorities are urging viewers to use certified eclipse glasses and avoid anything that could spark a fire. Scott, back to you.
All right, Pippa, thank you. Pippa Stevens coming up. Calls of the day, including a number of bullish calls on the committee's top consumer plays today. We'll debate those names coming up.
Anna, who has led a reinvention from delivering the mail to being a platform company that provides services at the core of every citizen's life in Italy.
The reinvention was trying to bring a company into the trends of the future with electronic payment, e-commerce, digitalization of services. Only 30% of payments in Italy were electronic, 70% was with cash.
One of them being, energy. You invested in the technology to build a platform that allows you to continue to grow.
We do financial services, SIM cards, fixed line, and now energy products. We build everything with the digital tools of today. We give to Italians services that they need for their everyday needs.
Advanced nuclear fuel, an important input into economic growth going forward.
The innovation, the ingenuity, and the dedication of this team, I couldn't be more excited about the future of this business.
From senior to childcare to pets and more, the new Care.com makes it easier than ever to find the care you need. And you don't have to hire just anyone. You can find a background-checked caregiver who's the right fit for you. Join now and find care at Care.com.
We started Henyon and Walsh for people like you. People who share our values, integrity, honesty, and loyalty. The result? We're different because we care about you and your success. We're dedicated to your financial goals, so we'll always give you our very best efforts because you've earned it. We're Henyon and Walsh and committed to you. Get in touch today.
Thanks so much. Thanks. This has been great. Changing the strategy makes a lot of sense.
Doors.
Keep an eye out for the invitation. Can't wait to see it.
Bring us together. A dedicated Fidelity advisor can help you open those doors with a comprehensive plan to help grow and protect your
The architect left the plans in the back if you want to take a look.
She's so ready to take over. For retirement and everything else you're looking to build. We'll get there. Your Fidelity advisor can help your legacy last for generations. Doors were meant to be open.
Weeknights. I love themes. They help you craft a portfolio with the wind at their backs, not in your faces. The kind of stocks that you can confidently buy more of when they go down.
Mad Money, weeknight 6 Eastern and streaming on CNBC+.
Let's do some calls of the day. Wolf today says they love the setup on McDonald's. Belsky, they say it's one of our favorite setups after a stock has suffered a significant drawdown. It's a weekly oversold signal at support coupled with a bullish inflection in momentum. Now, you didn't, thankfully, say anything about McDonald's off camera. So now you have to deliver your best stuff on.
Church mouse off camera. The real concern on McDonald's is that the same people coming in, they call it renewed traffic, is down less than 1%. So they need to try to find a way to crank that up. They're really working more on the app. Their sales are pretty flat. And the international side was a little bit light, so they've got a new focus on the U.S., Scott, and we think that there's going to be strong growth the second half of the year here.
You buy this turnaround in Target because B of A today, you own the stock. B of A reiterates underperform, okay? They do put the target at 124. It's at 153. Okay, the stock is up 56.5% year to date. It's up more than 13% over the last month.
Yeah,
they're not believers, obviously. Are you?
We own it in one portfolio, so that kind of tells you the come on. But we prefer Walmart.
That means
here.
You like it, by the way.
We prefer Walmart more here. So we do think this is the first full year of the new CEO. He's done a great job operationally to turn the company around. That would be a name that is on our list to trim, Scott.
Okay. See, let's just cut to the chase and get to that then. You know what I mean?
Just trying to add a little bit more.
I understand, but if you own it in one portfolio, that means you like it. If you own it in 20 portfolios, maybe that means you love it.
Okay.
Okay.
Thank you for clarifying that.
Well, I mean, our viewers are sitting there like,
come on, Belsky.
Again?
Yeah.
I get it.
I get it.
Hilton. Coming right back to you. You're on the hot seat, dude.
I love it.
You are on the hot seat. Upgraded to buy. The target 365 from 360. How many portfolios do you have this in?
One.
Does that mean you?
Well, it's a mid-cap.
Well, it got upgraded, so.
It's a mid-cap name, Scott. The RevPAR numbers are higher than Marriott. Marriott had a tougher quarter. From the FIFA perspective, they've actually outpaced Marriott with respect to what they saw. So Hilton, we think, is a great play on the healthcare space, or a hotel space, I'm sorry.
It's your unlucky day. I know you're a little bit flustered now, but
I know.
I'm coming right back to you.
Please do.
Lowe's.
Yes.
The target cut to 262 from 281. Home Depot target cut to 344 from 346.
Yep.
What's the story?
Lowe's is down 11% year to date. Home Depot's flat. Home Depot's done a better job with their integration of the new properties. Lowe's not so much. And so we think that there's an opportunity there to see increased earnings growth from some of their new M&A activity that they've seen in the last 6 months.
All right, they're telling me to go to break, but I'm just coming right after you.
Come on.
TJX. outperform Telsey ahead of earnings on Wednesday. Joe owns it, but I'm coming right at you.
5,200 stores around the world. There's still a runway to continue to grow that. This is a counter-cyclical play on the consumer that has great products, and we think if people are going, we talked yesterday about some consumers going downscale. This is the best way to go downscale as the consumer.
Integris upgraded today, Target 200 at Deutsche.
You know what they do? They make the gas that goes into the components that make chips. Okay. That's why it's an AI play, and that's why from a demand perspective, this company is firing on all cylinders.
General Dynamics, that's you. Top picks, Wells Fargo.
Robotics.
Joe owns it too, but I'm coming right at you.
Robotics. This company is done from the robotics side and the defense side. We think that from a revenue perspective, this company is going to continue to beat.
Boeing on that list also. You got that.
Boeing, everyone's favorite stock to hate last year. This company continues to have new orders go up. We're flying more, especially on the international side. Their orders from the CEO perspective, this is another company that has done a great job in terms of balance sheet management and cash flow.
Right. Control room. I'm sorry.
Come on, give them a financial minds.
Deservedly, they're losing their minds. They tried to get me to go like 2 minutes ago, but this had to be done.
I know, I get it.
All right, we'll come back with the cash conundrum. There's some new data showing that investors are hoarding trillions of dollars on the sidelines, raising the question of what the ideal portfolio looks like right now. We discuss next.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
The first day back from maternity leave is so weird. We get it. Find a caregiver who does too. When it's not you, it's Care.com.
Is your bath old and outdated, maybe even unsafe? In just one day, Jacuzzi gives you the safety you need and the personal style you want, all at a price you'll love. So your bathroom can go from this to this, this to this, or even this to this. And right now, we're waiving all installation costs and offering no interest or payments for a year.
Go to jacuzzibathremodel.com or call 800-710-2979.
Welcome to Sketches Motel. Checking in.
You might see some familiar faces during your stay. Sketches Motel. Cheers. Where the world comes to play.
Welcome to Closing Bell Overtime.
Get the essential post-market edge, after-hours action, and opportunities.
Big earnings, all due in the next few minutes.
The economic impact is just beginning.
Closing Bell Overtime, 4 p.m. Eastern, CNBC.
Golf Channel's hit series is back.
The Big Break.
Big Break Good, presented by Golf Galaxy. New season premieres August 25th on Golf Channel.
These bills are crazy.
She has no idea she's sitting on a gold mine.
She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
It smells like vacation. What are you laughing at? It does.
I have fine hair, so I want a product that doesn't make it look flat.
I just want ingredients that make sense for my hair and results that I can see.
Honestly, you're not asking for too much. At Kitsch, we don't guess what your hair needs, we listen. Premium ingredients, salon quality formulas, sustainable packaging, real results. The hair you want without the trade-offs. Kitsch, hair care without compromise.
All right, good Wall Street Journal story today. Wealth management has a $3 trillion problem. Investors are keeping too much cash. got us thinking about what the ideal portfolio does look like right now. So they point out that individual investors are sitting on a mountain of cash, that there's over $3 trillion in retail money market funds. That's around a record high. Not to mention the trillions of institutional dollars as well that are sitting in money markets. David Solomon of Goldman Sachs talked about that. Advisors continue to pitch bonds. People don't want any part of it. They want cash. They want cash and stocks. What do you think?
Well, that's the barbell that's worked, and they don't want bonds because if they're anchoring themselves back to 2015, 16, 17, where bond yields weren't particularly attractive. Plus the post-COVID period where the Fed was actively hiking rates, and frankly, with an inverted yield curve, cash was the most attractive place to be. But if you look just at the yield increase or pickup that you get from December 31st to today, Scott, you're actually being able to lock in some very attractive yields, both on the taxable side and on the muni side, just, tax exempt.
Yeah, no, munis, Rich Saperstein, every single time he is on this show, talks munis.
But I feel like this is part of the experience for investors is that they haven't looked at their bond portfolio in years. And so they feel like the relative opportunity is, cumbersome, and the potential for there to be, opportunities in the equity market remains. The other thing that's the challenge, Scott, is that the correlation of bonds and stocks has increased. And so people are like, my 60-40 isn't as elegant or effective as it used to be. The bottom line is, though, is that there are, pretty attractive absolute yields available, and that just going out even from cash to 2 years or 3 years or 4 years in duration, you don't have to go out to the 10-year and pick up that volatility.
Bryn, how are you advising your clients as it relates to this issue that the Journal brings up today and we decided to talk about?
Yeah, well, we say all the time, especially longer duration bonds have been a great way to grow poor safely. They haven't kept up with inflation. The ag is flat from a total return over the last 5 years. And that's why, I talk a lot about covered calls, because what hasn't changed is people do want cash flow. It's just how do they want to get it? And bonds from a total return, long duration bonds have been horrific for investors. And so I think they felt more comfortable institutionally as well as on the private client side staying in cash. But when you have covered calls, that to us really squares that. You get equity exposure, but you can create a 6, 7, 8, 9% annual yield while also having some equity exposure. And then finally, I think that most of this cash, once again, the baby boomers, which are now in their 70s, 80s plus, they just have a different risk tolerance. And so I think this cash number is not going to change anytime soon. Institutionally is on the private client side, but this is why covered calls are such a great investment for people wanting cash flow, because you're not going to get that on the bond side.
Well, you're one of the experts, certainly in our orbit on that. Joe?
So institutions are the buyers of corporate debt. Very strong demand coming from institutions, not so much retail, to Bryn's point. I see in front of us that we are raising a next generation of investor that is going to specifically focus on equities, because that is what they know, that is what they have got paid on, and that is what they understand. So I think as we move through time, I think it's going to be more difficult for people to understand the benefits of bonds. They're going to want equities.
You need a break, or you got something to say here?
All I have to say is 40-year bull market in bonds. And we had the unwind from 2022, and now the majority of returns in bonds have been price performance. Now we're seeing what you adeptly said, is that we're seeing interest rates, we're seeing the fixed income part of bonds working again. And I think people are missing that. And that's why Rich does a great job talking about the muni bonds, because you need that interest part of it. So I think that's more important than most people think. I think you're spot on with respect to stocks is the place to be, but I don't think that people should completely run away from bonds.
Okay. So let's take a break and come back. We want to talk about power play problems. There's a backlash, as you know, against data centers. The power names today are getting a lift because of what CoreWeave, Nebius, some of these other companies had to say, NVIDIA, what they've had to say recently too. What does this trade do? Because they've had a huge run this year. We discuss next.
This summer, summer, the world rode with Norway. Now follow us home to our fjords, our traditions, our Norwegian heritage. Viking. Exploring the world in comfort. If you're on Medicare and you get this, you could end up with this. Unexpected out-of-pocket costs, which for those on Medicare or soon to be is a good reason to take charge of your health care. So consider this, an AARP Medicare Supplement Insurance Plan from United Healthcare. Why? Because Medicare alone doesn't pay for everything. And what it doesn't pay for, like deductibles and copays, could really add up, even thousands of dollars a year. Medicare supplement plans help by paying some of what Medicare doesn't and making your out-of-pocket costs a lot more predictable. Call United Healthcare today and ask for your free decision guide. Learn more about plan options and rates to fit your needs. Now, if you like this, greater freedom, you'll love that Medicare supplement plans have no networks and no referrals needed. See any doctor, any specialist, anywhere in the U.S., as long as they accept Medicare patients. These types of plans also give you more flexibility when traveling in the U.S. Your plan goes with you, anywhere you go in the country. Even better, Medicare supplement plans with the AARP name are plans endorsed by AARP. Call United Healthcare today for your free decision guide. So, if you're on Medicare and want less out-of-pocket costs and more peace of mind, consider adding this, an AARP Medicare supplement plan. Take charge of your healthcare today. Just use this or this to call United Healthcare about an AARP Medicare supplement plan.
Corporate operations demand execution speed and reliability. Enter Circle 8, a business transformation platform operating throughout North America and Europe. With over 16,000 specialists delivering technology and workforce solutions to the largest private and public entities worldwide, CIRC generates annualized revenues exceeding $1.2 billion while trading at a fraction of that size. Through recent acquisitions, Circle 8 is rapidly taking market share from the major international consulting firms. CIRC on NASDAQ.
Welcome back. Data center power stocks have had a huge year. I think everybody knows that at this point. For example, Vertiv's up 81.5%, Quanta 63, Vernova 58.5, Eaton 46, even Caterpillar, right in the mix there, has been a 50% gainer. So you had a couple of events. Caterpillar got downgraded a couple weeks ago at Baird. They said, quote, state and local regulations could further limit the ability of hyperscalers to deploy CapEx, potentially impacting future orders backlog progression. Okay, that's talking about the data center build out. New York has the data center moratorium. Texas is pausing connecting data centers to the grid until there is an audit. Recent polling has suggested, at least one poll that we saw, 71% of people oppose data centers, right? It's this not in my backyard debate. If they're not in somebody's backyard, they're going to be in another one, however, which is why people haven't gotten too negative on the stock performance from here forward. I'm wondering what we think. Joe T., you have Vertiv, you have Quanta, you have Vernova, and you have Eaton.
Just recently sold Caterpillar at the last rebalance, and that was related to debt to equity. We own 22 industrials. These are the top 4 performing industrials. If you're trying to make an investment decision based on the note that you just read, I would first turn to utilities, and I would step away from ownership of utilities. I still think we're in the process of building out these data centers while there are some regulatory obstacles ahead. And if we're continuing to build that out, manufacturing is going to continue. It's going to support the revenue growth that we're seeing. The 4 companies that we own in the most recent quarter, revenue growth above 20% for all of them.
Bank of America with a note today, Belsky. They say everything's bigger in Texas, including the political risk. Texas has been one of the country's most constructive data center markets, but that position is now at risk. They highlight specifically in their basket of names within the risk, CenterPoint, which you own, CNP, most exposed, one of most exposed to the current uncertainty. What do I do?
Well, they're in the Houston area too, which Bryn knows a lot more about than I do.
I know, but you own it.
I do. So
you're stepping into it again.
I know I am. So
did such a good job too.
I know. I really no. Anyway, this stock from the growth perspective is
you crawled through.
I'm not going to be
500 miles of smelling foulness I can't even imagine.
I'm not going to be pulled down by
on the other side. You put your hands in the air. The rain was coming down.
It literally was. I'm not going to let the political environment
dictate. The sheriffs are circling.
I'm not going to let the political environment dictate what I know about this about owning a company. We think the data center side of the CenterPoint is going to be very, very strong, and the demand going forward is there.
That was a Shawshank Redemption reference. Did you get it?
Oh yeah, I got it.
All right,
get busy living or get busy dying, Scott.
All right, finals next.
Now that I've reevaluated my benefits and savings with Voya, I'm feeling great. How's your retirement plan going?
Oh, I've been ignoring it and hoping for the best. Come on, good retirement.
Don't just hope for a strong future, plan for one with Voya. Plan, invest, protect.
Anybody who's struggling with alcohol should try ORHealth. Within a week, the cravings were completely gone. ORHealth is safe, science-backed, and it works. I couldn't believe how easy it was. Alcohol doesn't run my life anymore.
Text CNBC to 710-710 to learn more.
Hi, folks. By now you've been hearing a lot about investing in YRefi. Why invest in YRefi? Well, how about an investment that earns a 10.25% rate of return that's fixed? Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. YRefi. You'll like investing in America's future.
We started Roe with one mission: make supplements people can trust to work. That's why every formula we make uses liposomal delivery designed so your body can actually take it in and you can feel the benefits. That's Roe.
Precise designs, subtle curves, curated upgrades, elevated design for thoughtful living. Puma.
If sitting hurts, if your back aches, if standing up feels hard, it's not just age, it's your chair. Most chairs push on your lower back with a lumbar support, but that's not how your spine actually stabilizes. When you shift, slouch, compensate, the pressure builds. It's time to fix your sit with Anthros. Forged in decades of clinical seating science, engineered to start at the true foundation of sitting, the pelvis. Our patented precision posture system has two unique supports for restoring your natural S-curve and reducing disc pressure by up to 40%. Backed by science and built in Michigan by experts in the science of sitting. Scan the code or visit anthros.com now for a 60-day risk-free trial. Feel the lowest pressure cushion in its class. Stand without stiffness, less pain, more life. Try Anthros for 60 days risk-free. If it doesn't change your life, your money back. It's time to fix your sit at anthros.com.
Wow. You notice that too? All right. Tom Lee, Stephanie Guild, Courtney Garcia, Sherry Paul, Jeff DeGraff, Malcolm Etheridge. We'll have more on that Lakers sale today as well. Floor managers. Aggressive. Yelling at you. Raising his voice at us. Felsky, what's your final trade?
LPL Financial, play on the independent channel.
Bryn.
DRAM and sell the October 60 calls, collect 460.
Shan.
Healthcare.
Joe.
JB Hunt.
Bill, you want one? I mean, no? All right. I'll see you at 3.
Thank you very much, Scott. The AI trade is absolutely roaring today. I'm Kelly Evans, and welcome to The Exchange. Everywhere you look, the AI suppliers are soaring, from Supermicro and CoreWeave, which are jumping after their strong results last night, to Lumentum and Nebius Group, which is now up 27%. It's even reviving the memory trade today, with the DRAM ETF up about 7.5%. A trade Victoria Green just told us on this show should not be left for dead. NVIDIA up 3% as well. And we'll talk to former NASDAQ CEO Bob Greif Greifeld about the company's massive compute financing deal and whether he believes in compute as an asset class. Plus $12 billion, or is it 12 and a half for the Los Angeles Lakers? And the buyers, Bob Iger and Josh Kushner's group, will have the latest on this stunning turn of events. But let's begin with the inflation data. We got the all-important consumer price index this morning. It came in basically as expected and just soft enough that economists say it could take the pressure for a September rate hike off of the Fed. This is also giving the markets a little boost today. Let's discuss it in our opening exchange. Nancy Lazar is the chief global economist at Piper Sandler, and Steve Liesman is CNBC's senior economics reporter. Welcome to both of you. Steve, I know you've been over this a couple of times already, but lay it out. What are the big headline numbers and takeaways?
Takeaway for me is it's 2 out of 3, which as Meatloaf sang, which you're too young to remember, Meatloaf.
Ain't bad.
Ain't bad, right? So we have 3 reports before the next meeting. Well, we had June, which was negative and a surprise to the downside. This number reasonably well contained. I looked at it for one reason, which is trying to look at the way the Fed looks at it, which I know Kevin Warsh doesn't want me to do, but I'm going to do it anyway. Look for spreading inflation from the headline to the core. I didn't really see it there. Maybe in airline fares, maybe further. And this is the road to the September meeting, okay? Tomorrow, PPI, tune in at 8:30. Where else are you going to be? August 26th, July PCE. You think you're going to be on vacation? Turn on the television. Watch our coverage of PCE. Somebody said, yeah, it's sort of any PC easy is what they said. Anyway, and by the way, after the report 8:30 tomorrow, I'll get Wall Street estimates for the PCE because we have both components, okay? August jobs report, August PPI. If we can do 3 out of 3 on the way in there, September I think would be gone as a rate hike. We're going to inch down and we'll be on the right road to lower inflation.
Now I'm using you to set up Nancy because I think you're gonna find this quite provocative. Nancy, come on in here because you have been on hold for your call for the Fed this year, which was out of consensus. Maybe we're coming around to that point of view, but you also looked at the report and saw some signs of stickiness in inflation. And tell us where you're seeing that and what you think it means. I mean, how big of a deal is this?
So looking at the individual pieces, I think you missed the bigger picture. We do a diffusion index of the core CPI. And in the month of July, and on average for the past 6 months, over almost 50% of the components, 46 to be precise, but almost 50% of the components are posting greater than 0.3%. That tells me, indeed, you're way above the Fed's target, if that's where the bulk of the components are coming in. And there are actually less than 0.1% readings. So I would agree with what Steve suggests. You are seeing inflation become more sticky. I don't think it's because of energy prices. I think it's because there's too much liquidity. Just listening to your intro.
Yes.
Massive amount of liquidity in the stock market. Credit markets are wide open. Apparently, sports leagues are wide open as far as also sourcing a lot of liquidity. But more basic, money supply is growing 7%. Bank loan growth is 8%. And we just heard earlier this week that banks are easing lending standards, or last week, and so bank loans are going to continue to accelerate. Government spending is accelerating. It's 7%. So absolutely. I think cherry-picking the CPI, you're missing the bigger picture. You are seeing stickiness, and there's fundamental reason for it.
I also wanted to point this out. It comes from Peter Bookvar. A couple of things. I know this will be frustrating to our audience, but it is true, and it kind of builds into the point that you're making. He said, a couple of other factors that were down kind of have your head scratching. Health insurance down 2% month on month and down 8% year on year. I don't think anybody is experiencing that. Energy, the BLS said gasoline prices fell 3% last month, but according to AAA, they were up 6%. So Nancy, my point is there are even a couple of outliers to the downside that make you wonder about that. And the reason why I wanted you in particular to highlight this is because you're not somebody who's been super hawkish. You're not somebody who said for years it's higher than expected and we have to hike. You're still thinking the Fed was going to be on hold. So do you still believe that the way that the data are coming in here?
My colleague Kurt Lewis, who's in charge of our Fed calls, still does think the Fed is on hold, and that makes me even more bullish on the economy if that's going to be the case, because of all of this liquidity continuing to drive corporate earnings growth, which is now spreading from 500 to the 600, all at record highs, growing double digits. So for now, yes, we do think the Fed is on hold. Personally, I think the rate structure is too low given how fast nominal activity is growing, 6.5%. Corporate revenues in the S&P 500 are growing 12.5%. I think the Fed is further fueling this growth, and that would make me more worried about a bigger inflation issue in 2027.
I didn't know I was coming on this segment into a hawk's nest, is what I appear to have stumbled into.
Because we were just talking, you and I were talking about the 3-month annualized the other day.
Look,
and how it's been lower, and how the trend 2.3.
I always appreciate Nancy's analysis, and I think it's a fabulous and interesting one. I would just say that David Bromberg wrote a song, I might take a train, I might take a plane. If I have to do a God bleep boogaloo, I'll get there just the same. And the reason I bring up that song is because the Fed may not care how we get to lower inflation, and it may not. I looked this morning, Nancy, tell me I'm crazy about this. I looked, for example, at services less energy up just 0.2%. Now, I get that if you keep doing 0.2s, but it was pretty well contained. It was one area I looked at. I saw, what was it, shelter was up 0.1. So when I saw those, I'm like,
that's
okay,
soft.
that's soft, and it's all headed down in the right direction. And that if I think I know what the Fed wants to do, I don't think they want to, as a group, necessarily hike. And if they feel like they're on the road there, that they'll be okay with it. But I don't want to disparage Nancy's analysis, which I think is excellent.
Nancy, respond to that if you could, and also this idea of coming from the Fed itself. They don't believe kind of higher than expected growth is a driver of inflation. It sounds like you feel a little bit differently.
No, it's not just higher than expected growth. It's how much liquidity is in the system. And looking at current data is always looking behind. If troughs and recessions, if you forecast based on where you were, you miss the upturn. And I would say the same is true because growth is always weak at the trough in a business cycle. And I think the same is true when you look at inflation. You can't look at coincident indicators. You have to look at long-term drivers. You can have strong growth, as we did in the 1990s, 4% GDP growth with low inflation. But you didn't have a sticky inflation problem in the 1990s. Inflation from the get-go slowed through pretty much throughout the cycle until Chair Greenspan eased too aggressively in 1998. And I would argue the Fed eased too aggressively in 24, 25, particularly the last 50 basis points was too much, given that the economy was already starting to accelerate. They always seem to make this mistake. So absolutely, I am a believer with strong productivity growth. You can have strong underlying trend in economic activity. But monetary and fiscal policy and bank lending are leading indicators of the path of inflation.
All right.
And right now, I agree, the inflation data are fine, but I don't forecast based on where we are. We try to focus on leading indicators. Steve, to your point on services, look at the ISM Service Price Index. It's still very elevated. It correlates really nicely with the supercore measure of the CPI. So I think it's way too complacent to get comfortable with inflation staying low. The bond market is not complacent. Bond yields are 4.70. If this was indeed an environment where inflationary pressures were tamed, why are bond yields lower?
Steve, a last word.
It's term. I'm just going to ask her. People say it's term premium, which is growth, and if the economy wants to grow and people want to invest, I don't know. Should the Fed stand in the way of that? It's not entirely clear to me. If it's not an inflationary growth that is taxing resources, and to the extent to which the essential resources that are fueling the AI boom are coming from overseas, it's kind of self-correcting, no?
If inflation is indeed still a risk, and to get complacent on inflation of 5 years of having higher than expected inflation, I think it's way too early to get complacent. There is nothing worse for the economy. There's nothing worse for the lower end consumer to have an inflationary backdrop. All you have to do is look at the 70s. All you have to do is look at 2023, 2020, and 20 and 24.
Yeah.
So squashing inflation on a sustained basis should be the goal of the Fed. I think it is the goal of the Fed.
And that chart is the perfect one to have up right now. You can see how we were coming over that bend, 0.2, 0.1 negative, and now
well, I didn't
popping
change
up again.
Nancy's mind, but she might have changed mine.
I
don't know. I got to rethink a little bit.
You know I'm sympathetic to the 3-month annualized, the lower.
I know.
But I have to.
I might have to rethink. It's okay.
Right. Nancy, thanks. Really appreciate it. Nancy Lazar, Steve, thanks as well.
Pleasure.
While all this was happening, the 10-year Treasury yield has been on the rise over the past month. Let's see if that's bringing in the buyers, because Rick Santelli is here with the results of the 1 p.m. auction today. How'd it go, Rick?
Yes, it went pretty well. I gave it a B as in boy. Let's go through it, shall we? 42 billion 10-year notes. This, of course, doesn't include non-comps and all the other ups and extras that can be included. The yield at this auction, 4.683, which was pretty much exactly where the when-issue market was right before bidding ended at 1 Eastern. So B as in boy, if you look at all the metrics, they're all very close, if not slightly better than the 10 auction average. But considering pricing was spot on, I think the best variable was dealers took less than 9%. 10 auction average of dealer takedown is 10%. And the reason that's important, it's because what investors don't want, dealers end up with. I noticed that when we look at the yields right now, we see that they're coming down just a little bit. We're down about 3.5 basis points in a 10-year. And do consider that tomorrow we'll wrap up $125 billion in Treasury coupon supply with 25 billion 30-year bonds. And I would like to stress the notion that we continue to see downward pressure after CPI as the probabilities at the CME are approaching 40%. And of course, we all know that at one point they were in the 70 percentile. So it certainly seems as though investors listening to the new chairman of the Fed, doing their mental homework, trading markets based on data, and it is what it is. Back to you.
Do you mean by that, Rick, you had no follow-up to Nancy's case just now? You saw that super core, down, 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 and then it pop up.
Listen, we could talk about fundamentals till the cows come home. I could slice and dice it a million different ways. We could argue whether seasonality or just the accuracy of the inflation numbers is correct. We have panels and panels of people working on it. PPI, we can only have a 12-year history because they changed it so dramatically not that long ago. In my opinion, I would like to push all that together in a snowball, and that snowball is called market trading, monitor trading. That's what the Fed will do. They're not going to surprise. And even with our last guest saying that most of the inflation we see really was around prior to this Fed chairman, and much of the increase in interest rates could be directly attributable to what happened on February 28th.
Meaning the start of the Iran war. All right. Rick, thanks. We'll talk about it with our next guest.
Look at a chart. It goes up 45-degree angle on that exact day. And the day before the war, we're under 4%. Okay, so really, I don't think that all of a sudden they woke up on Saturday and decided, wow, we got to start selling. It was the war. And my guess is when the war ends, the inflation we're left with will be AI related. And that really does open up a new chapter.
I don't know. So you acknowledge there's another anyway, like I said, Phil is sitting right here. We're going to talk about it. Not LeBeau, Campo Reale. Rick, thank you very much. Our next guest is also in the camp that thinks peak inflation is behind us. Phil Campo Reale is the chief investment strategist at JP Morgan Wealth Management. Phil, it's good to see you again.
Good to see you, Kelly.
All right, jump in here.
Yeah.
The water's warm. I'm very sympathetic to the cases we've been talking about for a long time now, that core inflation was coming down.
Yep.
This report, I think, is worth saying it's not a great data point in that direction, though. There's a few worrisome parts. So what gives you conviction? Peak inflation is behind us. Fed doesn't need to hike in September.
So two things, and they happened in the last 4 trading days, right? That payroll report that we got on Friday is part of this, right? So when the Federal Reserve is sitting in this data-dependent world, a negative payroll report with negative revisions and negative real wage growth doesn't scream to us overheating economy and wage price spiral, right? Which is what they were so worried about a couple of years ago in 2022. And then you look at core inflation this morning. I mean, I just look at core CPI at 2.5%, Kelly. That was exactly where we were pre-Iran. And the Fed hasn't done anything, right? They just patiently waited for this thing to come down, and we'll see what happens with headline CPI, right? Still sitting at 3.4%, so not back to where we were pre-Iran because energy prices were high. But the bottom line is neither the labor market is showing signs of inflation, nor are we seeing any evidence that the increase in energy prices from Iran are feeding into the rest of broader.
The consumer was very resilient during this period.
Yeah.
Even look at Bank of America's data. The low-income consumer, the low-income spending is where we saw accelerations, even throughout the spike in oil prices. Do you think, like Nancy said, there's too much liquidity out there? Let's show some of the S&P leaders again today, maybe the NASDAQ leaders. Nebius is up 28%. CoreWeave, these other, Lumentum was up 8 or 9 last check. There's Coherent. Ciena's up 13. Supermicro, again, that had been a tough stock coming into this. Is there too much liquidity, and are these market signals telling us that as a leading indicator of inflation, there's going to be a problem?
That's to be determined, but that's not why the Federal Reserve would either hike or hold in September. That might be a 2027 issue, but not for the September meeting, probably not even for the December meeting. So still a close call. We still have a couple of data points to go, as Steve was pointing out before that September 16th meeting. But they're not going to hike rates in September because of a CapEx story. They wanted to see, I think, more evidence that the spike in energy prices are feeding into broader goods. And Kelly, we're just not seeing that. Again, 2.5 core CPI is where we were before the war. That's where we are today.
So we can put your investment hat on, which is the hat you're wearing anyway. But as we've been talking a little bit about the data, then you have the market, which has been rip-roaring, incredible. I had a friend the other day go, are we at 7,700 already? I mean, if you haven't been watching every day, you might wake up and go, wow, it has been really strong.
Yeah.
Is that going to last? Is there anything here that worries you, or are you getting good confirming signs from some of the earnings last night?
I think the latter, confirming signs. So when I rank things that can kind of keep you up at night, right? It's the Iran war, it's the Federal Reserve either losing independence, like people were talking about after the last press conference, or losing credibility more than independence, or earnings. I think the earnings story, Kelly, is one of the most fundamental stories that you have to then offset all of the emotion that can come from, is this euphoric market trading at all-time highs? We've seen 25 all-time highs this year already. I think we saw 39 last year. I think that this financial condition story that we're in right now, Federal Reserve, again, maybe hiking once, that's already priced in. I don't even know why we worried about that. Right?
But David Katz was on this program yesterday, and he, while acknowledging the strong earnings growth, that obviously is the underpinning of everything going on here, but he said we often don't see the strongest market stretches at the same time that we're seeing kind of peak level of earnings growth.
Yeah, I think I'd be more worried, though, if the multiples were stretched. So when you look at those Mag 7 versus 493 multiples, that valuation story, we're kind of decade kind of tights on that valuation premium. And I also think, like, if you just look at the SOX index up 19% since July 29th. That SOX index, even like the price to earnings growth, that story, you're still cheaper than the 25-year average. So I think I'd be more worried if the valuation was running ahead, but it's not. It's not keeping up with the earnings growth. And that 5% 10-year Treasury that I think would really make us worried, either driven by Fed credibility or by spiking energy prices, that just seems like a low probability event in the near term, which I think pushes the market to all-time highs.
The other thing that happened at the end of July was 475 on the 10-year. So as we've come down a little bit, that has underpinned what you're talking about. You're still in large cap U.S. growth.
Still in large caps. All like financials. Financials are another big story for us, based on deregulation, loan growth, earnings growth, right? Repurchases. I think financials make a lot of sense for us, along with the tech trade and along with things like industrials, Kelly. I think this is just a really good time to invest.
You make it seem so easy, Don't overthink it, Phil says. Thank you. Yes. Really appreciate it. JP Morgan's Phil Camporelli. Coming up, it's the deal of the day. Bob Iger and Josh Kushner buying a controlling stake in the Los Angeles Lakers at what we are reporting is a $12.5 billion valuation. We'll have the details, the impact on the sports, and maybe political landscape next. Plus, former NASDAQ CEO Bob Greifeld, he's back to weigh in on the CME's new compute futures contracts. Look forward to hearing his point of view. The Exchange is back after this.
That's exactly what every Williams-Sonoma customer has, thanks to Salesforce. With Agentforce, every meal's perfected, every table set, every holiday's handled. Recipes, techniques, tools, every answer at your fingertips. This is how Williams-Sonoma found the ultimate recipe for customer success.
Introducing Flex Seal Epoxies. Just need our ultimate putty to unleash incredible bonding power. Just one small stick of our ultimate putty can lift this 4-ton pickup. And when you mix our extreme liquid, it virtually welds these pistons together. It has the strength to lift and hold this giant 8-ton semi. It's the ultimate in extreme bonding. Get Flex Seal Epoxy at FlexSealProducts.com.
I'm Josh Brown. The CNBC Pro subscriber is going to get the most in-depth and the earliest look at the stocks that we believe are the best stocks in the market.
Join Pro for exclusive access to Josh Brown's best stocks in the market.
Watch top movies and series for free with Fandango. Stream iconic action hits like Armageddon, Speed, and Predator. No subscription or login required. Download the app and start watching for free today.
I like winning on the field, but it's even more fun winning on Deal Dash.
Lori won $2,000 Tiffany earrings for just $1, and Joseph won an iPad for just $6. There's millions of fast auctions. So try today at DealDash.com for $50 of free credit and your first win guaranteed.
From those first moments of connection or bringing your team together to giving back where it matters most, 4imprint provides expert support, quality products, and on-time delivery. For every moment your brand matters, visit 4imprint.com.
4imprint, for certain.
There's likely over 300 contaminants in a regular glass of your drinking water. That's why we created Sans. Reverse osmosis is the gold standard in removing all of the harmful contaminants hiding in the water you drink every day. Chlorine, microplastics, funky tastes and odors, and Sans just sits on your countertop. No installation, no plumber, just pure, clean water in a glass pitcher. Because a healthy home starts with healthy water.
Welcome back. A stunning turn of events in the sports world today as Bob Iger and Jared Kushner's group has announced it's purchasing the Los Angeles Lakers for a record-breaking $12 or maybe $12.5 billion. This is just months after the team was pursuing, well, the team, I mean Iger and Kushner, they were pursuing a Las Vegas NBA expansion team. It also comes less than a year after the Lakers were previously sold at a price of $10 billion. With us to discuss is Sal Galatioto. He's the president of Galatioto Sports Partners, which has acted as a financial advisor, underwriter, and agent for more than 135 sports transactions and orchestrated one of the largest deals ever for an NHL team 2 years ago. Sal, it's great to have you here.
It's my pleasure.
There's a few unusual things about this deal, wouldn't you say?
Well, look, I've been doing this since 1995, and I have never seen a team trade in less than a year. So that's unusual in and of itself. The Lakers, as we all know, is an iconic brand. It's incredible. And it's a little unusual that it will be sold without an auction. But the price is very robust. I mean, $12.5 billion, if that's the price that's being reported, is a very strong price. The team was only sold about a year ago for $10 billion, and that reflects the strength, I think, of sports valuations across the leagues in general and in the NBA in particular. I mean, the level of demand is extraordinary right now.
Sal, you mentioned, and I've heard from people in the industry the same idea, which is it's extremely unusual for a team of this magnitude to be sold without an auction.
Yes, I mean, look, I've never seen it. And like, as you said, I've done many, many, many transactions. It's usual to have an auction and, you know, to get interested parties in the market, to create competitive tension, to drive price. But that wasn't the case in this one. Still, a very strong price. Well over $12 billion is an incredible number. When I started in this business, you could buy an NBA team for $80 million. And people have been telling me since 2002, 2003 that we're in a bubble. And I guess we're not. I mean, I see the valuations continuing to go up.
So do you know where this consortium is getting the money? Because the previous buyer, who was under some federal investigation over his tax issues, that money was said to be coming from the Saudis. Again, I don't know. Do you know in this case who is actually bringing the $12.5 billion to the table?
That I don't know. The deal's just been announced, and look, I mean, Bob Iger is a legendary figure. Josh Kushner is a very successful young entrepreneur. I know they were putting money together to get ahead of the bid in Las Vegas, potentially, for an NBA expansion franchise. They must have numerous other investors, I would assume. So, but to give you details about Where they're getting the money, that's above my pay grade.
I ask because there are some conspiracy theories about the unusual nature of this. You know, here's a seller who is under some pressure, selling to the president's son-in-law's brother, if I have that right, and, you know, who is now going to be the face of the league. Do you think that that buys him some goodwill from those who are currently investigating him?
That's impossible for me to say. That question is not a sports valuation question or a sports question, and that's way beyond my purview.
Understood.
I have no idea.
Understood. So this now being the case, Sal, I guess the I don't know if there's any other questions you would have about the deal. You know, it is a $2.5 billion more than it was sold for last year. That was already seen to be a rich valuation. But again, people, they want to sell to whoever they want to sell to. And it looks in this case like Iger and Kushner are not going to pursue a Vegas expansion team. Perhaps, again, this is undeniably a trophy asset, LeBron or no LeBron.
Look, the Lakers are a legendary franchise. I mean, they're one of the top 4 or 5 franchises in sports, not just North American sports. The level of demand right now that we're seeing for sports assets is incredible. As I said, I've been doing this since the mid-90s. I've never seen this kind of demand. We're in the market selling limited partnership stakes in 2 NBA teams right now, in a NASCAR team. We just sold a piece of a Major League Baseball team. We just closed on a very successful capital raise for the A's for their new building in Las Vegas. And I can tell you that the level of demand is not slowing down.
Last question, Sal, do you think if it had gone to an auction, it would have sold for even more?
Look, I'm a big proponent of having auctions always because it creates competitive tension. I would be speculating. Do I think it could have? Maybe. I can give you a firm non-committal on that.
Or maybe you know someone who could, who could be part of that sales process. No. Sal, really appreciate. I know, look, it's a busy day, a last-minute story. It's great to talk to you. Thanks for making the time.
My pleasure. Thank you for having me.
Sal Galatioto joining us there. Coming up, cuts to the capital gains tax could be back on the table, at least according to the president. Will the proposal give the GOP a boost or not ahead of the midterms? We'll talk about the details and impact next.
Advanced nuclear fuel, an important input into economic growth going forward.
The innovation, the ingenuity, and the dedication of this team, I couldn't be more excited about the future of this business.
Are you retired or planning to retire and worried your portfolio won't meet your long-term goals? Fisher Investments can help. You'll get a team of professionals specializing in investing, retirement income, Social Security, tax optimization, estate planning, and more, working together for your future. If your portfolio is $1 million or more, we have up-to-date guidance you need now.
Call or scan for your free Smart Retirement Action Kit. 3 essential guides to help bring confidence and clarity to your retirement planning. Call 1-800-280-3659.
Unlike some money managers who sell products to earn commissions, we do not. We have a transparent fee, structured so we do better when you do better.
Don't miss your free Smart Retirement Action Kit. Call 1-800-280-3659.
As a full-time fiduciary, our goal is to grow your wealth and help you retire comfortably.
Call or scan for your free Smart Retirement Action Kit today. Call 1-800-280-3659.
Do you feel stuck with an unsafe, outdated bathtub you hate? Skip the weeks and months of messy, costly, unpredictable construction and choose a proven jacuzzi bath remodel in as little as 1 day.
I feel very safe as I'm taking my shower.
Right now, we're waiving all installation costs, plus no interest and no payments for up to 1 year.
I feel safer. I don't have to lift my foot up over a tub anymore.
Choose from custom designs, including my Christina Preferred collection. And you know I've got to talk accessories. I love the handheld shower heads, grab shelves, and custom seats. Plus, a lifetime limited warranty from Jacuzzi. You could be one day away from the shower transformation of your dreams. So call now.
Call 1-800-384-1407 to schedule your free in-home consultation with our design experts. We'll give you a quote that's good for a year. We're waiving all installation costs, plus no interest and no payments for up to 1 year. Call 1-800-384-1407 today.
Life insurance is a wonderful asset, but what happens when you no longer need it or you can't afford it any longer? Meet Tom and Susan. They chose to sell their policy for $200,000 cash. Now they're sailing through retirement. If you own a life insurance policy of $100,000 or more, you may be able to sell it for cash. Get an instant estimate at ovidlife.com or scan the QR code on your screen. Or call 1-800-502-0100. That's 1-800-502-0100.
President Trump is reportedly considering a push for a capital gains tax cut in hopes of gaining a boost for Republicans in the midterms. Megan Casella joins us from D.C. with the latest. Hi, Megan.
Hey, Kelly. So this came about because National Economic Council Director Kevin Hassett was discussing various ways of cutting capital gains taxes with former NEC Director Larry Kudlow on Fox Business on Tuesday. Hassett said that President Trump is looking for promises to make to voters of what the administration would do if Republicans have power in the future. So he said you could expect a lot more policy between now and the midterms. And Kudlow then replied that he had spoken to the president, and he says the president likes the idea of indexing capital gains taxes to inflation and of a bigger exemption. Now, I asked the White House about this, and a spokesman told me any policy announcements will come from the administration directly. So still some gray area here, but a couple of things to note on the proposal. This is very preliminary, something that the president is considering asking Congress to do. Congress, though, is not likely to tackle something like this ahead of the midterms, especially because the calendar just isn't in their favor. Lawmakers are only in town for about 3 weeks between now and November, and because it's really costly, possibly carrying $1 trillion price tag, according to Yale Budget Lab. Some conservative senators and analysts have argued in the past that Treasury could take some action without Congress to index capital gains to inflation, but that would be on shaky legal grounds and would very quickly, Kelly, end up in the courts.
People have a lot of capital gains because the markets have done well, no doubt a tax cut, but then you'd have to sell, and I don't know if anyone wants to sell right now. Right. Megan, thanks. Megan Casella, appreciate it. Let's get to Brandon Gomez now for the CNBC News Update. Brandon?
Hey there, Kelly. The World Health Organization warns Congo's Ebola outbreak could become the deadliest in history, surpassing the West African epidemic from 2014 to 2016 that killed more than 11,000 people. The Congo has recorded over 4,300 cases and 2,000 deaths. Officials say the rare strain has no approved vaccine or treatment, while conflict and misinformation are slowing containment efforts. New Jersey just joined a growing push to curb social media addiction among children. Governor Mikey Sherrill signed a law requiring platforms to give users under 18 maximum privacy settings and limited targeted ads, infinite scrolling, and excessive notifications. At least 20 states have proposed or enacted similar restrictions. And tonight's Powerball jackpot has reached an estimated $1 billion after another drawing produced no grand prize winner. A winner could choose the full amount through a 30-year annuity or take roughly $433 million in cash before taxes. The odds are about 1 in 292 million. I don't know if you're feeling lucky, Kelly.
I can't let this pass without comment. Don't do it, people.
I know.
Don't do it.
I
Don't
never
buy
have
the
any luck
tickets.
either.
You know, don't do it. Don't do it. Even if you win, it's a curse. Anyway, Brandon, thanks.
Thanks, Kelly.
Coming up, we'll talk to former NASDAQ CEO Bob Greifeld about the lottery. About AI computing power becoming a tradable asset class. The CME is set to introduce futures contracts allowing traders to bet on the rental costs of NVIDIA's GPUs. We've got details on that next.
The joy of traveling well is feeling at home, yet a million miles away from home. Discovering new flavors or savoring the ones you already love. Not knowing what lies beyond the horizon, but knowing what matters most to you. This is the joy of traveling well. Oceania Cruises.
Hi, folks. By now you've been hearing a lot about investing in YRefi. Why invest in YRefi? Well, you have the freedom to take your monthly interest as income or reinvest it, whatever you choose. Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. YRefi. You'll like investing in America's future.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
So we called Coventry Direct.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash. Even a term policy. Call Coventry Direct to find out if you can sell your policy.
It couldn't have been easier to sell our policy.
Coventry has delivered more than $6 billion to policy owners for their policies.
And it only took one phone call to get started.
Don't sell or let your policy lapse before calling Coventry Direct to find out what it's worth. Visit CoventryDirect.com. Call 800-234-2600. That's 800-234-2600. Coventry Direct, redefining insurance.
Welcome to Closing Bell Overtime.
Get the essential post-market edge, after-hours action, and opportunities.
Big earnings, all due in the next few minutes.
The economic impact is just beginning.
Closing Bell Overtime, 4 p.m. Eastern, CNBC.
Welcome back, and look at shares of NVIDIA up another 3% today. That probably puts them around 20% year-to-date gain territory after their big announcement this week that they are lining up $500 billion in funding commitments to help drive the adoption of compute as an asset class. Does our next guest think this is a good idea? Let's bring in Bob Greifeld, the former NASDAQ CEO, who is the co-founder of Cornerstone Financial Tech Management and a CNBC contributor. Bob, it's great to see you again. What are your thoughts?
Well, I have a few. So one, when you think about it, the stock should go up because in a certain way, they've lessened their risk, right? So they started with a situation where they're providing product to the customer's paying for it. Then they're in the business of vendor financing. They have widened the circle where there's more people involved with this financing. And what I like about it is the third parties involved probably will do a market rate setting in terms of what this this asset should price at. Should it be 11% interest rate, 12, things like that. There are things about it I don't like, but certainly I think from the company's point of view, it's a good thing.
What are the things you don't like about it?
So one, there's more people in the circle and there's points of leverage in every part of the circle. So we don't really know how much leverage is in the system as we go through that. But I also think when we see the risk, I haven't heard people talking about this. We think about LLMs and they're a phenomenal advance, right, for society. But when they came out with the LLMs, it's obvious they were trying to be effective first and not efficient. So I would think that the compute power required to do a given task in an LLM is going to go down 100-fold. And what always stays with me, when I was in grad school taking, computer programming class, the professor had us write a program, and we first wrote it, and it really took a supercomputer to run it. And he said, your job, if you want to get an A, you have to make this program run on a TRS-80, a Trash 80, the Radio Shack computer back in the day. And we weren't that talented, but most of us got the ability to take it from a supercomputer use of resources down to a microcomputer. So I think LLMs over the next decade might have a 100-fold decrease in the amount of compute power they require to get a task. That's hard to put in a model when you're lending on equipment over that period of time.
And speaking of the equipment, and some have raised concerns about how valuable can it continue to be. Here's what the CEO of CoreWeave said about that very question on our air earlier.
One of the debates that has followed this industry has been on older generations of GPUs. And what we have, I hope, put to bed here is that those older generations of GPUs are going to have a longer useful life than anyone anticipated. They are going to contract for a longer term, and they are going to contract at a higher price. And we already are seeing that flow through our platform.
And that's something, Bob, that Srini Pajuri of RBC told us yesterday, that these A100s NVIDIA introduced in 2020 are still being used today. So does that help to allay some of those concerns you talked about?
It does. I'm in violent agreement with that. I believe the useful life of these computers will be longer than people were talking about, just a couple months ago. But the two other factors I want to highlight, one is obviously the cost of doing that, running that software will go down dramatically over the next decade. I'm making a prediction, a hundredfold decrease. The second thing is LLMs today are strictly about the data center, but each of us have one of these phones in our hand. There's 7.6 billion of them out there. That has a lot of compute power. So over the next decade, you're going to see edge computing be a real play in the AI race. So certainly in the next number of years, we'll see phones come out that are AI native that can do a lot of the LLMs or SLMs, whatever you want to call it at that point in time, on the device itself. So when I think about lending to data center based, right, today it's only game in town. So you have two fundamental drivers over the next decade. The software gets more efficient, reducing dramatically the use of hardware per given operation. And second, the devices in your hand will become an effective compute. There's a lot of computing power in these devices today, and that's going to be nothing but increase in the time to come.
Finally, then, we're probably going to now see, and there have already been these deals in the market. It's not as if it's that new, but the asset-backed finance space, this is kind of what we're talking about. There's everything from airline lease agreements to, I think, credit card points. And there's lots of different types of things in this category. It has a long track record and so forth. Maybe this is just the sign of the times that compute kind of has a place in the asset-backed finance space. I mean, especially if it's only 2 or 3 year deal backed by rentals. I guess the real risk would be if the party on the other side of that defaults. Otherwise, they're probably going to meet their obligations. Maybe it depends, again, if you're going to be an investor, and investors will be pitched on this, retail, pension, institutional, to make sure that the person on the other side is someone that you think is not in danger of failing to make those payments.
Well, let's say the company executes properly. I'm saying, let's say we all have all good actors in the space. The leverage is not an issue. I certainly think the computers can live a long period of time. It's just hard to predict what happens over the next decade. And are those GPUs that are sitting in data centers today, are they as important 10 years from now? I'm giving you 2 reasons why they could maybe not be. One is the compute required for a basic LLM goes down by 100-fold. I would feel pretty strongly that the brilliant programmers can do more than we did in our course back 30 years ago. The second is they're going to have competitors. The competitors are going to be in your hand where you can run a lot of these functions. So if you're lending today on the data center piece, I agree. The computers will last. The question is the world will change so much over the next decade. So if you're lending for 2 to 3 years, you can kind of see the end point of that. But if you're lending for 7 years, who can predict what this technology is going to be like in 7 years?
All right, finally, are you a lotto player or not?
What's that? I am not.
There's only one right answer to that question. And if you thought launching compute as an asset class was crazy, did you know the CME is launching hockey futures as well?
I am keenly aware of that. And you have to understand, CME is a derivatives exchange, and they can put a derivative on anything, right? They don't actually deal with corn. They deal with something representing corn. So they can certainly deal with an expansive view of the CFTC, which they have today, something related to that. And I think the bigger question, not for today, is when does this kind of investing converge with gambling? And to me, the tip of the spear is not so much the hockey piece, but if you have a same-day option, right, a same-day option, Kelly, right, that day, and it expires either worthless or worth money, how is that investing and how is that not, in sports gambling?
I think that is an excellent point. In fact, the very place that we should pick this up, because that is a question hanging over the markets. Bob, it's great to see you as always. Thanks.
Thank you, Kelly.
Bob Greifeld. Coming up, Google, speaking of strong, powerful phones, they're unveiling their latest lineup of Pixel phones today, and they're showcasing the AI capabilities Bob was just talking about. Of course, it comes ahead of Apple's new phone launch next month. We'll have all those details next.
Economic growth
growth going forward. The innovation, the ingenuity, and the dedication of this team, I couldn't be more excited about the future of this business.
If you're on Medicare and you get this, you could end up with this. Unexpected out-of-pocket costs, which for those on Medicare or soon to be is a good reason to take charge of your health care. So consider this, an AARP Medicare Supplement Insurance Plan from United Healthcare. Why? Because Medicare alone doesn't pay for everything. And what it doesn't pay for, like deductibles and copays, could really add up, even thousands of dollars a year. Medicare supplement plans help by paying some of what Medicare doesn't and making your out-of-pocket costs a lot more predictable. Call United Healthcare today and ask for your free decision guide. Learn more about plan options and rates to fit your needs. Now, if you like this, greater freedom, you'll love that Medicare supplement plans have no networks and no referrals needed. See any doctor, any specialist, anywhere in the U.S., as long as they accept Medicare patients. These types of plans also give you more flexibility when traveling in the U.S. Your plan goes with you, anywhere you go in the country. Even better, Medicare supplement plans with the AARP name are plans endorsed by AARP. Call United Healthcare today for your free decision guide. So, if you're on Medicare and want less out-of-pocket costs and more peace of mind, consider adding this, an AARP Medicare supplement plan. Take charge of your healthcare today. Just use this or this to call United Healthcare about an AARP Medicare supplement plan.
While you are watching this, a healthy dog is being killed. The big foundations spend millions on salaries and overhead, and not enough on saving the dogs. iPaw was founded to change that by legendary activist Carl Icahn.
When there are thousands of dogs being killed every day that could be saved, the system is broken.
When you donate to iPaw, every dollar goes to save the dogs.
We're matching your donation right now.
Scan or go to iPawRescue.org.
This week on USA, the temperature rises during Rivals Week. Tonight, our doubleheader kicks off as the Tempo look to make a statement in Dallas. Then, the Sky go up against the Valkyries. Rivals Week, tonight at 8 on USA.
Google is launching a new Pixel phone lineup today. Let's see if I'm going to make the switch. Mackenzie Sagalos has more in New York City. Mackenzie?
Hey, Kelly. So Google's new Pixel lineup includes its latest foldable, sticking with a taller design as Samsung moves toward a shorter, wider shape, similar to what Apple is expected to introduce this year. But overall, Google isn't making dramatic hardware changes. There are upgrades, including a more efficient chip and new camera features, but software is really the headline, making the Pixel 11 a litmus test for whether Gemini Intelligence can drive upgrades. Now, the biggest change is Gemini becoming this sort of agentic layer on top of the operating system, working between apps in the background to call a Lyft while it orders dinner for you. Google's devices chief Rick Osterloh telling me exclusively that Google sees its edge over Apple in the Gemini ecosystem, really controlling the model, Android, and the services underneath it. And Google gets to make the case first ahead of Apple's September hardware event.
It's not necessarily the top yet. However, we think that's really going to change. As these devices become much more simple to use because of the agentic capabilities, we think that it's going to grow in importance and perhaps someday become the primary way that people use their phones, their laptops, and other devices.
And the scale here is much bigger than Pixel. Android runs 2/3 of smartphones globally, and Gemini already has more than 1 billion monthly users. Kel?
Some of those features are, they sound enticing. The photo selection one, some of the others. So it's a reminder of some of the innovation out there in places other than Apple. There you go. And there's a look at the fold. So wait, Mac, show me real quick. Does it folds open and there's the screen? How does it work?
Yeah, so when you have it closed, you can see the screen here, and then when you open it up, it kind of gives you that widescreen experience. But it's just, I mean, Gemini Intelligence, it does give us a preview of what we're expecting to see with Siri AI. Of course, that will be powered by Gemini. But Rick Osterloh, their devices chief, really talking up some of the more bespoke elements that you'll get through a Gemini Intelligence experience. And of course, Pixel sales not as big as the overall Android ecosystem, so a really large installed base there.
I look at it, I'm like, I don't know if I'd ever, but I also didn't think much of the iPad, so don't listen to me. Mackenzie, thank you very much. Mackenzie Sigalos. Coming up, if your portfolio is running out of steam, you may want to consider adding some energy. That's a hint, and we're not talking fossil fuels or renewables. It's a segment of the market that's seen consistent growth and momentum that our next guest says will continue. You're looking at one of his top picks in the space, up 19% this year. The reveal is next.
Tech Check is sponsored by Comcast Business, powering possibilities.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
So we called Coventry Direct.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash, even a term policy. Call Coventry Direct to find out if you can sell your policy.
It couldn't have been easier to sell our policy.
Coventry has delivered more than $6 billion to policy owners for their policies.
And it only took one phone call to get started.
Don't sell or let your policy lapse before calling Coventry Direct to find out what it's worth. Visit CoventryDirect.com. Call 800-234-2600. That's 800-234-2600. Coventry Direct, redefining insurance.
Never considered myself an alcoholic, but drinking affected my job, health, and relationships. A powerful medication helped me take back control. Now I no longer feel the urge to drink, and the same pill that helped me could help you. Text CNBC to 710-710 to learn more.
From senior to childcare to pets and more, the new Care.com makes it easier than ever to find the care you need. And you don't have to hire just anyone. You can find a background-checked caregiver who's the right fit for you. Join now and find care at Care.com.
Join the club and let me teach you to become a better investor.
His whole life, he's done whatever it takes to be successful. And he brings all of that to you in the club.
Join the club and get a free copy of Jim's latest book. Go to cnbc.com/KramerBook.
Fire resistant, it's exactly what we wanted. TimberTech, it's everything wood should be.
You shouldn't have to sacrifice your well-being for your workplace. That was the idea behind the original Veridesk, and it transformed offices all around the world. It proved that when you sit, stand, and move more, you can work happier and healthier. So whether you're furnishing a whole office or outfitting your home office, Very has everything you need. Our best sellers are on sale at Very.com.
I like winning on the field, but it's even more fun winning on Deal Dash.
Lori won $2,000 Tiffany earrings for just $1, and Joseph won an iPad for just $6. There's millions of fast auctions. So try today at DealDash.com for $50 of free credit and your first win guaranteed.
Move over, tea, coffee, and even iced coffee. The hot new beverage trend is refreshers. If you're not familiar, these are often cold, fruity beverages with a kick of caffeine in them, and it's helped the energy drink category get some new life and a new cohort of female fans. Our next guest has some ideas of how investors can play this trend. Let's bring in Citigroup analyst Filippo Falorni. Filippo, it's great to see you. How do we get here?
Hi, Kelly. Thanks for having me on. Yes, look, we've been long-term bulls on the energy drink category. It's had consistent growth in the U.S., but more recently, what you're seeing is really a generational shift in caffeine consumption. We did a recent survey of 2,400 U.S. consumers, and what you're seeing is that consumers between the ages of 16 and 24 years old, they're using energy drinks as their primary source of caffeine in 30% of respondents. If you look at coffee, it's only 27%. And that's compared to consumers 50 years old and older, where coffee is 60% of their caffeine consumption. So pretty material generational shift that to us bodes pretty well for the category.
Yeah, I mean, to me, it's a sign of the end times. I respect the choice, but who doesn't want the coffee? It's fine. My siblings, everyone's jumped the shark here. So you have some great data that shows new consumers that started energy drinks in the past year, 58% female. And these are high-margin drinks, right? Here's what Starbucks was saying. Brian Nichols said, we're seeing the refresher business play a really nice role morning to afternoon. The other officials there are talking about a great quarter, great occasion for the afternoon beverage. You're approaching this more from the packaged goods side. Monster was our mystery chart. Why is Monster a good investment for you? Who else could benefit from this trend?
Absolutely. Monster, look, it's been one of our top picks for many years. Consistent growth both in the U.S. and internationally. Their business is about 60% U.S., 40% international. In the U.S., they've done a phenomenal job at taking share from Red Bull, which used to be the market share leader. Now Monster and Red Bull are neck to neck at 35% market share. And internationally, they're distributed by the Coke distribution system. So they have a wide reach in international markets, and they continue to gain share in many markets around the world. So their innovation capabilities are probably some of the best in my coverage. And again, the market share opportunities both in the U.S. and international remains pretty wide.
This is also a stock that's doubled over the past 2 years, outpacing the S&P. The category is putting up 8% annual growth. Keurig Dr. Pepper, are they trying to get in on this?
Yeah, Keurig Dr. Pepper has a growing energy portfolio. So far, it's still pretty small as a percent of the total company, but they're getting to about 9% share. They built a lot of different brands. Some of them are owned, like Ghost, which they acquired a year and a half ago. And some of them are partner brands like C4, Bloom, and Black Rifle Energy. So right now, they're about 9% market share in the U.S. energy drink category. They continue to grow, but importantly, they're about to separate their business between a coffee company and a beverage company. And the energy drink piece will become a very important driver of the beverage company going forward.
You like Celsius as well. I mean, again, I do say that this is a category I assumed was going to be a trend, kind of a fad, and they found new ways to make it work. And maybe Costco could be a beneficiary. My producer, AJ, walked by and grabbed a Kirkland refresher out of the fridge. He probably has a different term for it, before beginning this show. So they know when they see a strong trend, they're jumping on it too.
Yeah, absolutely. I mean, look, we've seen a lot of different challenger brands. Celsius is probably, over the last 5 years, has been probably the most successful of the challenger brands. They now acquired Alani Nu as well, so they have the Celsius brand and Alani Nu, which skews younger female consumers. They're now going through some transition in distribution from Anheuser-Busch to PepsiCo, so they've had some misexecution from the distribution standpoint, but from a branding standpoint, it really is positioned very well. And you mentioned Kirkland. Private label has never really been able to get significant share within the energy drink category, but obviously Costco has significant reach and significant appeal. So we've seen in our survey increased interest in
I can see why the coffee and tea companies are in this. If this is where people are getting their caffeine now. Filippo Banks, Filippo Falorni, Power Lunch is up next. Thanks for watching.
Repair Clinic came to AmericanEagle.com with a pressing need for digital expertise to serve our expanding parts and software business. AmericanEagle.com optimized our website, turning our proprietary data, content, and diagnostics into a powerful platform that reaches more DIYers, pros, and enterprise clients than ever before. If you're looking for an agency who can solve your complex digital challenges, contact AmericanEagle.com today.
Meet Sabrina Gonzalez, Walmart pharmacist extraordinaire. In her 9 years at Walmart, she's seen it all. The sniffles, the scrapes, sunburns, the really bad boo-boos, and the patients who need a little extra time to understand their script. Even the serious stuff. When the people you love need ongoing care, Sabrina's the one they count on. One of the 15,000 plus Walmart pharmacists in communities just like yours. Who knew?
I knew.
Wherever news and ideas meet, wherever earnings reports and saved orders intersect, the all-new Fidelity Trader Plus is there. giving you the freedom to trade how you want with your preferred tools, customized charts, and streaming data. So you can start a trade idea on one device and execute it on another. Meet our most powerful, consistent trading platform yet. Meet Fidelity Trader Plus.
Today, kids are navigating an always-on world, consuming more information than ever before. Strengthening youth mental health starts with ensuring kids have strong digital and media literacy skills. Teaching students how to think critically about the content they see online helps them navigate digital spaces thoughtfully and intentionally. We need to teach media literacy in every school. Youth mental health is complex, but media literacy empowers educators and parents to keep kids safe.
Stocks now back to being less than 1% from new record highs. Welcome to Power Lunch, everybody. With Kelly, I am Brian, and a special guest host, our friend Sarat Sethi, managing partner Douglas C. Lane, joining us for the entire hour with real-world ideas just for you. Also happening, inflation easing and a wave of strong tech earnings, reigniting demand for chips and memory, and what energy-producing stocks could produce you some investing energy of their own. The head of Evercore's Power and Utility Research is here.
And we have some key voices to help navigate all of this. Liz Ann Saunders, the chief investment strategist at Schwab, and Torsten Slok, the chief economist at Apollo. They will both be joining us coming up. But first, Sarat, before we dive into all of that, so much, I mean, we haven't talked to you about the NVIDIA deal this week. AI financing, Iran, the latest bear of, whatever's going to happen, energy, inflation. So taking all of that in, what do you think is most important for investors to focus on?
Well, I think the AI trade keeps on continuing, and you're seeing kind of now NVIDIA going into really using the credit markets, borrowing, and more as to kind of supporting their key customers. And we saw earnings, strong earnings last night too. So that trade is still going on. What's interesting is when that trade happens, certain sectors kind of fall off. So we need kind of all the sectors or most of the ones to start moving together, but we just haven't seen that at one point. One moves and the other one moves the other way.
Yeah, and so look at the market today and the names that are jumping, which some of them had been under pressure, no doubt, but right. CoreWeave, Supermicro, yeah. Nebius is up 27% after earnings. Lumentum is jumping. The memory names, which that had traded been in down a lot from the highs, that's back up 7 or 8%. So what do you do? What does that tell you?
Well, part of that is going to be short covering too, right? Because you did have some of the momentum kind of going against these companies too. But in the meantime, kind of this is, if you own these, you're feeling very happy, but I wouldn't chase them. I kind of look at some of the laggards today and say, hey, healthcare's out, financials are out. Maybe if you wanted to buy some of those in there, or just as they kind of trade down to get some more exposure in there.
Because valuations, they are not rich. We talked about it a bit on Squawk Box this morning. If you look at some of these tech earnings, you could make the case for S&P 500 price to earnings at 20 times, which is historically not high, not low, no. But anybody with a rational mind could say that's a fairly fair valuation.
Hey, listen, NVIDIA, Google, some of our top holdings. The question is, are these peak earnings? Are we getting closer to peak earnings? And what's the growth rate? What is the second derivative going forward for these earnings for the next 3 to 5 years? That's what the market really cares for.
Well, how do we do this growth rate next year? We got these numbers this year, and we got a comp against these numbers next year. Why am I doing so much of this?
And that's the issue, right? If they don't grow as fast as they have for the last year or the last 24 months, the market then automatically starts discounting it. And we've seen when multiples compress. I mean, hey, we've seen it in healthcare, we've seen it in financials, we've seen it in parts of technology. Look at software companies that have gone down 40 to 65% just on multiple compression, and earnings have not changed. It's just what happens is investor sentiment changes. And if sentiment moves the other way, like it did for memory stocks for a few weeks there, you had, stocks that were up 700% were down 50 to 75%. So we have to be very careful as investors, make sure that you're allocated properly, but don't chase. And that's when people get into trouble, right? It's when do I kind of say, hey, should I be buying these stocks when they're at their peak or close to it, or do I kind of nibble in at these levels and then kind of buy more later on? But be diversified, because there are sectors, not just tech, that are trading at very reasonable valuations as well. that have consistent growth rates, recurring revenue, and I think that can do well with interest rates where they are, and other factors with oil where they are, things that could actually dent the economy or slow down kind of the growth rate.
All right, well, let's add a voice to this conversation. Our friend Torsten Slok, he is Apollo's chief economist. Torsten, I would imagine you were pretty happy with that inflation read today.
Absolutely. This is very, very good news for the Fed and for Kevin Walsh and for the 9 members who voted for not raising interest rates at the last meeting, because now we just got a relatively soft inflation print. Core inflation is still 2.5, so it's still above the Fed's 2% target. Headline, of course, is above 3, so that's definitely also above the Fed's target. But at the same time, if you combine that with the employment Friday, yes, there were some issues with local government hiring and education. There were some issues about the World Cup. But taken together, these things are certainly arguing for that it was a good idea that the Fed did not raise interest rates last week.
Torsten, Nancy Lazar was on last hour, and she suggested that there might be too much liquidity in the system, pointing to, again, some of these AI trades, sports valuation levels, literally money supply, loan growth, demand for loans that we've been seeing. And is all of that a leading indicator for sticky inflation? What do you think?
Well, there is an emerging new line of thought where more people are exactly as you're saying, Kelly, starting to talk about that maybe we should be looking at measures of credit growth, measures of growth in bank lending, measures of growth in lending in private credit, and measures of growth of lending more broadly, both to consumers and to companies. Those indicators are indeed growing fairly rapidly, but at the same time, what really matters the most for the Fed is indeed the dual mandate, namely inflation and the labor market. And on that front, I still think that the data that we've been getting more recently, especially the 2 more soft inflation prints, they are giving us a lot of confidence that the Fed may not have to hike rates this year. And therefore, I think the market is wrong at the moment to price in hikes, because the economy is actually doing quite well, while at the same time inflation is gradually drifting down towards the Fed's 2% target.
One source of that inflation, people say, is fiscal spending. And we are getting the latest scorecard right now. Sit tight, guys, for just a second as we go over to Washington. The federal deficit is out with its latest, not reporting itself. The Treasury is out with its latest monthly report on government spending. Megan Casella does have the info. Megan, what can you tell us?
Kelly, that scorecard is here, and it is not looking good. The federal budget deficit continued to grow in July. It's up an adjusted 5% so far this fiscal year compared to last. So now it's at about $1.8 trillion. That is larger than the deficit for all of last year, with 2 months still left to go. Now, for the month of July alone, the deficit came in an adjusted $50 billion larger than last July. So some pretty rapid growth here as spending outpaces revenue. Both of them are at all-time records for the fiscal year to date. Now, among the biggest categories for spending, defense and the military up 6% this fiscal year amid the war with Iran. Spending on interest on the debt is up 15%. Treasury has already spent about $1.2 trillion on interest alone this fiscal year. Now, on the revenue side, corporate taxes are coming in pretty weak, 18% lower so far this fiscal year compared to last. And then there's the tariff angle. Tariff refunds were larger than tariff revenues in July, even with the administration putting new duties in place. So that means on net, tariffs were about an $8 billion drag on the budget for the month of July. Kelly?
Nearly $1.2 trillion in interest on the debt. The fiscal year's not even over. I think we got, what is it, September? We've got a month or 2 to go. Megan, thank you very much. Megan Casella, worrisome, terrible. I mean, let's just keep pounding the table about how bad it is, Sarat. And I'm not sure that the market, it's not really, we were talking to Ed Yardeni about this yesterday. He said he expects a 5% 10-year is pretty normal. There's nothing here that's telling you the market, or I guess the public, has a big problem with this.
Well, I think you see that, but it'll be interesting if and when the bond vigilantes actually wake up. And if that happens, that could scare the market. But the other side of it is you're not really going to have rates come lower. So now you have to kind of put this into your formula and say, hey, rates at 4.5%, 5%, very different from the last decade when we had rates at 0 to 2%. So how does that affect cap rates in real estate? How does that affect your valuations going forward? And also for, some of the tech stocks also that have future cash flow. So I think as the market kind of socializes this, it'll be interesting to see how valuations fall out.
You can do a lot with that $1.2 trillion, but a lot of it does, to be fair, a lot of it does go to retirees and pension funds. The money is not just thrown out.
No.
Right? I mean, that interest, a lot of it just gets repaid back.
Oh, you mean the interest on the debt?
Yes, the interest. That $1 trillion, $1.2 trillion, it's not just like, I almost said peed away, but a different word.
It's going to get a little higher as more bonds come due, right? So the rates that we paid on bonds 5, 6, 7 years ago are coming due as well. So that's going to start accumulating by itself as well.
Torsten, you have a quick comment on that?
The issue is that there's just a lot of upward pressure on long yields at the moment. Of course, we just talked about inflation. That's, of course, on its own upward pressure on long-term interest rates. But this fiscal situation is just not going away. And the term premium and all the questions being asked, as we're just debating here, they are indeed very serious issues. And the issue about tariff refunds is absolutely critical, because it used to be this case that there was taxes collected because of higher tariffs. But now, reversely, we're actually seeing, of course, a payout of these tariffs because of their AIPA decision. And that's actually boosting GDP, especially going into the second half of this year. So that's why we now both have that the fiscal situation is getting worse, but we're also giving even more upward pressure on GDP because of the reversal of tariffs, now instead getting paid out to corporates rather than getting collected.
All right, Nate, it's true. The tariff reversal is a big, big deal, and that's hurting the bottom line as the deficit gets worse now, Brian, than it was a year ago.
Yeah, and Torsten, S&P 500 companies are expected to spend more than $1 trillion this year on AI. You say the longer it takes companies to generate ROI, the bigger the downside risk to an economy and this market and this concentrated AI trade. The 10-year yield sitting near 4.7%. I think this is technically our bond report.
I think so.
We've
done a little bit of it already.
Tucked it right in there. But there it is. We ran the animation. Torsten, your reaction to maybe how AI spending, all of that impacts bonds and the debt market.
Well, the key channel is absolutely issuance by the hyperscalers. The hyperscalers are issuing very long duration debt. And when they issue long duration debt, that happens to also be investment grade, just like treasuries. So now there's suddenly much more competition for dollars that used to go into treasuries that are now instead channeled also into hyperscalers and also into financials, which are also investment grade. So that's why, given there's much more competitive landscape now for investment grade debt, where it used to just mainly be going into US treasuries, that means that not only is there upward pressure on spreads for hyperscalers, but we're also seeing dollars getting sucked out of what normally would have gone into treasuries, instead being placed $600-700 billion into hyperscalers. And that competition is very real, and that is also another factor to add to the list of bullet points of why there's upward pressure on long-term interest rates, namely inflation, the fiscal situation, and hyperscaler issuance. And these three things are the key reasons why 30-year bonds at the moment are way above 5%.
Yeah, almost 530 earlier this week. Torsten, thanks. Appreciate you joining us. Torsten Slok of Apollo. Sarat, stay with us this hour.
All right, we are just getting started on this hour, and as we tick back toward record stock highs, our investors may be a little too high on big tech. Liz Ann Saunders is here with more on the risk. Plus, Evercore's Nick Amicucci on the power stocks that you may want to buy right now. It's 2:12. We're back right after this.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
I'm feeling more confident about the future after reviewing my choices with Voya. Have you updated your workplace benefits and retirement savings?
No, but I am really going to think about it at some point.
Well, if you evaluate your benefits and investment options together, it can help you make the right choices for today.
That's great. I'd love to think more about that. Maybe next week or even the week after. I don't know, this year.
Don't just think about a strong future. Plan for one with Voya. Plan, invest, protect.
Running a successful delivery company has taught me something. You're only as good as your tools. We have AT&T Business, and that's why we're the best.
We're here.
You're
where? There's nothing here.
Just trust the connection.
What? You guys are early.
Yeah.
I like that.
Get your signature there.
There. You guys thirsty? I just made some lemonade.
It's really warm in here. Like a good warm. You know, my phone still works down here. It's crazy.
At Corient, the fact that we've spent years building a business that is around the founder really puts us in an unusual spot to help.
We actually help them understand that the lifestyle that they're going to have in year one is going to look a lot different in year 3 and year 5, and we need to help them evolve as they kind of go through that process.
The idea of having us co-pilot the structuring and then, of course, the life after the deal, but the deal itself has been something that I think is invaluable and hard for them to find someone else like us.
Dale Carnegie started our company in 1912. The course has evolved and changed over the years. Many of our clients are large companies with territories all over the world, and they're saying, how do we effectively develop our people? I joined the CNBC CEO Council about 3 years ago, and one of the most valuable things I've received from CNBC's CEO Council was actually one specific person I met. We partnered and developed a program together that we're rolling out all over the world. It's been really a tremendous opportunity personally and professionally.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash, even a term policy. Visit CoventryDirect.com to find out what your policy could be worth. Or call 800-419-2500. That's 800-419-2500. Coventry Direct, redefining insurance.
At your next big event, everything needs to feel just right. From the presentation to the products, 4imprint provides outstanding branded gear, guaranteed to show up sharp and right on time. Visit 4imprint.com.
4imprint, for certain.
All right, time now for Power Insider, and while we await publication of our latest issue, here's a sneak peek. Two of your next guests' top energy picks include Bloom Energy with a $350 price target and NRG. Let's find out why and maybe get some more picks as well. Nicholas Amicucci joining us now. He is Evercore ISI's head of power utilities and clean energy equity research. Surat Sethi, of course, with us the entire hour. Nick, welcome. Good to finally get you on. I'm a little fired up. It's been a long day. We were just talking about that in the commercial.
I think you need to tell everybody. No, what happened?
A lot of coffee today.
Wow.
None of it decaf. Bloom Energy, NRG. I know you just brought down your price target on NRG, but you still have about 60% upside. What is it about these two names that you really like?
Yeah, well, obviously, I mean, speed to power remains paramount, right? And I think Bloom Energy in particular, right? We kind of view it, Brian, as this is almost the cherry on top of the icing on top of the cake for Bloom Energy. Why? Because speed to power, they're benefiting from that because you need generation and you need it yesterday, right? But when we think about the incremental leg of demand, why are we building all of these large gigascale data centers, right? It's to support inference and reasoning and agentic. And when you think about that leg of demand, that's where Bloom really becomes attractive to us because you don't have noise pollution, you have a limited air permit need, and you don't have the emissions profile of some of these other kind of technologies. So we really get excited about that incremental leg of demand, specifically to Bloom and a company that we cover that reported this morning.
Fair enough. Bloom, big storage company. NRG would be, in many ways, directly the opposite of Bloom Energy, would it not be? NRG, they're in all kinds of stuff, but they're also a giant coal producer, or at least they used to be. I mean, this is just a power production company.
Yeah, no, absolutely. And they are, again, power is scarce. We like NRG in particular because of that uprate opportunity, as well as we don't think the market even is pricing in at anything associated with their virtual power plant opportunity. So within the LS Power acquisition that they closed earlier this year, they acquired a company called CPower, and there is 6 gigawatts of virtual power plant opportunity within that company that addresses that speed to power and that ability to bring additional capacity online
Slightly
quickly.
a non-expert. When you say virtual energy and these, what is going on?
Think of it, Kelly, as squeezing more juice out of the orange, right? We have existing infrastructure in place. Let's leverage that to the tilt before we start to underwrite and build out.
How do you do that? How do you squeeze more?
Well, there are uprate capabilities. You can transition peaker plants into more baseload type of profiles that then allow you to, again, kind of enhance the existing infrastructure.
And is that what NRG does?
NRG, through their virtual power plant, through the virtual power plant opportunity, has that capability. They are also building new generation. So there's a lot to like.
Is this, Surat, one of one of the names you like as well?
No, we don't own it, and it's a very interesting company. It's done well. It's kind of pulled back a little bit too. And one of the things that we kind of struggle with is always the pricing, right? Because as consumers now feel more pricing is coming, and then they kind of blame the data centers on it. So how do companies like NRG get around that? Is it more that they're going to produce, to your point, we're going to get more efficient and we'll get more production out of it, but not raise prices? Is it a volume? Because if it comes to pricing and then all of a sudden, you get the states involved, you get the government involved. So how does that happen?
Yeah, well, I think, look, you're going to have price. You're able to ring fence it too, somewhat, right? You're able to allocate it. You know who the off-taker is, who's actually going to need that incremental power that you're generating. So you're able to kind of ring fence it and tether it towards them. So you are seeing kind of PPAs associated with particular hyperscalers, right? They are able to underwrite those certain pricing profiles, which is actually very attractive for all of the IPPs, right? Because now you're able to have a predictable cash flow stream that's coming in, as opposed to relying on the merchant
so
generation.
The customer is big tech, not the public. And
correct.
Yeah.
Correct.
A lot of this is happening in Texas, and I know a lot of people in our audience probably think Texas is kind of like the Wild West. Just do whatever you want, build some over here, no problem. No, there is a long regulatory backlog in Texas as well. Does that impact your valuation on either of these companies, who are both doing projects, a lot of them, or operate in Texas?
Yeah, I mean, look, obviously it's a concern, and you can't fight political headlines, right? But it's well known. We kind of addressed Governor Abbott's commentary early last week, that really kind of had drove NRG shares down right on the back of their earnings. But we do think, look, I mean, you have a batch zero process in place. I mean, when you're
what is that?
It's a regulatory regime in ERCOT specifically, that is basically highlighting and allocating batches of generation projects that will be brought online. And so when you're talking about kind of an audit, so to speak, of projects, we have one in place. So it really is kind of, we're not going to fight the headlines. We're not going to fight the political rhetoric, but I do think that ultimately we get into November and December, and these things are largely in the rear view.
They're showing Bloom Energy, which had a tough recent spell, but it's up 13% today. This is fuel cells, right?
Correct.
Which I've always been like, are they or aren't they the future story? Which a little bit more so they are. There's a big role for them to play here. Why do you like it?
Well, again, you think, Kelly, there's an incremental leg of demand that people aren't even pontificating yet. They have the capacity, their operating capacity that we kind of frame it as. Now, they're not currently manufacturing 5 gigawatts per year, but they have that capability, and they can bring on manufacturing capacity faster than they would actually need to deploy those assets and those units. So we think the demand for power is real. The demand for certainty and execution and deployable power, dispatchable power, is very real, and we think it fits right into those buckets.
All right, I know, Surratt, you're more in the Exxon Chevron. I mean, is that a space, Nick, you still feel fine about? It's just a difference of kind of, more momentum names versus kind of the steady eddies, that kind of thing?
Yeah, I mean, I would defer to my colleague Steve Richardson on those names particularly, but I think, look, it's kind of a rising tide lifts all boats when it comes to power demand and the need for
Evercore does like Chevron, Stephen. Needs to write me back.
Yeah.
But this is kind of like...
I can't help you with that one.
No, you can talk to him, tap on the shoulder.
I could.
What were you going to say?
No, I was going to say, like, the Chevrons, Exxons are kind of the value cash flow ownership, and this is kind of like the growth option value, because if this works...
Do they have a political issue, though? Do you think this is all just rhetoric that comes from the president? I mean, look what he's tried to do with defense companies. Obviously, he's talking about the price. They want them to lower the gasoline price. Is that all just noise?
For the most part, yeah. I mean, it's going to be kind of making sure that prices don't go up higher than they should, but over time, the oil companies' price will meet the market. You're the oil expert on this. They're going to raise the prices when they have to.
All right.
And my father owned a gas station when I was a child. Not for very long, but my grandfather also owned a gas station. I got a lot of respect for gas station owners. Mostly families. Oftentimes, big oil doesn't own many gas stations. Families that own them, often first-generation Americans, they don't set the price of gasoline. Gasoline may be high because they have to make up for losses on other tanks. I just want to get that out there. I'm not justifying prices. I'm just saying don't pick on the gas station owner. It's not... I'm sure there are bad people out there, but it's not their fault. I'm just throwing that out. That's just my...
We will take your message to the president.
Seacrest out.
Surratt and Nick. Thank you, Nick. Nick Amicucci. Still ahead, AI is back in the driver's seat today, but after June's chip wreck, if we can call it that, is this rally built to last? Liz Ann Saunders weighs in on that next.
Hi, folks. By now you've been hearing a lot about investing in YRefi. Why invest in YRefi? Well, how about an investment where your interest is calculated daily and you're paid monthly? Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. YRefi. You'll like investing in America's future.
Modern enterprise. It's a lot of moving parts. Comcast Business helps you orchestrate it all with SD-WAN that keeps 150 hospitals working as one. Zero Trust Security that protects data for a bank with more than 2,000 branches. An AI-powered network that's optimizing traffic across 5 continents. You might need this. It's simple. When you add it all up, no one does business like Comcast Business.
University of Maryland Global Campus, it's a global community.
We help each other through our journeys.
One of my skills that I learned from UMGC, some confidence. I decided to push Howard because I wanted my voice to be part of us.
UMGC has given me leadership skills, technology skills. I'm able to apply directly to the work that I'm doing.
The UMGC ponen a los estudiantes primero porque te ayudan a cumplir tus metas.
I wouldn't be where I am without UMGC.
Learn about our more than 100 online degrees and certificates at umgc.edu.
What will you do when the power goes out? Power outages can be unpredictable and inconvenient, but with a Generac home standby generator, your life goes on uninterrupted because you'll have power when you need it the most. Special financing and low monthly payment options are available. And if you call now, you will also receive a free 5-year warranty valued at over $500. Call or go online now to request your free quote. Power your life with Generac.
U.S. Bank Business Banking gives you dedicated experts and tailored solutions that work together to reward you more.
Watch your safety, watch your safety. They're in zone, they're in zone.
Because we believe the most rewarding wins take a team effort.
I wish I had one of those.
You'll get there someday.
Your business and U.S. Bank together. That's the power of us.
Fandango. Stream free with no login required.
Let's get back to the markets and some potential risks emerging. Your next guest points out that even though the S&P is near all-time highs, just 4% of its stocks are trading at or above their 52-week highs. Liz Ann Saunders is the chief investment strategist at the Schwab Center for Financial Research. Surat Sethi is still with us as well. Liz Ann, it's great to see you.
You too.
And we've had this big correction in momentum areas like the memory stocks over the past couple of months. And financials, industrials, I mean, there are other areas that are pushing us towards these highs, right?
Oh, absolutely. And that's just the rotational nature of the market and the churn under the surface. And I think that's the clearer picture that you get about what the market has done versus looking at the index level. And all else equal, I think it's a healthy development. There is much more rotation than is typically seen, and you can measure that through breadth statistics. You can measure that through dispersion on a week-to-week basis at the sector level. And I think that backdrop is likely to persist. We've been saying for a while now that rotation is the new momentum trade. So I think that sticks with us. The latest move, though, a bit back into that AI story space.
We have to talk some healthcare, and not just because Surat is here, but I know he's excited about this. So this is an area often seen as defensive. Others would say underperforming, but it's had some really good outliers lately, and it's kind of getting its mojo back. What would you say about that?
Well, that's one of the 4 sectors on which we have favorable ratings, so we would agree with that. I think that because the earnings profile has been relatively depressed, you start to look at beneficial base effects on a going forward basis. You can't say that about many other sectors where the base effects will start to work in the opposite direction, given just how strong earnings have been across a number of more cyclical sectors. So you've got the valuation impetus and the trajectory of earnings growth impetus behind healthcare, at least in the aggregate.
You want to jump in?
Yeah, listen, to your point, when you look at kind of the driving factors of the AI trade, the momentum trade, it's funds that are quantitative driven. What will it take, as fundamental investors to get other non-fundamental investors or other people interested in, the sectors like healthcare, financials, the ones you like? We like materials, we like the commodity trade, but it doesn't seem like money flows into these. It's kind of, they use them as source of funds, especially when, days like today or momentum goes. So in your experience, what do you see that can kind of change that as we go forward for long-term kind of investors who are fundamental investors?
I think the channel could be through an increased interest in active investing styles as opposed to passive investing styles. Passive automatically drives you into those mega cap areas. And if passive continues to be all the rage, then you're not going to see that impetus. But for active investors, whether it's individual investors or investors considering more active funds versus passive funds, that's where it gets a little bit intriguing, because it's not necessarily going to be a function of weakness in tech or communication services that drives money into other areas, but just an increasing knowledge of the opportunity cost of not having more diversification, given the stronger performance via this process of rotation that you're seeing in other areas of the market.
Here's a story that made me chuckle. Lizanne, I'm not sure quite what you'd make of it. Norway's wealth fund, its sovereign wealth fund, the biggie, is warning that the top 10 companies in its portfolio now represent 20% of the fund's value. Most of those are in the tech industry. The head of the fund said, quote, "It's chips, 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 chips. We've never seen such concentration before." Apparently, the problem is that any change to their strategy would have to come from Norway's parliament, which is a process that could normally take years. Now, other people, I guess, can just what is it called? You sell and you rebalance. What do you make of this?
Let me also just say that I'm 100% Norwegian. I just got back from Norway on Saturday night.
That's right. We didn't even do that with that in mind.
So, yeah, go Norway. Takk for Norge.
Tell Erling Haaland we said hi.
Oh, yeah, no, I talk to him every day. I will. This is an issue because foreign investors, whether it's sovereign wealth funds, big institutions, retail investors, through typically passive approaches, just buying ETFs in the U.S., do see that concentration problem. It depends on the structure and frequency of the rebalancing, whether it's just rebalancing yet staying in that more passive approach or rebalancing that might bring in more active strategies. And remember, when foreigners are investing in, say, U.S. tech in whatever form, or just the U.S. stock market in general, it's a double bet because you've got the currency piece of it too.
Right.
So any weakness that you start to see show up in the stocks, if it's accompanied by a weaker dollar as well, that's a bit of a double headwind for some of that foreign money. And then what I mentioned earlier, the opportunity cost of not being in areas that are getting their day in the sun could cause a little bit of that shift because of just the opportunity cost, not necessarily because you start to see meaningful weakness in the tech and tech adjacent space.
It's Sarat, this is going to sound a little glib, but because I haven't had to manage this kind of money with this much at stake, but there is a positive to them not being able to rebalance, which is they continue to reap the benefits of the performance of these. I'm sure if they could have prudent portfolio diversification would have gotten them out of there at much early price points. Instead, look how well they're doing. So I guess those who've been in the market and seen the other sides of these cycles would say, well, you're trying to avoid the downside that could come. But right now, they've benefited a lot from this.
No, they have. But, the point of chips is today, the S&P, 20% of the S&P is in semiconductors. It's not just we're talking about overall technology. It's semiconductors win there. And if you're, as Lizanne was saying, you're in these index funds or you're in these passive funds, you don't really do a look-through unless you're doing what Norway does. And you're just saying, well, we're diversified. We're across the market. We have all these stocks. But you're really then buying them. And if you're not really diversifying, you're just adding more to those. And then the other sectors that be the smallest part of the market, just don't get the
You don't
capital.
think the index will rebalance itself to some extent?
Not if money keeps on flowing in. They just keep on buying the same stocks.
But over time, after they look at what's happened with the memory trade. That was down 40%. It's to some extent from the highs to the lows, and the S&P was making new highs in the meantime.
Well, the equal weighted will rebalance itself, but not with the market weighted, because that'll just get them higher and higher and higher, and then over time, that kind of, unless people kind of come out of it.
Liz Ann, you should go back to Norway and yes, tell them you are here to help with these problems.
Why don't I go on a research trip on behalf of CNBC, and I'll come back with a lot of juicy information.
And salted herring.
Oh, no. But I did have whale for the first time. Tastes like steak, not chicken.
Is all whales. It's all about whales today.
Liz Ann, thank you very much. Liz Ann Saunders of the Schwab Center for Financial Research.
All right, meantime, let's go to Brandon Gomez with a CNBC News update.
Hey there, Brian. U.S. Army troops reportedly faced off against Ukrainian drone operators in a military exercise earlier this year and came out on the losing end. The Wall Street Journal reports that during the exercise, Ukrainian drone units easily spotted and defeated U.S. troops and armored vehicles. The operation was part of a semi-annual exercise focused on training for large-scale ground combat operations. Lawyers for Tyler Robinson, who is charged with the murder of conservative activist Charlie Kirk, say he shouldn't be eligible for the death penalty because the shooter hit the intended target and didn't endanger others at the event. That would be a potentially aggravating factor under Utah law that would make it a capital crime. It's just one of several arguments laid forth by the defense in new documents filed with the court. Robinson has yet to enter a plea. And the Associated Press projects former NFL sideline reporter Michelle Tafoya won the Republican Senate primary in Minnesota last night. She'll face progressive Lieutenant Governor Peggy Flanagan in the general election. They're competing to replace retiring Democrat Tina Smith. Brian, things back to you.
Brandon, thank you very much. All right, big data, smart stock picks, a real-time read on your day's biggest movers. Next.
How did it work out?
Hey, Sarah.
Oh, hey, Stacy. New smartwatch. Did you get a bonus?
Nope. I just got it using free cash.
Free cash? Sounds too good to be true.
It's not. You play the games you already like, and free cash pays you for it. You won't get rich with it, but enough to cash out real money and buy something you like.
And the brands just pay for that?
Yes. Brands pay to reach people like you, so instead of ads, free cash pays it straight to you. That's your $10 bonus. Get rewarded for playing games. Download the app now.
Free cash!
Exactly. You know that.
So, that's our pitch.
But if AI can't explain itself, who's liable when it's wrong?
Well, of course.
And continue.
The interesting thing about that is we're on uncharted territory.
Humans have less and less understanding of what is actually doing.
Recognize that everyone has a different piece of the puzzle.
I think what Michael's trying to say is
corporate operations demand execution speed and reliability. Enter Circle 8, a business transformation platform operating throughout North America and Europe. With over 16,000 specialists delivering technology and workforce solutions to the largest private and public entities worldwide, CIRC generates annualized revenues exceeding $1.2 billion while trading at a fraction of that size. Through recent acquisitions, Circle 8 is rapidly taking market share from the major international consulting firms. CIRC on NASDAQ.
Welcome to Closing Bell Overtime.
Get the essential post-market edge, after-hours action, and opportunities.
Big earnings, all due in the next few minutes.
The economic impact is just beginning.
Closing Bell Overtime, 4 p.m. Eastern, CNBC.
Since 2000, the dollar has lost nearly half its value. Every $100 you saved then is worth just $50 today. Your savings are eroding every day you wait.
The dollar is in a lot of trouble, and I don't care to have all of my eggs in one basket.
Call now to get your free gold ownership guide and learn how owning gold can protect your savings from a falling dollar. Gold has soared nearly 1,800%, holding strong through every crash, every crisis. But who you trust matters as much as what you own. Over 1 million Americans trust U.S. Money Reserve, the only precious metals firm guided by 2 former directors of the United States Mint. And with our industry-leading gold buyback guarantee, when the time comes to sell, we'll buy it back for the price you paid or more.
I sleep better with gold than I do with the stock market.
Build a future your family can count on. Call U.S. Money Reserve for your free gold ownership guide and learn how portfolios with gold are built to protect and grow your savings. Call now, because waiting is already costing you.
The chip complex is catching a bid today, software taking a breather, and we have some key names reporting after the bell, like the one on your screen there, Cisco, with some action under the surface. It's up about 3% today. Here with more insight is Bob Sloan. He's the founder of S3 Partners, which provides market data on positioning within stocks and sectors. I can't start with Cisco, though. Do you know where I have to start? Do you remember what you said the last time that you were on with us at the end of June?
Yes, I do.
You warned about the memory trade.
Yeah.
Do you know what day the memory trade peaked? June 22. So, Bob, as I lean in, what do you, and today we have DRAM rebounding to the tune of 8%. Is that, can people jump back in there? Are there new areas of leadership? What's going on?
So, you know, SpaceX kind of rules all, and that's the gravity by which everything else is pulled towards. So, yeah, you're seeing a lot of short covering in that, and you're seeing short covering across the board, like in stocks like CoreWeave, et cetera. We're seeing a lot of that.
Let's go back to what you just said. SpaceX rules all. I mean, I thought this was a stock that was set it and forget it. Retail buys it, they put it away. It's a generational thing. You say it's much more important than that.
Yeah, it is. It's a trillion, you know, $1.75 billion dollar IPO. It's the biggest IPO on the planet ever, and everybody owns it, and it affects everything. So you're either a believer or not, and that, you know, you either kind of say it rules the world or it doesn't. Mm-hmm. And the amount of short interest bets on SpaceX has gone to $32 billion down to $24 billion in 60 days.
But
we've never seen anything like this. Have you ever seen anything like
this? He's
that?
cleared out the shorts to that extent, you mean?
Yeah.
Okay, so again, I would say this is an idiosyncratic Elon Musk story. Why is it so important, and what does it tell you about the broader markets?
Well, you know, technology, software, memory, I think certainly SpaceX is probably the frothiest trade ever. It bleeds into other sectors and has an effect, and you're seeing that. You know, when that stock moves, it moves other things along.
It's wonky, and I don't want to go too deep into it, but like if you look at something like Delta One, which is like a strategy for synthetic baskets of stocks on Wall Street, our retail audience doesn't do it, but hedge funds do it. Tesla used to be the most important stock in the world because it was in all these Delta One option strategies. People hedged against it, right? There's a lot more to a SpaceX and a Tesla, these Musk stocks, right, than just the stock itself.
Sure.
They influence, I think what you're saying, all these weird other things that we never think about.
Well,
I mean, you guys think about them.
But
our viewer at home is probably, what's that?
Is SpaceX a memory stock? Is it a launch stock? What is it? You know, is it a satellite stock?
AI.
AI. So many different things, and that's why it has an effect on so many different sectors.
So Bob, and you just mentioned the short interest has gone down. Stock has kind of rebounded quite a bit.
Yep.
Have the shorts then moved on to other parts of the AI trade, saying, hey, listen, we don't want to mess with SpaceX, okay? Because it's just other things happen. So, you know, you mentioned CoreWeave, you mentioned some of the memory stocks. Is that kind of starting to back, as soon as these things get the momentum, do the shorts start pressing on that area, or are they kind of looking at other areas in the market now?
Well, positioning matters more than just what the short sellers are doing, right? So I think one of the things that we're looking at is what's the ratio of active longs to shorts in things that are adjacent to SpaceX. So, for example, like, you know, Viasat, Planet Systems, those stocks are skewing long. And so those things are, I would say, pro SpaceX on the Elon Musk influence side. And then you have things like Intuitive and AST Space Mobile, which are skewing to the negative side. And because they're seen as being competitive to Elon Musk and SpaceX.
Let me bring this back to Cisco, which you know is one of these names that is suddenly very exciting again, and it's up a couple percent today. It reports after the bell, but the recent momentum areas of the market have been security, networking, identification, cyber, because these are the areas where AI agent traffic is exploding. The defenses need to be protected, and these stocks are all implicated. What do you see happening with Cisco?
So we have you know, we're not an investment advisor like Surata is. We're a data company. Having said that, you know, we feed a lot of the institutional investors long interest and short interest data on a daily basis. And one of the ways that they use short interest is a signal to how a stock is going to react in earnings. And Cisco is a classic case in point. You have basically flat short interest when the stock is rising. So you can tell that the momentum and the energy behind the short bets is just not there. And so you can see that after the tape, as it sets up, we have a bullish call on Cisco at the end of the
You do. And then would you say that this is the new leadership area of the market, broadly speaking?
I think it's too early to say that, but the way what we're looking for is our stats and our data and where we see a very clear signal in a setup in an earnings call and where we're going to see a move after earnings given the relationship between our data and the price.
Yeah. And last comment, anything else you want to mention to our audience before you go about, what you see coiled to move one way or the other? Just look at healthcare. Healthcare, we talked about this a little bit last. Did you set him up?
No, I did not set him up. We have not talked about this.
No, we have not. Look at healthcare. Healthcare is a crowded trade. The returns have been mediocre. There's just a lot of people looking for a return.
And in other words, they're close to getting frustrated?
Yeah, I think so.
Interesting.
That's a warning.
It's a good contraindicator either.
Like you said, you just provide the data. The investment advisors figure out what to do with it. Bob, thanks very much today.
Thank you for having me.
Bob Sloan of S3 Partners. And be sure to tune in when Cisco CEO Chuck Robbins joins Squawk on the Street tomorrow morning at 9 a.m. Eastern.
All right, coming up, from Mickey to Magic, former Disney CEO Bob Iger set to become one of the new owners of the Los Angeles Lakers. Talk more about this potential mega deal coming up.
We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
I know how to make slick-looking goggles/glasses, but I have no idea how to make slick-looking social media stuff.
But GoDaddy Aero uses AI to create social content out of thin air, like this one.
Walton Goggins goggle glasses are great gifts for all guys and gals.
What will you do when the power goes out? Power outages can be unpredictable and inconvenient, but with a Generac home standby generator, your life goes on uninterrupted because you'll have power when you need it the most. Special financing and low monthly payment options are available. And if you call now, you will also receive a free 5-year warranty valued at over $500. Call or go online now to request your free quote. Power your life with Generac.
I wanted to have control over drinking instead of alcohol having control over me. I started with Or Health about a year ago. It put the brakes on that I had been looking for. I can drink less and say no, and it's the best feeling in the world.
Text CNBC to 710-710 to learn more.
In today's fast-moving job market, staying ahead means keeping your skills updated. That's why at University of Maryland Global Campus, we offer an affordable, skills-based education that helps push your capabilities and career forward. We'll equip you with the know-how to apply emerging technologies like AI, data science, and automation. Whether you want to move up or move on to something new, UMGC can teach you the skills you need to succeed again. No application fee if you apply by September 1st at umgc.edu.
If you earn over $2 million a year and your entire tax strategy is one meeting with your CPA a year, you're leaving a fortune on the table. Your accountant is not failing you. They're doing a different job than the one you actually need, because reporting and strategy are different disciplines.
Neil Jasani Tax Advisors, a national tax and accounting firm for ultra-high-income households and mid-sized businesses.
This week on USA, the temperature rises during Rivals Week. Tonight, our doubleheader kicks off as the Tempo look to make a statement in Dallas. Then, the Sky go up against the Valkyries. Rivals Week, tonight at 8 on USA.
It is the possible deal that is shocking the sports world. Former Disney CEO Bob Iger leading a group that is planning to buy the famed L.A. Lakers for a reported $12.5 billion. Now, if the deal happens, it would mean that current owner Mark Walter and his group could make over $2 billion owning the team for about 1 year. Joining us now is CNBC Media and sports reporter Alex Sherman. I guess my question, Bob Iger is a very successful human being by any measure. $12 billion is a lot of money. Iger didn't found a company. He's a CEO. Where's the money coming from?
We don't know. It's funny that you said leading the bid, because we don't know exactly who's leading the bid at this point. In fact, the only two names associated with this are Joshua Kushner and Bob Iger. If I were to guess, I would say Joshua Kushner is probably leading the bid, because to your point, Bob Iger, while very successful, is not a mega billionaire.
Probably not even a billionaire. That's not a thing. I mean, I'd love to be a billionaire, but still, successful guy, but he didn't found a company. He was a CEO. He got paid a lot of money, but taxes take about half of that. Where's the money coming from?
We don't know yet. And it's not necessarily a red flag that we don't know. Look, any deal, it would take months and months for it to be approved. Money can still come in. This is very similar to what happened with the Boston Celtics sale, where there was an announced price, more than $6 billion. We didn't exactly know where the money was coming from. And then in the end, the money shows up, and I think the money's going to show up here also, because Kushner and Iger have been on the hunt for capital to buy the expansion,
Las Vegas expansion team.
Which wouldn't have been at a valuation of $12.5 billion, but rumored price, I was seeing $8 billion, maybe even $9 billion for that. So you're going to need a lot of money to buy that team. So one of the questions that we have as reporters is to figure out, well, who have you lined up already, and are those people also coming in with you on this deal? Remember, there is a cap of 30% for private equity for the NBA. So some of that money may be private equity. We know some of it is obviously coming from Joshua Kushner's venture/private equity firm. So that's going to be some chunk of cash there. But they're still going to need a lot more from outside investors. We just don't know those firms or names at this point.
And wasn't there Saudi involvement with Mark Walter's purchase in the first place from last year?
And so there very well may be sovereign money in this deal as well. That is yet another place that you could tap for capital. Yes.
Right. Why do you think he's selling? And why was there no auction process?
Right.
We talked to one of the sports banker last hour. He said he's almost never seen a sale of this magnitude not have an auction process, and didn't rule out that an auction could have brought in more money.
And the biggest question, the one you didn't say there, is why is he selling after less than 1 year? That is unheard of. Now, he is making $2 billion or so. So at one extreme, you could say, well, maybe that's why he's selling. He got this offer, and he said, why not? That's a huge amount of money.
$2 billion in a year. ESPN is reporting that Iger and whatever approached Walter, that they basically were like, hey, sell us the team. And I wonder if you could make $2 billion less than a year. Why not?
It is possible. That's why he's doing it. But you do need to, I think, especially as reporters, it's our job to point out the fact that there are several insurance companies and Guggenheim Securities, which Mark Walter owns, that are under investigation right now by U.S. prosecutors and the SEC for potential financial impropriety there. There was also a recent article in the Wall Street Journal that was questioning Mark Walter's health. So there are some unanswered questions here, and we won't know the answers to that until either we do more reporting or we hear from Mark Walter about exactly why he's selling the team.
Or if we see that the pros.
Say that again?
I said I called you yesterday to brag up the brag.
Oh.
Because I had bragging rights.
Mm.
And I was so excited. But the audio doesn't cut it down.
What happened?
I walked 5.6 miles yesterday.
Where, in your neighborhood?
No, not in my neighborhood.
In the Bronx?
Well, up in Derby.
Oh, that's what I mean. Your neighborhood, not necessarily down here. I mean, your neighborhood. That's actually a nice way to get to know your neighborhood.
And trust me, it was not an easy walk. It's not an easy walk. It has hills.
Well, guess what I did this morning?
You went for a walk?
I decided to ride my bike. And I decided to pull my phone out at the same time. I went flying over the handlebars. My pinky knuckle and the pinky next to my knuckle is all scarred up. I went flying over my handlebars because I thought there's somebody walking in front of me, and I didn't realize how sensitive the brakes was. But I only had one hand, and it was the front brakes, the one that had the. Yeah, so the guy is looking, I'm trying, he's still far, but when I looked up from holding the phone, I was trying to. Giving myself some stopping power, but the thing started squeaking, and I made a mistake and squeezed it hard, and I went flying over the handlebar. The guy looked back and kept going. So I embarrassingly picked myself up and then rolled off. Yeah, so I hurry up, got on the bike, rode off into the sunset. About 2 miles down the road, I realized that I left my glasses was pinned to my shirt. So I had to turn around, go get the glasses back where the scene of the crime. I was like, oh my. No, it was in the grass. I was on the bike trail, but when I flipped over kind of off the side of the bike trail, and the glasses went flying off my shirt. I forgot I had the glasses pinned to my shirt. So, anyway, I'm like, you know what? that it is what it is.
You know what? You always said that's funny.
Oh.
When you went driving, I thought you went on a bike in your house. So when you said, I was like, oh. But when you said somebody's in front, I'm like, wait, is it a bike at home?
Yeah, it was on. I said I figure I'll do a quick. I was over there by that big park. What's that? That big park over there by Pelham Bay on that side, kind of like going towards City Island.
Oh, yeah, I know where that
So
is.
I was coming around, and I flip, and then to make it worse, I felt like I was mad because I broke the rear view mirror on the bike. So I took that. Oh, I didn't know if the pinky was broke. At that point, it was so bloody. I had to just get out of there. You know, there was like a row of cars right there, so it just so happened that people was at the light. So I'm like, yeah, some embarrassing stuff, man. So anyway, what made it bad is I rode another 30 minutes away to have to come turn around. I'm like, do I need the glasses that bad?
Oh, really?
And I said, I said, you know, dag, I'm halfway almost home. I'm like, you know what? There's a good chance, because when I got up, I was like, there's a good chance the glasses didn't fall in the road. It probably fell in the grass. And the funny thing was, the glasses was right by where I threw the broken mirror, and I didn't see the glasses at the time I dropped the mirror. So anyway, I said, let me get my butt back, and then before Ange left the more, she said, "Oh, you know that you gotta pay the school fee coming up." I'm like, you really have to remind me. So anyway, I said, I don't know where that money's coming from, because I just had went negative, and then the Lord helped me with an emergency job, and I picked up the emergency job that paid for it. So I'm like, oh my gosh, I gotta step my game up here. And I said I get on these charts today, and solid day, I must say, solid day, very solid day. It's not over, but solid. I'm worried. I was like, I gotta, this gonna be tight. It's gonna be close. But anyway, grinding it out. So you just did a street walk, or you found a trail up there?
No, they have a trail. I saw a trail, but it's like flat. I don't want flat. I like the hill. This morning I woke up, my butt is hurting me.
You should have called Dave. He would have found you a trail up there. He would have told you a trail to go.
Well, you're black, so you have to be careful of how you walk.
Oh, wait, if you move to an area and you got to think like that. Oh my gosh. You don't feel you belong yet? You don't feel like that? They look at you, they probably say she's not like the other black people.
Hold on, the other day I'm home, right?
Mm-hmm.
And this guy come around the doorbell. So I went to the door and I answered him. He said, is the owner here? So I said, no, the owner's not here. What time are they going to be home? I said, they won't be here until tomorrow morning. So apparently I'm the helper.
What was they? What were they? Did they have a tag on or nothing?
No, he was selling he was selling stuff. Like he might try to sell Fios or upgrade some property.
That was a missed sale. Why would he assume that? We should have asked, or he might have got a sale. And well, he gave you your way out before he even start. Is the owner here? Nope, no, that's not. No, she's not. She'll be back tomorrow. Nope, the owner is never here. Anytime anybody have to ask, is the owner here? Nope. I don't even know if the owner live here. I'm just here for a couple of days.
One day, the other day, our neighbor had a baby shower, so they invited us.
Your neighbor?
Yeah.
Damn, a young white couple invited y'all to their baby shower?
Yeah.
Cause I know ain't no two blacks in that neighborhood. Wait, you went? What? Y'all crazy. Y'all going to neighbor's white baby shower? Oh my God. You might have to go to his church then. Oh, that's a nice. Well, you should say. Well, sometimes.
They know how to have summer fun.
Sometimes Seventh-day Adventists take their breaks. They're probably not really. How did you know they're Adventists?
Oh, by the way, I'm gonna come and pick up the thing.
What thing? Oh, it's gone. We cleaned that yard up. We threw that stuff out. Clean the yard up. Now, how many months ago? You think Anne's gonna have stuff like that sitting around?
Oh, you keep so we're
playing. I'm playing. It should be. You're lucky because I keep telling my junk guy, I see his truck pack up. I said, you've been telling me for months you're coming to my house to clean up. And I haven't seen you yet. I got a bunch of stuff I got to fill his truck with. Which truck? I thought yours was retired. Oh, I thought you said yours broke down. Oh, I thought you gave it your junk piled it.
What, my vehicle?
Yeah, I thought it wasn't working.
No, my vehicle. No, man, I'm more than driving my vehicle.
Oh. You don't want to touch that thing from Derby, huh? Keep that up in Derby.
No, I was driving it. Remember it because my license got suspended and I couldn't.
Wait, what? What?
I didn't tell him.
What? What the heck?
Morgan. Yeah. License for 3 months.
What happened?
Morgan did not pay the vehicle needed registration, right?
Uh-huh.
And because Morgan, when Morgan, I got the vehicle over from I registered the vehicle up here. So New York is saying the vehicle did not put registration because Morgan did not pay the insurance, right?
Oh.
So we never know. It's when we're trying to register the vehicle now we realize that we can't register the vehicle because the vehicle don't have insurance.
What is going on with Morgan? What is going on with her?
New York cancel me.
Because the vehicle's in your name, right?
Yeah.
Yep. Wait, so how you was getting to work? You was driving still.
Yeah, it was when I went there. It's so funny. I drove to BMB and then I couldn't even. I said to them, "What am I gonna do now?" Because my vehicle is driving now. So they had to apply for. So I was confused. I was stressed out. Oh God. So they told me to apply for
temporary an emergency work license.
Yeah, I'm applying for work and school license.
To and from, huh? Like you're alcoholic.
Not even to go to the church. It's not valid for church.
To and from work. That's it.
Work and school, nothing else.
Work and school. You went back in time. You're getting childhood penalties. This is stuff you get as when you're a teenager. Yeah, those are teenage.
Nobody has attitude more than she. Let me tell you that.
Listen, yeah, Morgan got to get it together. What's going on with her? You can't be getting mom's license suspended. Oh my goodness.
Trust me, yes. Nobody has attitude more than she. Let me tell you that.
Well, okay? Who's her mom?
So right now, I got it back. A week ago.
So now she got to do everything in her own name, right?
No, I can't do it in her own name because guess what happened is that the vehicle is in my name, and the only way I can turn over the vehicle to her, but the vehicle it have some way you can do it in a PLC kind of thing.
Oh my God! So Morgan got you coming and going.
Right now, this is the second time I'm coming to DMV up here to get it changed because I didn't know I had to have insurance before I can do this.
Wait, before you can do what?
Before I can register the vehicle.
Wait, you didn't know you need insurance before you think you could register vehicle? How How you register a vehicle without insurance?
I never ever I mean I never could do them something yet because
Let
some
me ask you
person.
something. Let me ask you something. If I'm driving my car and I clap your car, who's gonna pay for it? That's what New York want to know. They don't care if you have it or not. They want to know that payment. Half of that payment goes to liability, goes to motor vehicles. There's a state pot. Like even if people don't have insurance, there's an insurance bill that everybody pays that put money in the pot because New York State have a minimal insurance that you got to have. Let me tell you something, Marcia. I told you I was in an accident the other day, right?
Mm-hmm.
You know how much money a week my insurance company's paying? A week.
Mm-hmm.
How much?
I don't know.
You guess.
I don't know.
Just give me a guess on average how much they're paying for that accident.
500.
Okay. They fight with me to fix the car. It cost them 11,000 to fix the car, which I fight to get. They didn't even want to give me that. They wanted to total the car. They are paying $15,000 a week.
For who?
For me.
To who?
My doctors.
Oh.
50. Would you believe I went and asked these people? I said, "Wait a minute. What kind of treatment y'all giving?" I could go to the nail salon or whatever that shop was, get that guy to do me up. He only charged me $60 an hour. I'm lucky if I'm in there 30 minutes. What kind of 12? Where y'all? What kind of $12,000 treatment y'all giving me? They gave me $15,000 worth of equipment last week. I said, those little $2 things you can order on Amazon? I said, what a country. That's why insurance is high. That's why insurance is high. It's so insane the amount of money that insurance pay out on these things. And mind you, when I go in there and I sign in, 30 people done sign in. How much money is that business taking in a week if I'm one and they getting 15,000 a week from me? I'm only one. I said, what a country, man. My insurance company need to reach out to me and say, make a deal with me because I don't see they seem like they're comfortable paying this thing. They need to settle out. Matter of fact, I got to get ready to go to treatment so they can make their money. Because I feel like after I'm done with their treatment, I can go someplace else. It don't seem like it do nothing for me. That little 15 minutes they give you, they better off get. But anyway, everything is Marion Sue. That's the country we live in. So
it is.
I'm trying to ask the lawyers what's going on because nobody ain't saying nothing. They say, "Oh, just keep going to treatment." I'm like, "Oh,
Yeah, it's a process. It's a long process.
They said it's a process. You can't. It is what it is." I said, "You're telling me?"
Yeah, it's a process. You can't speed it up. You can't do anything.
Right now, in front of me, I have over 100 insurance bill. I opened the first 6 and I can't open it anymore. They're coming in like 3 a day. So on different things that these people are charging for. It's thicker than the thickest book you ever read. I'm like, oh, that's 2 Bibles. That is 2 Bibles. I'm like, if they put that much time into this book that they put into me, maybe I'll feel a little bit better. But man, I gotta, when I go there, I have to put them to work extra. And you guys ain't gonna just do the small little routine. No, you guys gotta get in there. You gotta, you know. But at least at the place they twist you up. These people, I'm like, this guy got no medical training and he does better than you guys. They put some machine on your back, let the machine do the work, and then they put some kind of electrical shock system on you, let that do the work. Waste of time, waste of money.
I mean, waste of time.
It don't seem like it's helping. My back still wrench. Anyway, you're still up in Derby right now?
DMV now to get to register the vehicle.
Oh, Connecticut DMV.
Yeah.
Man, at least I know somebody in Connecticut. I might have to switch over to I like working in Connecticut versus Westchester. At least I know an address maybe now. I'd have to ask Damien, could I use his address? But they want you to do too much. You gotta change your license. You gotta go do this.
I'm not changing my license.
Wait, you still got New York?
Yeah, I'm not changing my license. You don't have to change your license.
Why would you keep New York? You get better insurance rate if you don't have a New York license.
No. Once you have address, the license has to do with it. You know how much insurance Morgan cost? $280 for the first one. And then you're going to pay $208 every month.
For one car?
Yeah.
Well, how come if you got the car in your name, why didn't you bundle it?
Because the other two vehicles are in Damien's name.
Oh, Damien ain't playing with you. Damien ain't playing with you two, huh? I don't blame him because Morgan dangerous right now. She dangerous. Do she care about stuff like that? I don't think them kids. I don't think them kids don't care about stuff like that. She'll care if she had to stretch it though. Tell her to put in her boyfriend's name. He'll pay for it. I forgot they're both young people. That might not work. All right, sis, get your business done, and I'll catch up with you. I gotta go to treatment. All right. Maybe they could treat my hand. I'd say that's a different accident. All right, later.
Yeah, sure.
I couldn't be more excited about the future of this business.
Nuveen invests with the foresight and vision that come from navigating more than 125 years of market cycles. Unlocking the potential of public and private markets, spanning real estate to private credit, and infrastructure to natural capital. Finding opportunity today to shape how portfolios are built for tomorrow. Rest like the future is watching.
To show you the incredible ceiling power of Power Putty. Now that's a lot of damage.
And we're going to seal every hole using only Power Putty.
And the inside is completely dry.
Get Flex Seal Power Putty.
The first day back from maternity leave is so weird. We get it. Find a caregiver who does too. When it's not you, it's care.com.
University of Maryland Global Campus, it's a global community.
We help each other through our journeys.
One of my skills that I learned from UMGC is some confidence. I decided to push Howard because I wanted my boys to be proud of us.
UMGC has given me leadership skills, technology skills. I'm able to apply directly to the work that I'm doing.
The UMGC ponen a los estudiantes primero porque te ayudan a cumplir tus metas.
I wouldn't be where I am without UMGC.
Learn about our more than 100 online degrees and certificates at umgc.edu.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
So we called Coventry Direct.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash, even a term policy. Call Coventry Direct to find out if you can sell your policy.
It couldn't have been easier to sell our policy.
Coventry has delivered more than $6 billion to policy owners for their policies.
And it only took one phone call to get started.
Don't sell or let your policy lapse before calling Coventry Direct to find out what it's worth. Visit CoventryDirect.com. Call 800-234-2600. That's 800-234-2600. Coventry Direct. Redefining insurance. All right, we're back on the Bell. Stunning news today from the sports world. The Los Angeles Lakers sold by Mark Walter to former Disney CEO Bob Iger and venture capitalist Josh Kushner for a reported $12.5 billion. Remarkable in that Mr. Walter bought a majority stake in the franchise less than 1 year ago for $10 billion. CNBC Sports' Alex Sherman's been following this story all day long and joins us with more. Look, a lot of people are still trying to get their arms around the entirety of this story, and unfortunately, we may not be able to for a little while.
Well, we're starting to get maybe our first hints of what's going on here. And again, we don't know this for sure because Mark Walter has not said anything, but both Bloomberg and the Financial Times are now reporting that there are insurance companies within sort of the holding company of TWG Global that Mark Walter owns that are rushing for capital to, in essence, pay off certain assets that they owned so that these particular assets don't have a credit rating downgrade. And so there's sort of a rush for capital among some of these assets. That may be the triggering factor here in why Mark Walter suddenly needed to sell the LA Lakers after owning it for less than a year. Again, we don't know this for sure yet, but at least it's the first hint of something that may be going on behind the scenes with other assets that Walter owns that may explain the sale. Now, of course, if in fact that is what's going on, the next logical question is, well, does he need to sell anything else? Does he need to sell the Dodgers? Does he need to sell his stake in Chelsea? I mean, those are the questions I think that people are going to start to ask Mark Walter or people around Mark Walter if in fact that's what's going on. But again, we don't know this for sure. It could be as simple as he was approached with a bid and he decided that he wanted to make a quick buck, and there was a $2.5 billion profit that he made in less than a year. That's also still possible.
It's also my understanding that, and to your point, we don't know if there will be anything related to the Dodgers, but it would be, I'm told, more difficult to do that because of the degree of partners that are involved with that franchise relative to his majority stake in the Lakers. That's one thing. We talked earlier today, and I'd like you to give more insight on this, idea of the ease at which an NBA franchise can trade quickly relative to, say, an NFL franchise where the majority owner has to be 30% liquid. The regulations around private equity are more stringent. You're not allowed to have any sovereign wealth involved. You can't have a private company own a team. You go down the list, and it's just much more punitive, I think, in the process of trying to buy an NFL franchise, even at lofty levels, than it is, as we're learning today, an NBA team as prestigious as even the Lakers are.
Yeah, look, if Walter needs the money quickly, I suppose he lucked out by buying an NBA franchise rather than an NFL team, because you're absolutely right. It's easier to get a consortium of capital together to afford even a lofty valuation, because the private equity limit is 30% for an NBA team as opposed to 10% for an NFL team. So that allows you to get more institutional capital in order to up the bid. And again, in this case, at a valuation for the majority stake of the Lakers at $12.5 billion. That is a record price. It seems like each one of these deals we get in both the NBA and the NFL are record prices, but here's yet another one. Walter owns more than a 70% stake in the Lakers. So at a $12.5 billion valuation, you can do the math. It's obviously somewhere in the, let's say $10 billion range or whatever it may be.
How are you getting your head around the idea of that valuations just continue to go to the moon? And this is obviously the latest example, but the other most recent one would be the Seahawks sale to Vinod Khosla for near $10 billion. And the next NFL franchise that trades after that, whenever it does, will presumably go for a lot more than that.
Well, there's sort of two reasons that are trickling around in people's minds these days. One is, and this was somewhat of the motivation for the Seahawks trade, it's the anti-AI play, right? It's like, this is AI proof. We know that live events are more popular than ever, particularly coming off COVID. They just get more and more popular. Sports ratings are up across the board, and sometimes up significantly. So that's one reason. Then the other reason is there continue to be, it's related to the ratings, but there continue to be more and more money that's pumped into media rights. And the NFL is going to come up on their next media rights deal in a couple of years, and for sure they will be making a lot more money from their media partners than they're already making. The last deal they signed was in 2021. That was a $100 billion deal. They're going to be looking for an increase of, say, could be 50% more, maybe even more than that, depending on how they can convince the various different media partners out there to pay up for their package of games. So that's obviously a bullish sign for all of these different NFL teams, and yet another reason why the valuations continue to soar.
Yet another example as well as to how sports is now the hottest asset class around. And you just said the other day about the Bezos interest in Liverpool of the Premier League in the UK.
Yep, right. We have not seen the wealthiest people in the world invest in majority stakes in sports teams. And yet again, even here, Bob Iger is not one of these uber wealthy people, even though he's in on this transaction. Even Joshua Kushner is not one of the wealthiest people in the world. But maybe we are moving toward a time where we will see a Michael Dell or a Jeff Bezos actually buy a majority stake in one of these teams. Again, we haven't seen that. I speculated reasons why the other day. Perhaps they don't want the public scrutiny of it. But look, it may be that if all of a sudden these sports teams are on a rocket ship up because of this sort of anti-AI hedge, that we do in fact see one of these big tech investors finally invest in a majority stake where they are the majority controlling owner of a major sports team.
Yeah, because people are always looking over their shoulders. They were when the Seahawks came up. They're like, well, Bezos seems a natural. Obviously wasn't. And we'll see down the road. Good stuff. Thank you, Alex Sherman. All right, up next, Renaissance Macro's Jeff DeGraff. On the one sector he sees breaking out right now, he'll tell you what it is when we come back.
Finally, a platform that thinks like you. The new Power E-Trade Pro gives you nearly unlimited customization with up to 120 tools and charts across 6 workspaces, plus automatic pattern recognition from the original original place to trade online.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
So we called Coventry Direct.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash, even a term policy. Call Coventry Direct to find out if you can sell your policy.
It couldn't have been easier to sell our policy.
Coventry has delivered more than $6 billion to policy owners for their policies.
And it only took one phone call to get started.
Don't sell or let your policy lapse before calling Coventry Direct to find out what it's worth. Visit CoventryDirect.com. Call 800-234-2600. That's 800-234-2600. Coventry Direct. Redefining insurance.
Anybody who's struggling with alcohol should try Or Health. Within a week, the cravings were completely gone. Or Health is safe, science-backed, and it works. I couldn't believe how easy it was. Alcohol doesn't run my life anymore.
Text CNBC to 710-710 to learn more.
It's a smart move to get a second opinion. You do it when you're looking for a contractor. You definitely do it with medical advice. So why not with your stock market investments? We can help you see opportunities you may be missing. At Henyon & Walsh, it only takes a second to schedule your free second opinion. So what's there to lose? Speak to Henyon & Walsh, the second opinion people.
Imagine getting paid to play games or for trying a new app. With Free Cash, it's real. You pick games you already like, hit the achievements in the game, and Free Cash pays you. How does it work? Brands pay to reach people like you through advertising. With Free Cash, instead of paying for the ads, they pay it straight to you. Same brands you know, they get attention, you get paid. So what are you waiting for? Try it out. Download Free Cash and receive $10 just for signing up.
Hi folks. By now you've been hearing a lot about investing in YRefi. Why invest in YRefi? Well, how about an investment that earns a 10.25% rate of return that's fixed? Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. YRefi. You'll like investing in America's future.
Don't miss a members-only event.
Get invested. Join the club. I really enjoy the monthly meetings. We go through the club portfolio. It's really helpful.
Join the CNBC Investing Club to access Jim's monthly meeting. Go to cnbc.com/monthly meeting.
Oh, I am hot today.
Remember, tilt your tail, twitch your whiskers, and say your mantra.
I am worthy of a par. Now I see why Ask Rory on Golf Pass is so popular. Visualize your next tee time on Golf Now.
Welcome back. Top technicians are pointing to a breakout in one sector of the market investors should have their eyes on. Jeff DeGraff, he's chairman and head of technical research at Renaissance Macro. He joins us now. It's good to have you back. Welcome.
Thanks, Scott. Good to see you.
This is healthcare, right?
Yeah, healthcare looks really good to us. It tends to be a beneficiary of some turbulence in technology, so I think it fits the bill. But look, it's been a long time. It's been an underperformer. It's had negative alpha for a long, long time, and finally we're starting to see relative performance pick up. So I think there's good news there. It was led by biotech and pharma, and now we're starting to see it in life science and some of the service names.
I mean, it's the best group over the last 3 months, but over the last month, it had a bit of a sleepy time. But you're suggesting that the charts say this is a reawakening, if you will, because others are mentioning that too, that it's primed.
Yeah, look, I mean, again, it was such an underperformer for such a long period of time. You finally are getting breakouts, but important to us is that the relative performance is improving, right? So it's not just the stocks are moving up, they're actually outperforming the rest of the market, and that's usually a sign of burgeoning leadership. So I like what we're seeing there.
What about market at large? You know, I keep saying targets keep going up. We had another one today from Ed Yardeni. He's been doing this a long time. Says we are, because of what's happening with earnings, we're in a bullish takeoff, essentially.
Yeah, you you've got a trending market. Look, I mean, you're not going to hear us fight about a market that's trading at a new high. I mean, that's just bad policy, historically. I would say the breadth is confirming, which is good news. The trends are there. What's interesting is the deficiency, and this is a bit of a nit, so I don't want to make it too caustic. But the 20-day highs have been really pretty anemic. They've been running in the kind of mid-teens, and you'd expect a market that's making a new high to be in the 30, 40+% 20-day highs. So it really belies the rotational aspect of this. That's not bad. It just it says there's a broadening out. But we would like to see, just for kind of the duration and durability, we would like to see a little bit more momentum in this. But yeah, the trends are positive and breadth is confirming, and that's usually good enough.
By momentum, are you talking in both time and price? Because I'm looking at, say, 1 month of all these different sectors. Financials are up near 4%, tech's up better than 3%, industrials are right there, healthcare's up near 5%, materials are up more than 3%.
So for us, it's how many or what percentage of names are making 20-day highs, right? Which isn't a big bar or a high bar to clear. And you want to see a collection of those names do that on a daily or weekly basis. And again, it's this week it's materials. Last week it might have been healthcare. And again, that's fine. But we'd like to see kind of this surge in 20-day highs, because that means money generally is coming back to the market broadly, more wholesale. So this is still a little bit more selective the way people are playing it. Again, I don't want to make it sound bearish, but to give us kind of like, hey, we're good for the next 6 months. Don't worry about a 10% correction. We need to see those kind of numbers start to stick on 20-day highs. But between here and there, we're in a good spot from a trend perspective.
Forgive me, I didn't mean to step on your toes there. Gold, you say it's overbought. Tell me quickly why.
Very, very short term. We had a bubble signal in this back in October. It peaked out in January. It's been underwater for a long time. It's had a recent surge, and it's gotten overbought. The trends haven't changed yet. I actually think it's building a base, so I think it's more good news than not. Tactically, I wouldn't be buying it right here, but as it consolidates, as it comes in, and as it weakens, I think you want to start building positions for a resumption of the uptrend that just got ahead of itself about this time last year.
Good stuff as always. We'll talk to you soon, Jeff. Thanks.
Sounds good, Scott. Thank you.
Jeff DeGraff. Coming up, top wealth advisor Sherry Paul's back. She'll tell us what she's telling her clients to do with stocks hovering near all-time highs. We're back after this.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Relentless innovation has changed the way we invest. Innovator ETFs from Goldman Sachs Asset Management brings you SFLR. Seeking to protect from deep market declines while aiming to provide unlimited upside potential. Defined outcomes, relentless innovation.
When I started Walton Goggins goggle glasses, I needed a website. And GoDaddy Aero uses AI to make a beautiful website so fast it'll blow my customers' noggins while they're shopping for Goggins for their noggins.
From senior to childcare to pets and more, the new Care.com makes it easier than ever to find the care you need. And you don't have to hire just anyone. You can find a background-checked caregiver who's the right fit for you. Join now and find care at Care.com.
Life insurance is a wonderful asset, but what happens when you no longer need it, or you can't afford it any longer? Meet Tom and Susan. They chose to sell their policy for $200,000 cash. Now they're sailing through retirement. If you own a life insurance policy of $100,000 or more, you may be able to sell it for cash. Get an instant estimate at ovidlife.com or scan the QR code on your screen, or call 1-800-502-0100. That's 1-800-502-0100.
With Turo, cars are wherever you want to pick them up. Rental cars are in 7H, space 45, which is actually back that way. For the right car, right where you need it. Turo, rent a car, not a rental car.
Advanced nuclear fuel, an important
economic growth going forward. The innovation, the ingenuity, and the dedication of this team, I couldn't be more excited about the future of this business.
Welcome to Closing Bell Overtime.
Get the essential post-market edge, after-hours action, and opportunities.
Big earnings, all due in the next few minutes.
The economic impact is just beginning.
Closing Bell Overtime, 4 p.m. Eastern, CNBC.
It proved that when you sit, stand, and move more, you can work happier and healthier. So whether you're furnishing a whole office or outfitting your home office, Barry has everything you need. Our bestsellers are on sale at Barry.com.
There's likely over 300 contaminants in a regular glass of your drinking water. That's why we created Sans. Reverse osmosis is the gold standard in removing all of the harmful contaminants hiding in the water you drink every day. Chlorine, microplastics, funky tastes and odors, and Sans just sits on your countertop. No installation, no plumber, pure, clean water in a glass pitcher. Because a healthy home starts with healthy water.
We're back. Stocks getting some relief from that inflation report today, but several other economic measures are looming this week. Sherry Paul is a top private wealth manager for Morgan Stanley, joins us back at Post Nice. Nice to see you.
You too.
Sat down and you just said we're going to help people today.
Yeah, we are.
Help them make money.
Yep.
You've been doing a good job at that. What do we do today with this market?
Well, if you're not invested in it, you should be putting together your portfolio strategy and definitely own equities and ladder in some fixed income and own a little bit of the commodity market and understand that we're in a super cycle and not get too caught up in a FOMO moment if you haven't already been included in this outcome.
I was reading this Wall Street Journal story today about all this cash that's sitting around on the sideline. You think there's too much cash on the sideline that it needs to be put to work, whether it's in stocks or bonds or both or whatever?
So, you know, what gets me out of bed in the morning is helping people make money, okay, and then helping them self-actualize in their lives with their money. And the thing that keeps me up at night is watching people stall out because they get into an analysis paralysis. And there's so much information right now coming at people that has no bearing on really what the trend is telling us, and that people are stalling out. So, yeah, I think there's too much cash. You look at, you know, the inflation numbers and you look at the opportunity set in terms of the CapEx spending. We have a blowout earnings. We got the big, beautiful bill. We have some political things to get through in the fall, but beyond that, people should be invested.
Where do you like most right now in the market?
Well, I mean, I think a core staple now is in tech. We've talked a lot about this in terms of the subsectors, cybersecurity and cloud. Obviously, the chip sector, which is now, interestingly enough, being debated as potentially a new asset class, which I think is a seismic shift in terms of the financial market, innovating in terms of how to fund this build out, and then obviously the financial services themselves.
So let's go to chips real quick first. Yeah. When you say it's a seismic shift, I know what you're referring to, but then can we make the leap and say it's seismic enough that was a cyclical area of the market traditionally is now more secular because of the very historic build out you're talking about?
I don't think so. I mean, I think that we just look at this as a form of like, where is the CapEx spending now going to occur? And if it's now, there's a possibility it comes off balance sheet. That was the big worry a month ago or two ago when people were talking about the debt ratios on corporate balance sheets borrowing to build out AI. And now if they're able to offshore that into a new financial structure, that changes everything in my mind, especially when it comes to earnings.
Earnings are broadening out.
Yeah.
I mean, that has to be a principal part of your bullishness, right? I mean, that's why Ed Yardeni goes to, 42.50 today. I'm sorry. Well, not 42.50. 84.20. 84.50.
I was going to say, that feels a little like, I don't know, 5 years.
84.50, I think.
Yeah, absolutely.
My head's spinning with too many numbers. I say too many of these numbers too often.
Well, you know what's funny is that's what's happening to investors. Their heads are spinning over the numbers, and what we want to do is give them actionable ways that they can actually put their money to work instead of sitting in the conversation with the video.
The fact that we're so balanced over the last month, more so than we've been. I just read off to Jeff DeGraff, who's a technician who looks at the market. The balance in sector performance is pretty astounding, really, what people have been clamoring for.
Yeah.
Does that continue?
I think so, because I think now we're in the next phase in this, which is the rapid installation phase, and the ability to actually put evidence to the story. And the evidence is in the earnings, okay? Because remember, capitalism is always a story. Somebody comes up with a great idea, they sell us the story and say, invest in my idea. And the evidence of the story actually being brought to fruition as having some value in our economy is through the earnings cycle. And so the gap in between that idea and the evidence is where people were sitting over the last 3 years far too long, and now we have that evidence. And I think moving forward across the board, it's one of the most well-balanced setups going into 2027.
I mangled the Edgar Denny comment, so I want to correct it.
Yeah.
8,400 from 8,250. 8,400, 8,250, just to make sure the record is set on where he thinks we're going from here. Do you think because you like cyber and software's done better, that the depth of that area of this market was greatly exaggerated? Is it a place that you would like? If you think semis have had this seminal shift, what about software?
I think that software was over-exaggerated, right? But the concern was warranted. And I think what investors need to be doing right now is actually placing investments instead of bets. In the early days of this, there was a lot of like meme stocks and the betting of either a consolidation or an outright debt. And I think now we have the evidence through earnings that is just not the case.
Financials, you like?
I like financials.
We're going for, I think, 11 weeks in a row.
Yeah.
We haven't seen a streak like that since like 1989.
Just beginning.
It is?
Just beginning.
Why?
Anyways, because we're coming into like a full deregulation cycle. Lending is starting to pick up. We've got, productive IPO slates, not to mention the credit boom. And so all of those things really come into, I think, supporting financials going forward.
It's good to have you back. Enjoy the rest of the summer. Sherry Paul. 8,400 from 8,250. Coming up, a possible takeover bid sending shares of one restaurant chain soaring. Details next.
Nuveen invests with the foresight and vision that come from navigating more than 125 years of market cycles. Unlocking the potential of public and private markets, spanning real estate to private credit and infrastructure to natural capital. Finding opportunity today to shape how portfolios are built for tomorrow. Nuveen. Invest like the future is watching.
Is this how you're hoping to retire? Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track.
Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better.
Call now for your Comfortable Retirement Kit. Call 1-800-759-4477.
Call us today. You don't have it coming to you unless you plan for it.
If your portfolio is $1 million or more, call 1-800-759-4477.
In today's fast-moving job market, staying ahead means keeping your skills updated. That's why at University of Maryland Global Campus, we offer an affordable, skills-based education that helps push your capabilities and career forward. We'll equip you with the know-how to apply emerging technologies like AI, data science, and automation. Whether you want to move up or move on to something new, UMGC can teach you the skills you need to succeed again. No application fee if you apply by September 1st at umgc.edu.
Corporate operations demand execution speed and reliability. Enter Circle 8, a business transformation platform operating throughout North America and Europe. With over 16,000 specialists delivering technology and workforce solutions to the largest private and public entities worldwide, CIRC generates annualized revenues exceeding $1.2 billion while trading at a fraction of that size. Through recent acquisitions, Circle 8 is rapidly taking market share from the major international consulting firms. CIRC on NASDAQ.
I'd like to welcome Medicus Pharma along with their leadership team, employees, and all our distinguished guests.
Ringing the NASDAQ bell at this is a high honor. The past year has been foundational for Medicus, and the NASDAQ listing was the most remarkable thing for us. Clearly, they have been a great partner as we advance these novel therapies.
In alternative investments, the best opportunities aren't visible to everyone. As part of the world's largest bank, few can rival our ability to find, fund, and capitalize on opportunities across private equity, real estate, infrastructure, private credit, and beyond. Companies all over the globe trust us to fuel their growth, creating deep connections that keep us at the forefront of deal flow. And when you invest in alternatives with JP Morgan Asset Management, our access becomes yours.
Welcome back. We have some news out of Washington. Megan Cassella has that for us. Megan, what do we know?
All right.
Scott, it was just announced that White House Press Secretary Caroline Leavitt will be stepping down from her role at the end of the month to spend more time with her family. President Trump just announcing this on Truth Social, writing, "Our wonderful White House press secretary and one of my most trusted aides, Caroline Leavitt, will be departing her role so she can spend more time with her beautiful young children and family. He calls it a decision I totally understand and respect. Caroline will now be one of my top outside advisors and an influential voice within the Republican Party as we work to defy history and conclusively win the midterm elections." In her own statement, Caroline again attributed this to her family, saying, "The truth is, since returning to the White House after the birth of my daughter, I have felt in my heart I cannot be the best mom while devoting the constant time and attention to the job of press secretary." So, Scott, by my count, this is the fifth high-profile departure in the Trump administration since the start of his term. It was Lori Chavez-DeRemer, Kristi Noem, Pam Bondi, Tulsi Gabbard, and now Leavitt, again remaining as an outside advisor, and some turmoil now, or some turnover, I should say is the better word, in the Trump administration. Scott.
All right, Megan, thank you very much. Megan Cassella coming up. Cisco and Cerebras about to report earnings in overtime. We'll tell you what to watch for. Plus, Cerebras shareholder Malcolm Etheridge, he'll join us ahead of that print next.
They say you learn something new every day.
And we just learned that life insurance is a valuable asset that can be sold for cash.
So we called Coventry Direct.
If you own a life insurance policy of $100,000 or more, you may be able to sell all or part of it to Coventry for cash, even a term policy. Call Coventry Direct to find out if you can sell your policy.
It couldn't have been easier to sell our policy.
Coventry has delivered more than $6 billion to policy owners for their policies.
And it only took one phone call to get started.
Don't sell or let your policy lapse before calling Coventry Direct to find out what it's worth. Visit CoventryDirect.com. Call 800-234-2600. That's 800-234-2600. Coventry Direct, redefining insurance.
Get the Fandango Fan Club Summer Movie Pass. Join now and get 4 free movie tickets for any movie in any format, plus fan club member benefits and more. Join now at fandango.com/summerpass.
While the world embraced the chaos of demolition, Bathfitter chased perfection. The PermaFit system. A tub or shower custom built to the millimeter. Fused to your home in a single day. We eliminated the grout, leaving only a seamless, watertight masterpiece. More than a renovation, a revolution. Bathfitter.
There's a power within each of us. When awakened, it can boost performance, enhance learning, even help you work smarter. And you can unlock it with one simple thing: better sleep. Sopra provides that with our luxury mattresses, handcrafted with premium materials in our American factories. We'll even deliver to any room in your home for free. Sopra, you deserve the comfort of a great night's sleep.
The market's brightest opportunities may be the ones most portfolios miss. At EQT, we
not buy. For 30 years, backing tomorrow's businesses before they're publicly priced. Through discipline and hard work to create long-term value. That's Alpha. Done better. EQT Private Markets.
It was the stock market that started history's greatest wave of wealth creation. From factory workers in Detroit to farmers in Omaha, anyone could own a piece of the great American companies. But today, our most innovative companies are staying private longer, which means everyday Americans are missing the memo. Until now. Introducing VCX, the public ticker for private tech.
I got some news on Wendy's. Let's get to Brandon Gomez with that. What do we know here?
Hey there, Scott. Yeah, we talked about it earlier. Wendy's shares are up 13% on a report that Nelson Peltz's Trian is preparing a takeover bid for the burger chain. People familiar with the matter told the Financial Times Trian is working on a proposal with backing from an assortment of investors, including Blue 5 Capital and the Flynn Group. Trian declined to comment on the report when I reached out to them, but Wendy's just now sending us a statement saying it would, quote, thoroughly review any proposal submitted by Trian consistent with its fiduciary duties. The board does regularly review the company's strategic priorities and opportunities with the goal of maximizing value for all shareholders. The company did just pull guidance last quarter with Bob Wright at the company's helm now. As they lose market share to the likes of some competitors out there, we'll see again how this deal might come together, Scott.
All right, good stuff, Brandon. Thank you for that. That's Brandon Gomez. We're now in the Closing Bell Market Zone. Mike Santoli and Capital Area Planning's Malcolm Etheridge here to break down these crucial moments of the trading day. Christina Partsinevelos covering two big earnings reports that are coming in overtime. Cisco and Cerebras, get to that in just a minute. But Michael, let's get your thoughts on what we were waiting for today, which was the CPI, and the market liked what it got because we looked pretty decent for the better part of the day.
Yeah, I would say, Scott, that the CPI was so on target it didn't give markets a whole lot new to react to, which is good because that has the benefit of getting a potential negative catalyst out of the way. And that really just left the market to, I think, have this squeeze higher in semis and other AI hardware stocks as we got conviction build throughout the last couple of days through CoreWeave earnings and obviously the NVIDIA financing facility that seemed to say, okay, no end in sight for the spend. That being said, it's almost as if the market says, how little can the indexes move if semis are up 2.5%? That's the action today. The S&P's barely doing anything. It's flat for the week. Semis are up 2.5% because all we do is sell one thing against another. It's not really harming the trend, but it is showing you that it's a very kind of back and forth tug of war market below the surface. Meanwhile, that action causes volatility to bleed lower and the VIX is under 15.
But the AI bulls got fed yet again today after what CoreWeave delivered and Supermicro and then some of the other names.
There's no doubt about it. Again, I mean, there's a sort of a squeezy aspect to it. People feel underinvested in the theme after having probably liquidated during July. That being said, you know, they're selling the hyperscalers against it. So it's not yet this kind of market where we treat it as everybody can win, at least in a day-to-day manner.
Good stuff. We'll see in a little bit. Less than 4 minutes, in fact, in overtime. That's Mike Santoli. Christina, Cisco and Cerebras, tell us more.
Yeah, specifically with Cisco, investors want proof Cisco's surging AI orders are actually converting into recognized revenue, plus the first real read on how big that actual AI business gets next year. The goal is roughly $6 billion in fiscal 2027. The other talking point is campus networking orders. It's the other engine to watch after growing last quarter about 25% quarter over quarter. You do have wild cards, whether memory, we know this, and component costs keep squeezing margins, and then whether the security unit finally turns. There was some weakness last quarter. Cisco stock has run roughly over 60% year to date, so the bar is set high. For Cerebras, which makes wafer-sized chips, supply is the whole ball game. Watch for Progress bringing its own data centers online because every month it leans on rented G42 capacity, so it's actually renting capacity, and margins then take a hit. We're going to listen for some color on the new AMD and CrowdStrike deals and any hint of a next-generation chip coming just over the next week or so. There's also a big lockup that frees September 16th, so management has to prove it can execute before that point.
All right, good stuff. We'll see what happens, and we'll look for you in overtime with those numbers. Christina, thanks. That's Christina Partsinevelos. To Malcolm Etheridge, who owns Cerebras. You bought it in July. What are your expectations going in?
Yes, Scott, I think for folks like me that bought post-IPO after that runoff happened, I bought it somewhere around 175. A lot of the positive news has already been sort of baked into this story with the addition of the CrowdStrike relationship and then AMD thereafter. So it's possible that it could continue to run after they report, but you want to remember as a potential investor that this is a company that's still not super profitable. They're doing about $200 million in revenue so far. They're tied to one core client, which is OpenAI. So it's still early days is my point. I'd be willing to add additional shares if we do get a little bit of a sell-off after the print, but I think this is one where it's still a little bit early to get too excited just yet, and they're really beneficiaries of the timing of when they're set to release their earnings more than anything, since chips have come more back into vogue in the last few days here.
Interesting move going into the print, right? I mean, up 12%.
Well, I think that's the point. Investors are excited right now because everything chips is doing very well. And so it being a chip name, especially one that sort of going in the opposite direction of the traditional NVIDIA typical approach to GPU build, we take the biggest wafer we can instead of breaking it down into tiny fractals. And I think that is potentially a long-term solution that plays out for shareholders. I just don't want anybody who's looking at the move today to think that this rocket ship is about to take off and get caught up in the hype that really wiped people out after the IPO.
I got you. I got less than 30 seconds before this bell's going to ring. Just give me a quick thought on this market, Malcolm.
Yeah, I think that right now the market is not too worried about CPI. The jobs number just put one more feather in the cap of the bulls. And so taking that together with the positive earnings that we got from the four main hyperscalers, I think this bull market is going to continue to run for the next few weeks here.
We'll see you back on the desk soon. Look forward to that, Malcolm. Thank you, Malcolm Etheridge. So we do have those important earnings coming. Let's see if the tech momentum, certainly from an earnings perspective, continues. In a matter of moments, coming in oversized. Looks like the Dow's going to be a smidge negative, but the S&P, the Nas, taking a little bit of a bump forward over time.
The bells ringing into the trading day at the NYSE. Jefferies doing the honors, and at the NASDAQ, the International Youth Foundation and the Caterpillar Foundation ending the trading day. Welcome to Closing Bell Overtime. We're live from Studio B at the NASDAQ market site. I'm Melissa Lee along with Mike Santoli. Mixed day on Wall Street as the Dow unable to hold on to earlier gains, ending mostly flat on the day. S&P up about 0.2%. The NASDAQ, the leader, up about 0.5%. S&P and NASDAQ posting their first positive session in 3.
Momentum, a standout in today's session with semis and other AI infrastructure stocks back in the spotlight. We'll have much more on that ahead.
And we're awaiting two key reports from the AI ecosystem, Cisco and Cerebras. Cisco has a lot to prove with the stock up 23% since its last report, the top performing Dow stock this year. We are within 1% of highs in the S&P 500, and it just feels like a churn.
Yes, without a doubt is. I mean, the S&P is flat on the week. It's basically where it was 1 week ago as well. So just a little bit below those intraday highs. What's fascinating is for a flat S&P 500, Amazon, Alphabet, Apple, all down 3% this week.
Yeah.
Right? So you basically had the stuff that got us to the records is now undergoing profit taking. Alphabet, Meta, kind of struggling with their 50-day moving averages. So it's all to say it's still unclear if you can trust the makeup of this latest thrust higher. Not that it's a problem. I don't think there's a trend that's eroding really, but it's one of those things where the market sort of grabs at what works for today,
right?
Keeps the index in the game, and you're not really sure if that translates into tomorrow.
And obviously for today, at least, we had a reignition of the momentum trade with all the earnings after. I mean, SMCI, all these names that had been sort of the poster children. Even Bloom Energy, comments, right, from one of the reports last night about using Bloom as sort of behind the paywall, enhancing projects. That got a huge bid. So that's where the markets are at right now.
It seems like a pain trade, obviously. That's the stuff that was under liquidation in July. SpaceX up like 13% on the day. There's no news there, except that it's an AI infrastructure play right now. And that's why I also called it a little bit of a squeeze, not just that people all of a sudden were reassured of the fundamental story.
Let's get over to Christina Partsinevelos, who's got more on today's market movers. Christina.
Yeah, well, stocks climbed today after the July inflation landed right where Wall Street expected, and of course, a strong round of tech earnings you guys really spoke about. So the standout this quarter was Breath. Goldman Sachs saying that 9 of the 11 S&P sectors right now are growing earnings at a double-digit clip. Specifically with the AI infrastructure trade, roared back today. CoreWeave, Supermicro, Nebius all jumping on results with bullish signals specifically on chip demand and GPU pricing that seems to keep climbing for even older chips. So a rough sell-off in July, so this was a reason to get back into the name, something Mike just mentioned. One line from the Nebius call said it all. There are several buyers for every GPU and prices are growing. You can see Nebius, look at that 2-day chart, 34%. Memory names also rallying, Samsung, SK Hynix. Surge on a report that Singapore's state-owned investment company Temasek wants to buy in directly, and that helped those names, as well as the DRAM ETF, again with the momentum trade climbing over 7%. Chips gained at software's expense. DIGV was a little bit down, but Workday, Adobe, Apple having some of the biggest laggards on the NASDAQ today, the NASDAQ 100 specifically. And then switching out of tech completely, retail did lag today, especially these two names. So Gap fell about 3% after Jefferies cut it to hold, really flagging softer trends at Old Navy. And then Tapestry also eased ahead of its earnings tomorrow, which I think are in the morning, a test of whether Coach can actually keep up its international momentum and no more discounts and sales, etc. Guys?
Yeah, something to watch for tomorrow. Thanks, Christina. Treasury yields easing slightly today as the latest inflation numbers were in line with expectations, easing the odds of a rate hike, at least just a bit, coming in the coming months. Rick Santelli is in Chicago with more on all that. Hi, Rick.
Hi, Mike. Indeed, we see the odds have fallen in terms of what the CME probabilities are in the low 40 percentile last I looked. Maybe a closer look at the numbers this morning, which did come out as expected. Now, if you look at a chart going back towards 2024, if you look at the blue line, that's year over year. That includes food and energy. And the big spike there on the far right-hand side, that was the end of February, the beginning of the war. We could see what happened. But if you look at the orange line, it also popped at the end of February, but its 2.5% is back down to 2.5%. Now, what do those charts tell us? They tell us that the effects of the war, at least based on food and energy costs, predominantly energy costs, they've reversed out. And what's left is the headline number, which is also coming down. So many believe, as do I, that we need to ride this out to some extent, not to say that what's going on in the Mideast is going to completely dissipate its effects on the interest rate or the inflation side. However, it certainly seems though the wait-and-see game is appropriate from the Federal Reserve standpoint. As you look at how the 2s and 10s reacted, right there a little past the middle is 8:30 Eastern. A lot of volatility, and rates have floated back since that release. But we're still down a couple of basis points in a 2-year, and we're almost unchanged back in the 10. Melissa, back to you.
Rick, thanks. Rick Santelli. Oil prices remaining steady today despite a new attack on vessels in the Red Sea. This is new ship tracking data shows that just 14 vessels crossed Strait of Hormuz on Tuesday. Pippa Stevens got more. Pippa.
Hey, Melissa. A tight trading range for oil today as both OPEC and the IEA cut their demand forecast for the year, with the latter now predicting a 1.6 million barrel per day contraction. That's amid general ambivalence within this market that has seen such large swings over the last few months based on rhetoric around a potential deal. Total Oil Associates Andy Lipow adding that increased production from Canada, the U.S., Guyana, Brazil, and Argentina is also helping to pick up some of the slack. Now, we did also get a bearish inventory report today that showed a surprise 17 million barrel build in U.S. stockpiles. Kepler's Matt Smith noting some of this was a timing impact due to a spike in Venezuelan deliveries, which topped to 900,000 barrels per day last week, as well as subdued exports. Distillate exports, though, hitting a record high at 1.94 million barrels per day, with supplies in both the Middle East and Russia currently offline. U.S. inventories declined slightly and are about 12% below the 5-year average. Now, demand on the week was muted as this is seasonally a weak period ahead of stockpiling for the winter heating season. Guys?
Pippa, thank you. Cerebras earnings are now out. Christina Partsinevelos has the numbers.
Yeah, Cerebras beat on the top line, core revenue of $210 million, more than double a year ago. The loss per share came in at $2.98, though. That's a GAAP number, so we're not going to compare to the non-GAAP figures that analysts use. Adjusted EBITDA was the actual standout. So this is the profit you take out, before all the taxes, depreciation, etc. It was a loss of $53 million, smaller than the $79 million loss expected. So that's good news, and the company also raised its guidance. Cerebras sees third quarter core revenue, so core revenue between 214 to 216 million, so just think midpoint 350 million for the full year, and then 880 to 890 million. Margins, though, are going to drop sequentially in Q3. I spoke to the CEO, Andrew Feldman, who told me the company is, quote, hustling. It's renting back capacity from a customer, specifically G42, on short-term deals while signing customers to long-term contracts. So his words were gross margins will, quote, snap back up. And when I asked about OpenAI's customer concentration, Feldman said a frontier lab is going to be a big chunk of any chip maker's business right now, even NVIDIA's. Nonetheless, you can see shares dropping roughly 8%. And I know you also have the Cerebras CEO tomorrow at 11 a.m., which I think, Mike, you were supposed to promote, but I'll do it for you.
You just did it. Thank you very much. Yeah, 11 a.m. on Fox and Farm.
Well, after lagging for the past 2 days, tech was a big leader today as a momentum trade came back to life. A change of pace from July when the momentum ETF fell nearly 13%. Will tech go back to dominating the market? And if so, will it keep stocks marching to new highs? Joining us now is Eric Johnston, Chief Equity and Macro Strategist at Cantor. Eric, great to have you with us. For at least today, it looked great for the momentum trade, but I'm wondering how long you think this lasts. It feels almost like just a churning of different sectors in the market from day to day.
So I think that tech overall can do very well. You know, one of the things that we saw when the market was, and the S&P 500 was consolidating, was there was this big negative correlation between the hyperscalers and the AI infrastructure names. And, you know, the more CapEx that was expected, the market took it as a negative for hyperscalers and positive for everything else. I think now there's been an inflection where they can really work together, and it has started, and we think it's going to continue because there's been this inflection in the view around ROI on this CapEx. You're seeing it from the GPU rental prices are going higher, cloud growth is, you know, accelerating. You saw that both from Amazon and Microsoft beating. Margins are expanding, and the CapEx is being explained around how long it's going to last and when there'll be an inflection around cash flows. And so I do think that they can now start to work together, even though a day like today they went in opposite directions broadly over the last 3 weeks. There has been a material change. Yeah, I guess, Eric, I see some work about, you know, how these momentum reversals have tended to go historically. When they get into these crazy extremes, then you get the severe pullback as we've had. Recovery right now, it's not necessarily all that common to have a perfect V bottom back to the highs, because of what we now know in retrospect is those highs were set with a lot of leverage and crowding that maybe is not going to be rebuilt in a hurry. Yeah, so we've done a fair amount of back testing around how this, you know, has played out historically, and you typically get at minimum a stabilization, and which means that there are times that you simply just go sideways for a month or two, but in most cases you get a bounce. Now the magnitude, you bring up a great point that if you look at, you know, are we going to go back to the highs? I don't think the highs are a great data point to point to, because there were other things that were involved, as you pointed out, around leverage that are unlikely to repeat themselves. However, if you look at the fundamentals of the long side of the momentum trade, they're extremely strong, and they are, you know, to some degree, you know, accelerating. And so as a result, in this case, our work shows that not only from a quantitative back test, but actually looking at the current fundamentals, that in this case it will be more than just a stabilization, and they can start to actually work higher, which they've done over the past, you know, 5 to 10 days.
Right. Eric, hang on. Cisco earnings are out. We want to get to them with Christina Partsinevelos. We do see the stock jumping about 3.5%. Christina.
Yeah, so we are seeing a top and bottom line beat, EPS of $1.22 on revenues of $17.25 billion. The networking revenue did come in strong, $9.79 billion. Gross margins were just a hair above. Remember in the past, memory costs, components, supply costs have really eaten in margins, so we'll see what they say on the call in regards to that. For the quarter two, I should say the AI revenue. So they are now saying that full year fiscal 2016 2027 AI revenue could hit 7.5 billion. I know from the notes I saw, we were talking about 6 billion, so that's a little bit higher. Full year guidance really strong, specifically for Q1. The range was $1.32 to $1.34. Street was anticipating 116 adjusted on Q1 revenues of 18 to 18.2. So that's more than $1 billion what the Street was anticipating. So nonetheless, despite that strong guide, it seems like the market is trying to digest it. First, the stock was up, and now it's down about 1%. So really, networking drove this business, and margins maybe could have been a touch better. Guys?
Just to clarify, Christina, they gave fiscal first quarter guidance, but not full year, correct?
Full year was EPS $5.05 to $5.11 versus the $4.80 estimates, and then sees full year revenue at $72.2 billion versus to $73.4, higher than estimates. So yeah, they did.
Okay, got it. Christina, thank you.
Thanks.
Christina Fresno. Cisco CEO will break down the results tomorrow, 9 a.m. Eastern Time on Squawk on the Street. We want to get back to Eric, who's standing by, I think. There we go. So let's say tech is able to hang on to the leadership role. What happened to the broadening trade that we've seen? What happened to financials, for instance?
So I think that while the rest of the market, I think, is actually gonna hold up, I just think it's gonna be this sharp outperformance that goes on in tech. You know, the fundamentals in a group like, you know, financials and anything that is levered to the economy is very strong, because you're getting this wealth effect, you're getting the capex, and you're getting the fiscal spending. And so the economy, despite what we're seeing, a little bit of softness in the labor market, the economy, you know, we think continues to be strong, certainly throughout this year and into early 27, which should be a good backdrop for the rest of the market. It's just that the acceleration in, and really the earnings growth that we're seeing these massive numbers, it's mostly coming from tech. And
No, I mean, the growth there is obviously, it's kind of drowning out all the other stories. And there's this interesting offset, at least potentially, Eric, where the bigger the projections get about the volume of spend, how fast capex is going to happen, they're going to bring all this capacity on, where the earnings are going to flow. It seems like that means the more capital is going to be demanded, and the more we have the fear of some kind of an overheat, which maybe pushes rates up. I mean, it's obviously not necessarily at this point undermining the whole story. I just wonder how you see that playing out.
Yeah, so I think that's a big risk, and I think you know, the amount of capital that is expected to be needed is going down to at least a marginal degree, based on the increased cash flows from operations that are coming, you know, from the improved ROI that I was mentioning. But the needs are still going to be very large, and we still have a lot of equity supply coming to the market. And I think importantly, you know, one of the things that we're focused on around earnings, the earnings growth in north of 30%, sales growth in the teens. But we have to be very real around where those earnings are coming from, and that they're not your typical earnings that are just going to sort of grow in perpetuity. We're seeing this big spike, and it's coming from what I would call a lower multiple place. And so we do have to be cognizant of that it probably won't get the same multiple that we saw entering this year. We entered this year at a 23 multiple. I don't think we're going to see a 23 multiple again. And so we just have to be careful around, you know, around the earnings that we're getting.
Eric, great to see you. Thanks. Eric Johnston.
Great to see you. Thank you.
By the way, we were just showing Cboe Matrix closing out the trading day there for options. We also want to point out the decline in Cerebras, down about 12% in the after-hour session on the back of its results. A lot of it wasn't comparable, but hardware sales did look like it was pretty good, so that's what may be dragging the stock.
And these tiny tweaks to revenue guidance for the rest of the year. I mean, given the volume of dollars in play, it was just like 868 up to 880 in terms of annual revenue. And you know, this is a, I don't know, $72 billion market cap, so it's obviously a big lift to kind of grow into.
Yeah. Coming up in overtime, we'll look at why McDonald's may be on the verge of a breakout, plus Goldman Sachs dives further into the ETF business. We will dive into Cerebras' earnings for the stock, as we mentioned, down 12% after hours. You're watching Closing Bell Overtime live from the NASDAQ market site.
So I ran some numbers. You guys might want to consider moving.
Somewhere else?
I doubt it.
These shall ease your grievous throat most readily.
Or maybe a saltwater gargle.
Sold. Congratulations, sir. That is a new record.
You realize a JPEG doesn't count as a financial plan, right?
Maybe. I mean, yes. No?
PNC Bank believes a little boring advice goes a long way.
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170-plus global markets. The best informed investors choose Interactive Brokers.
That'll be a new customer. Don't miss it.
Hello?
Hey, Kev. Heard of Quo? It'll help us handle calls and texts.
Quo. Yeah, Quo.
Great news! We won the job!
Yes, we did.
Get next-level multitasking for your customer calls and messages while you work. Always say hello with Quo.
These bills are crazy.
She has no idea she's sitting on a gold mine.
She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit CoventryDirect.com.
For watching shares of Cerebras in the after-hour session down by more than 12%. Reporting earnings moments ago, Cerebras finishing the day up 12%. Joining us now is Wedbush Securities semiconductor and hardware analyst Matt Bryson. He's got a buy rating on the stock, price target of $280. Matt, great to have you with us. What's your initial take and why the stock is down?
When you look at the guide, particularly the revenue guide, I think people were expecting a little bit more, right? It's just ahead of my numbers, for instance. And when you look at a company coming public, there's an expectation that they set themselves up with a bit of leeway to beat, and at least on the revenue side of things, they didn't quite get there with the guide.
And what's the thesis at this point? I mean, we should keep in mind it was this sort of highly anticipated blockbuster IPO. The stock traded as high as $386. It's down in the current after hours around $230. So in terms of the longer term proposition, has it evolved? Has it changed? Where does this company sit in the whole mix?
Well, I think actually, from a thesis perspective, you've got relatively good news, right? In that last quarter, you had AMD working with them, using the Cerebras system paired with Instinct for fast inference. You have that deal with CrowdStrike. And so their proposition is they're going to see share gains. The way you get share gains is by getting new partners, new customers. And you had a couple announcements last quarter. So, I think thesis-wise, they're in good shape.
Aside from the guide, Matt, I mean, were there any other line items that jumped out at you, maybe disappointing? Do you think the guidance is maybe just being conservative on the out quarters?
Oh, I'm sure they're being conservative on the out quarters, right? They came in ahead of numbers. It's just that I think again that people are looking for a little bit more than a few million of growth. But I mean, you look at gross margins, they were above what I had modeled. You look at revenue, it was above what I had modeled, and so it's not. I mean, I just think again there are relatively high expectations. This is a company trading on 2028 numbers. And so just people are looking for more of a beat this quarter.
Yeah, one of the, I guess, selling points of the company and its strategy was, allowing customers to use less memory. They came public probably at a time at the most fevered moment for people worried about the scarcity of memory long term and the pricing and all the rest of it. Memory stocks obviously are way off. Has that equation changed at all, or has it just been, memory got super overbought and had to come in?
So I think with memory, certainly memory got to lofty valuations. But then, I spent the last week at a memory and storage conference, and it's very clear there's just not enough DRAM. There's just not enough NAND. That hasn't changed. Prices are still going up in Q3. I still think that's a advantage that Cerebras has. It's going to last through 27. That's going to probably last well through 28, where they just don't need HBM. And so it's cheaper to run their systems, and they don't have a constraint that is affecting everyone else making, or most everyone else making accelerators.
We're just about 40 minutes away from the call. Matt, what's your question to management?
My question to management is, where are you in terms of getting new customers? So it's really hard with new tech to evaluate where it is versus old tech. I think one of the reasons I'm so positive on Cerebras is they signed OpenAI, they signed Amazon, right? So they have the best and brightest in the world choosing their technology, and so I want to see more customers. Now, having said that, they have their big user conference next week, and I would expect that that's when we're going to get customer announcements.
Sounds good. Matt, appreciate you jumping on. Matt Bryson. Just ahead, as the markets continue to march toward all-time highs, are investors overlooking potential landmines like yields, geopolitics, and AI spending that continue to grow? We'll debate that. And be sure to check out my new weekly Market Memo newsletter featuring analysis of key market themes, exclusive commentary from top traders and investors. You can subscribe at cnbc.com/Market Memo. Closing bell overtime. Enjoy.
I'm feeling more confident about the future after reviewing my choices with Voya. Have you updated your workplace benefits and retirement savings?
No, but I am really going to think about it at some point.
Don't just think about a strong future. Plan for one with Voya. Plan, invest, protect.
Hi, folks. By now you've been hearing a lot about investing in YRefi. Why invest in YRefi? Well, how about an investment where your interest is calculated daily and you're paid monthly? Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. YRefi. You'll like investing in America's future.
If you're a business in Ohio, the opportunity for growth is high. Like, really high. Because in Ohio, the cost of doing business is low. Like, really low. It's one of many reasons why Ohio is ranked the #1 state for business in America. Your move.
Scott just learned what happens when you have spotty coverage, be it sunscreen or cell service.
You get burnt.
Exactly. When you get wireless service from a cable company, you can get scorched. Consumer Cellular is ranked #1 for network coverage satisfaction, and our plans start at just $20 a month.
Nice. Does Consumer Cellular have Allo?
Well, we're a phone company, Scott, but I can check. Save up to half on the exact same coverage with unlimited everything for $35. Call or visit Consumer Cellular.
Advanced nuclear fuel, an important input into economic growth going forward. The innovation, the ingenuity, and the dedication of this team, I couldn't be more excited about the future of this business.
Weeknights, I love themes. They help you craft a portfolio with the wind at their backs, not in your faces. The kind of stocks that you can confidently buy more of when they go down.
Mad Money, weeknight 6 Eastern, and streaming on CNBC+.
NVIDIA working with some of the biggest names on Wall Street to secure financing for its customers.
These
partnerships are going to pull together independent long-term capital to fund AI infrastructure build-out.
You're starting to see asset-based financing against this infrastructure. The first few years, there's no income. Once these are yield-based products, then it's easier to sell them in the public market.
We need to make sure that we're broadening participation in AI.
McDonald's has been suffering this year compared to other competitors, but Wolfe Research is turning bullish after looking at the stock's technicals. The firm says the stock is starting to gain traction at longer-term channel support. $300 is a near-term target before facing resistance, but the last two similar setups have shown the stock should be able to accelerate through. So $300 is still quite a ways from here. I mean, it had troubled earnings. It seemed like it had an execution problem. It wasn't like locking in the customer base on value, sort of missing that marketing opportunity.
I do realize that was certainly a technical call, but it did coincide with the fact that the valuation has hit the bottom of like a 10-year low. It has rarely traded below 20 times forward earnings. It's right there now, so maybe things are converging a little bit. Goldman Sachs, meantime, announcing today that it will acquire ETF provider Neos Investments for over $2 billion in cash and equity. Neos manages $30 billion in assets across options-based income ETFs. The deal would place Goldman Sachs as a top 8 active ETF provider. This deal comes months after Goldman completed its acquisition of Innovator Capital Management, another ETF provider. The deal with Neos Investments is expected to close the first quarter of 2027. I mean, one of the fastest growing parts of ETFs, not just active, but options-based. Usually it's selling options for income. It's kind of a cash or bond replacement type strategy. And I think it just fits in with Goldman wanting to sort of beef up on the asset management side and serve their customers.
And of course, all the companies that have done that in terms of adding ETFs and adding asset management, smoothing their earnings a little bit.
Yes, that's absolutely ideal.
Subject to the
I think this company they're buying, Neos, is only 4 years old.
Oh, wow.
Not a bad trade.
Time now for a CNBC News update with Brandon Gomez. Hey, Brandon.
Hey there, Melissa. That's right. Paramount Skydance has reportedly talked about creating a board to ensure CNN's independence as the company works through its acquisition of Warner Brothers Discovery. The Wall Street Journal reports the editorial board for CNN would also include other safeguards to address concerns over the news operations independence. The merger is now on hold pending an antitrust lawsuit filed by California and 11 other states. And the price of lettuce fell a whopping 16% in March, according to the Consumer Price Index released earlier today. That's the largest one-month decline on record and is being attributed to the Cyclospora outbreak. Several restaurant chains with lettuce on the menu reported a drop in traffic, even if they didn't have contaminated supplies. And 18-year NBA veteran Russell Westbrook announced his retirement from basketball today. The number 4 pick in the 2008 draft, played for 7 teams over his career, but spent the bulk of it with the Oklahoma City Thunder. He was the 2017 NBA MVP and holds the record for most career triple-doubles in history with 209. Melissa, send it back to you.
Played for as long as probably some of his new teammates have been alive.
Yes, true.
Brandon, thank you. Brandon Gomez. Up next, Journey One Advisors Chief Investment Officer David Snyder on why he thinks we could be on the brink of a market correction or even a bear market. Find out how he is hedging his bets when Closing Bell Overtime returns.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
many diseases. Meet Fibrobiologics, NASDAQ FBLG, 270 patents issued and pending, leveraging a diverse library of commercial-use fibroblast cells that naturally fight disease and repair tissue. Fibrobiologics is developing a new and innovative cell therapy platform to treat chronic diseases, addressing multi-billion-dollar markets, now advancing clinical trials for wound care and multiple sclerosis. Fibrobiologics, symbol FBLG.
This week on USA, the temperature rises during Rivals Week. Tonight, our doubleheader kicks off as the Timbo look to make a statement in Dallas. Then, the Sky go up against the Valkyries. Rivals Week, tonight at 8 on USA.
We know why you've put off your best smile. The time, the cost, the anxiety. That's why Aspen Dental is changing how dentistry is done, with technology to make care comfortable and flexible hours to fit your life, all at an affordable price. New patients without insurance get an exam and x-rays for just $29. Not waiting for tomorrow. That's the Aspen Dental difference. Aspen Dental. It's time to smile again.
You could spend all day sorting your employees' expenses. Or you could let Ramp do it.
I like that.
Never chase a receipt again. Ramp. Love finance.
Hi, Mrs. Thompson. How can we help you today?
Automatically route calls to your team and get detailed call summaries and recordings with Quo's business phone system.
The S&P 500 within about a half percentage point of all-time highs, and the equal weight index hitting a record yesterday as markets continue to grind higher after a brief swing in July. Investors cheering cooler inflation, strong earnings growth, and the broadening out trade. In fact, according to Jonathan Krinsky at BTIG, today is the 183rd straight trading day without an 80% downside volume day. That's the longest streak in at least 30 years by at least 50 days, or by nearly 50 days. But are investors too relaxed as they look past geopolitical instability, runaway AI spending, and untested Fed chair? Joining us now is David Snyder. He is CIO and managing principal at Journey One Advisors, also known as my former mystery broker source, someone whose market views I've been sharing going back more than 15 years. David, it's good to see you again.
Great to be back. Nice to see you, Melissa.
Want to just frame out the big picture of where you've kind of been thinking about things. So for one, I guess you feel like this AI tech rally is kind of a last hurrah for this long-term secular bull market, but you were giving room this year for, certainly the indexes to carry higher. But now maybe we're bracing for a little more turbulence.
Yeah, so as I was on here in December. I said this year would probably still be a good year. My concern is that I had said within the next 2 years, the secular bull market would likely end. So it's very difficult. I'm looking for catalysts. So even though I've called it a bubble, the AI, I still have not said it's going to burst. You need a catalyst. And the catalyst has always been tighter financial markets conditions. So we really haven't had that. And, but we got a chance of that happening a little bit here in this fall because the 10-year Treasury keeps going up. I mean, I had forecasted because I didn't think Bush was going to raise rates. Being loyal to Trump, I thought, the 10-year would rebel. And that's kind of what happened after the last meeting. But, we're seasonally in a bad time. It's amazing how risk kind of ramped up quickly after this correction. I think this oil price is probably, I don't see any chance for any kind of agreement that's lasting before the election. And we've been very lucky that oil prices haven't gone higher and stayed higher. But, we're at a threshold now where, if the strait is still closed for 5 or 6 million to 10 million barrels a day, eventually we've used up all our reserves, and China has been out of the market for 9 months. So I think there's a lot lot more potential for oil to go back up and cause havoc. So I do think there's a chance. Now, whether this correction is the start of the end of the secular bull market, I don't know. I mean, there's not enough room. I mean, there's not enough that I can say.
Dan, you have a laundry list of concerns, but without a catalyst here, do you just hold your nose and continue to be long this market effectively, or are you positioning for that catalyst to materialize?
Well, I haven't been 90% long most of the year, but I do have a hedge. I did have a hedge during the war, which basically was break even, but it did reduce the volatility. But I do have a hedge in now till the election. So yeah, no, I think we're getting closer. I think it's going to be within the next year. I think that the earnings growth is just surreal. I've written about this, but since 1950 to 2000, earnings growth for the S&P grew exactly the same as nominal GDP growth. And it makes sense theoretically because GDP growth is just how much value is being created. And is it going to go to labor or is it going to go to shareholders? So both grew at 7%, and then real GDP, of course, grew at the same at 3.5%. Since then, real GDP's grown at 2.1% since then. So it's almost half the rate of the last 50 years of the last century. But earnings growth has still been 7%. So theoretically, that shouldn't happen. And academic studies have shown that it's from lower interest rates, lower corporate tax rates, and also lower compensation as a percentage of revenue. And that labor as a compensation as a percentage of revenue has gone from like 62 to 52% over the last 20 years. So you're pulling rabbits out of a hat for earnings growth to go faster than nominal GDP. And it's happened before, by the way. In the late 1940s, earnings growth was a lot higher than nominal GDP for a while. So this isn't the first time. And I am the biggest reversion to the mean guy. And everything is, if return on equity and earnings revert to the mean for the last 100 years. I don't see that changing. I just don't. So now, since 2000, nominal GDP has grown at 4.5%, and earnings have grown at 7.5%. But what's amazing is, since 2023, if you use estimates of about $400 for the S&P for 2027, so earnings were, I think in 23 were like 221.
Yeah.
So it's an 82% gain. And nominal GDP, based on estimates, will be up 28%. I don't think we've ever in the history of our economy ever had earnings growth grow 82% with nominal GDP growing 28%.
So that's the answer to the bulls who say, well, earnings are growing faster than stock prices, therefore we've had a little bit of a compression of valuation.
Yes, and I've looked into why that's happening. So, first of all, everybody talks about free cash flow growth as value in companies. All of a sudden, when free cash flow is now normally free cash flow is 90% of earnings in conversion. Now it's about 67%. So as soon as free cash flow diverges from earnings, what does everybody say? Oh, earnings are important, not free cash
don't
flow.
worry about it.
Isn't it nice how convenient that is?
Yeah.
But you think about the free cash flow growth, you think that what's going on is all the receivers of the spending for the hyperscalers, right, is coming from the hyperscalers which have negative cash flow because of that. And the hyperscalers, any cash flow they're getting is from the frontier models like Anthropic and OpenAI, and Anthropic and OpenAI have negative free cash flow.
Right, they have to raise money.
So you have earnings are all based on negative cash flow from the hyperscalers for who get their money from the frontier models who have negative cash flow, right? So that doesn't make sense.
No, we got to see maybe into next year if that starts to come to a head.
So whenever you have this high capex relative to revenues, like the hyperscalers have now, I think it's very similar to like an insurance company's earnings. You know, the insurance companies have no, reserve based on their estimates of what their claims are going to be in the next couple of years. So when the hyperscalers depreciate the 20% they're spending each year, they're guessing or they're hoping that in 3 or 4 years that's going to pay off. So it's in other words, earnings are more of a guess now than they are if your capex is much lower because you get the returns much quicker. So that's a big deal that people don't really realize. And so I think that, all those things we're not going to know for a couple of years.
Right.
And here's the other thing. Google, Alphabet will have 50% of their cloud revenue next year from 2 companies, from Anthropic and from ChatGPT, from OpenAI. So that's a lot of concentration. And OpenAI doesn't have the greatest balance sheet.
Yeah, right.
And if you get this incredible competition from China, and they have to drop prices dramatically, and something happens to OpenAI, it would just cause a whole havoc and chaos in the market.
It's pretty tricky.
There's a lot of things that can go wrong.
Dave, really appreciate it. We'll have you back as things develop. Thank you very much, Dave Snyder.
Let's get back to Christina Partsinevelos for more on Cisco's results. Christina.
Yeah, you're seeing Cisco's shares reversing lower even after a higher guide, and they raised their fiscal 2027 AI revenue target to $7.5 billion, up from $6 billion. The sticking point might be gross margin. Cisco guided between 65 to 66%, short of the 66.1% the street wanted. But I'm here because I just got off the phone with the CEO, Chuck Robbins, and asked specifically about memory costs hitting margins because that's been an issue in the past. It's hitting Dell, it's hitting everyone. He kind of pivoted straight to operating margins, a record, saying it was at 35.9%, probably an all-time high. So I guess the message is gross margins are lower, but scale more than covers it. So the operating margin covers it. In terms of demand, it's broadening beyond the hyperscalers too. Product orders up 35%. Still without them, up 25%. Chuck Robbins called telco an incredibly strong segment that is growing. And then last but not least, I asked about security because that's a point of weakness or I should say it's not growing as much as networking. It grew 14% in the quarter, but the CEO told me that came from a one-time Splunk mix shift. And so he stripped that out, and security actually exited the year at high single digits. He expects it to be back there in fiscal 2027. So you can see shares initially popped, now down about 3.5%. However, they did climb over 2% into the close today.
Exactly. Christina, thanks very much. Up next, Fast Money's Guy Adami on how he's trading Cisco shares following those results, and checking in on Cerebras, the stock moving lower after hours, off more than 15% right now, despite what look like strong results. The company plans to more than triple its revenue in 2027, saying the demand for fast inference is enormous. Closing bell overtime. We'll be right back.
For more than 2 decades, Simple Surrogacy, an all-women-owned agency founded by a former surrogate and egg donor, has helped families grow through careful matching, transparent pricing, expert coordination, and surrogate-first care. With lived experience, inclusion, and integrity at every step, they protect the path to genetic parenthood for everyone involved. To learn more about how to become an intended parent or to apply to be a surrogate, please visit us at simplesurrogacy.com today.
Hey, Sarah. Oh, hey, Stacy. New smartwatch. Did you get a bonus?
Nope, I just got it using free cash.
Free cash? Sounds too good to be true.
It's an app. I earn money playing games and doing tasks. Cashed out an Amazon gift card, bought this.
Is there a subscription fee or what's the catch?
There's no catch. Totally free, and you get a $10 sign-up bonus.
Get rewarded for playing games. Download the app now.
Free cash.
just into a classy-looking logo.
But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
Cell therapy is transforming how we treat many diseases. Meet FibroBiologics, NASDAQ FBLG, 270 patents issued and pending, leveraging a diverse library of commercial-use fibroblast cells that naturally fight disease and repair tissue. FibroBiologics is developing a new and innovative cell therapy platform to treat chronic diseases, addressing multi-billion-dollar markets, now advancing clinical trials for wound care and multiple sclerosis. FibroBiologics, symbol FBLG.
You're seeing Skechers' famous glide set footwear everywhere. And now that famous design is available in hands-free Skechers slip-ins. Get the comfort and style of glide step now with the convenience of slip-ins, with no bending down or touching your shoes. Try glide step Skechers slip-ins.
Cisco now lower despite beating earnings and raising fiscal 2027 AI revenue targets. Investors seem to be focused in on gross margins, which fell short of Wall Street expectations. Stock is up 3% after hours. Joining us now, Risk Reversal Media co-founder and Fast Money trader, Guy Adami.
Hello, everybody.
Hello.
Hello, Michael.
I mean, this was a stock that was up 60% year to date.
Tremendous.
So just not enough?
Who's the handsome person that typically sits right here in this seat? Maybe Tim Seymour. I'm not trying to ask trick questions. Tim has been all over this for quite some time. AI infrastructure is absolutely real, and it's like the reemergence of Chuck Robbins 30 years later. Here we are, and Cisco's doing its thing. I thought the quarter was great. I think the reaction is giving back what we gained today, and to your point, it's had a huge run. If you believe that this is now a growth story, which the numbers suggest, margins notwithstanding, it's the best productivity they've had in 3 decades. And you got to buy the stock. But if you think this is just an anomaly and this whole thing goes away, then it's ridiculously expensive.
Well, I also wonder, I mean, what they categorize as AI revenue, and their guidance was like for $7.5 billion for AI-specific revenue. It's a little more than 10% of revenue for the whole company, right? So it's like, how is the market going to view and value?
Okay, are we going to trend that? I mean, I don't know what the trend continues. Neither do I. I don't know the trend.
I think some of the numbers we're looking at like $9 billion perhaps for an AI guide.
Fair enough. So you say it's Cisco potentially commoditizing an AI infrastructure, but I mean it's hardware effectively, and you know what? You're not going to pay 25. Where's the trade right now? You have it in front of you. 25 times next year's numbers.
Right.
Or you could say, you know what? They sit in a catbird seat, and these numbers are going to continue to grow. I think the run is a little excessive. I see what the stock is doing in the after hours. I don't think you have to buy it here, but you absolutely have to believe that if you believe the AI trade is real, and that all the spend we heard on this desk 3 nights ago is real, then Cisco is almost at the epicenter of this entire thing.
What are your thoughts on Cerebras, which is just dropping like a rock after hours?
You just had, by the way, I met the mystery broker outside. First time.
Yeah, Dave, sure.
Yeah, it's fantastic. I didn't know I was allowed to call him, but you apparently came out.
You know, he uses that as like a social media handle.
Yeah. He was talking about exactly what you're talking about, the lack of performance in some big-name IPOs this year. And he said, I don't know what that necessarily means, but he didn't think it was a good thing. And so I think this sort of falls into the category of a lot of the other IPOs that we're seeing.
By the way, Cisco's run in the last, 2 years, it's now outperforming the S&P on a 20-year basis.
Wow.
Like, it made it all back.
No, it's
not all.
It's amazing.
A lot of it.
It's insane. I think the prior, you have it in front of you, prior all-time high going way back was 70 or something.
Yes.
And then you saw how, once we went through there, you see the stock almost doubled from that level. Should I sit here or should I leave?
Whatever you want. Just be quiet.
No, it's not whatever I want. I know it's not.
All right. See you later. Up next, the details behind the reportedly record-breaking sale of the Los Angeles Lakers just a year after the team was sold for what was, at the time, the highest price ever. Closing bell overtime live from the NASDAQ market site. Be right back.
Rethink how our Innovation Suite ETFs open up a world of innovation. From flagship access to the NASDAQ 100 to income, low volatility, equal weight, and more. All designed to help investors shine.
Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus or summary prospectus at Invesco.com.
That's brilliant.
Itch, itch, scratch, bust up, itch.
Stop the itch sanity with Cortisone 10 for bug bites, poison ivy, and other itches. It works fast and lasts for hours. Cortisone 10. And for itch relief that cools on contact, try our new bug bite relief stick today.
Never considered myself an alcoholic, but drinking affected my job, health, and relationships. A powerful
powerful medication helped me take back control. Now I no longer feel the urge to drink, and the same pill that helped me could help you. Text CNBC to 710-710 to learn more.
There are lots of experts out there who might know tax strategy or maybe agentic AI, but they don't know you. That you live in LA, but you're a secret Boston fan. That you're seen as the voice of reason in the C-suite. And that before a big meeting, you're going to have an epiphany. The reason to work with Deloitte isn't just what we do, it's how we do it. Deloitte. Together makes progress.
Join the club and let me teach you to become a better investor.
His whole life, he's done whatever it takes to be successful, and he brings all of that to you in the club.
Join the club and get a free copy of Jim's latest book. Go to cnbc.com/KramerBook.
Since 2000, the dollar has lost nearly half its value. Every $100 you saved then is worth just $50 today. Your savings are eroding every day you wait.
Dollar is in a lot of trouble. I don't care to have all of my eggs in one basket.
Call now to get your free gold ownership guide and learn how owning gold can protect your savings from a falling dollar. Gold has soared nearly 1,800%, holding strong through every crash, every crisis. But who you trust matters as much as what you own. Over 1 million Americans trust U.S. Money Reserve, the only precious metals firm guided by 2 former directors of the United States Mint. And with our industry-leading gold buyback guarantee, when the time comes to sell, we'll buy it back for the price you paid or more.
I sleep better with gold than I do with the stock market.
Build a future your family can count on. Call U.S. Money Reserve for your free gold ownership guide and learn how portfolios with gold are built to protect and grow your savings. Call now, because waiting is already costing you.
Welcome back. Madison Square Garden Sports, the holding company for the New York Knicks and Rangers, hitting a record high today. The move came as the Los Angeles Lakers were sold earlier today in a potential record-breaking sports deal. Alex Sherman has the details. Alex.
Yeah, was it Donald Rumsfeld that said there's the known knowns and the known unknowns? That's sort of what we have in this deal. Let's start with the knowns. We know that Josh Kushner and Bob Iger in a consortium are buying the majority stake in the Los Angeles Lakers from Mark Walter less than a year after Mark Walter bought the team from the Buss family for a $12.5 billion valuation. We know that Kushner and Iger were looking to buy a Las Vegas team, an expansion team, and then pivoted to buying the Lakers after they found out that Walter was willing to sell the team. Now let's talk about what we don't know. We don't know why Mark Walter exactly wanted to sell the team less than a year before he bought it. Clearly, he's making quite a profit here in less than a year, $2.5 billion more in terms of a valuation than when he bought the team, which was for a $10 billion valuation, which was also a record valuation at the time he bought it. We also don't know what Jeannie Buss's role is going to be in this new setup. We do have a quote. Bob Iger actually, just within the past hour or so, spoke with the California Post. I will read what he said. He said, "We have every intention to honor the agreement that was made between Mark Walter and Jeannie Buss. If things change, they'll change." A little ominous there. The agreement he's talking about is that Jeannie Buss is still the governor of the Los Angeles Lakers. In essence, she's still kind of running the operations of the team. So we'll see if she has a role in the new Iger-Kushner era of the Lakers, assuming that this deal gets approved by the league, which we conceivably think will happen in the coming months.
So we say we don't know exactly why Mark Walter might want to sell so quickly after buying it, but don't we have some idea that perhaps he was a motivated seller? He's got some other things going on?
So we have a lot of circumstantial evidence at this stage. We know that there is an investigation going on with some other assets of his, insurance assets, within his larger holding company, both by U.S. prosecutors and the SEC. We also know that he's trying to raise capital for
that there's not a credit downgrade associated with them. We also know that the Wall Street Journal put out an article a couple weeks ago speculating about Walter's health and that he had a stroke in late 2024. So it could be a combination of any of those things. A person familiar with the matter did tell me that it has nothing to do with the insurance assets, but we don't know exactly all the full details yet. So at this stage, it's just speculation.
All right, Alex, thanks. Alex Sherman.
Thank you.
Let's get you set up with tomorrow's trade today. Another reading on inflation headlines of Thursday's economic calendar. Economists expecting both the July Producer Price Index and the core PPI to rise by 0.3% from June. Also on tap, weekly jobless claims. On the earnings front, we'll get results from Applied Materials, Tapestry, Birkenstock, Bullish, and JD.com. But of course, we're looking forward to what's going to be revealed on the CoreWeave conference call.
Yeah, for sure.
Cisco, which started at the top of the hour.
Yeah, so negative reactions there after a day, or really a couple of days, where the AI hardware food chain really got an extra bid. People getting more confidence that this was all going to flow through very nicely. And then, PPI tomorrow, I always say it gives you a window onto PCE inflation, which is what the Fed watches. Today's CPI was benign. PPI, we'll see if that gives anything for markets to react to. Because today, not a lot. we had some flat bonds and stocks going on most of the day. That does it for overtime.
Fast Money starts right after this quick break.
Hi, folks. By now you've been hearing a lot about investing in YRefi. Why invest in YRefi? Well, how about an investment that earns a 10.25% rate of return that's fixed? Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. YRefi. You'll like investing in America's future.
This was the first online trade.
I just made an electronic trade.
Like an E-Trade?
Now, there's a new way to trade.
Crypto's an E-Trade now.
Crypto, now an E-Trade's award-winning platform.
You built a successful career. What you never built is a team whose only job is keeping more of what you earn. Whether you own a profitable business or earn a high W-2 income, there is far more available to you than you have ever been told. The tax code is written to reward people who plan, and it rewards high earners who plan most of all.
Neil Jasani Tax Advisors, a national tax and accounting firm for ultra-high-income households and mid-sized businesses.
Hi, I'm Troy Aikman. I've always loved football and music, and that's what led me to Venue. They're the fastest growing publicly traded entertainment company. Now they're offering Fire Suites, absolute triple net real estate delivering an 11% annual return paid monthly. Simple, predictable, passive income. Visit investvenue.com to learn more.
When I started Walton Goggins Goggle Glasses, I needed a website. And GoDaddy Aero uses AI to make a beautiful website so fast it'll blow my customers' noggins while they're shopping for Goggins for their noggins.
Today's industries are evolving fast. Comcast Business keeps you in step with secure AI-backed networking in over 100 countries and thousands of experts answering your call at 2 a.m. like it's 2 p.m. Powering over 90% of the Fortune 500 and millions of small businesses, just like hers. When you add it all up, no one does business like Comcast Business.
Watch top movies and series for free with Fandango. Stream iconic action hits like Armageddon, Speed, and Predator. No subscription or login required. Download the app and start watching for free today.
Live from the NASDAQ market site in the heart of New York City's Times Square, this is Fast Money. Here's what's on tap tonight. A red-hot day for AI, from CoreWeave to Nebius to Bloom Energy and more. The sector is riding high once again. Is this rebound for real? We'll debate that. Plus, MetaShare slump as jury selection begins in a California court case over claims the company's social media platforms are harming our kids' mental health. The latest from Oakland and the impact straight ahead. And later, what's behind new records for a couple of big banks? A bullish technical take on Mickey D's, and Google takes the wraps off its new AI phone. We will get a first look. I'm Melissa Lee, coming to you live from Studio B at the NASDAQ. On the desk tonight, Karen Finerman, Dan Nathan, Guy Adami, and Tim AI build-out trade, check out the action shares of CoreWeave, Nebius, Supermicro, and Lumentum. All of those stocks flying high. NVIDIA also catching a bit today, finishing today up around 3%. And the energy and memory names getting in on the action too. Bloom Energy, GE Vernova, Micron, SanDisk, the list goes on and on. Just last hour, we did get results from Cisco. Shares initially jumped on a record top and bottom line beat, but gross margins fell short of expectations, which could account for the stock turning negative after hours. Christina Parks-Nellis just spoke to the CEO. She'll join us in just a couple of minutes. Also, we should point out Cerebras also falling in the after-hours session, despite what looked like a fairly strong quarter. Since this week's actions from NVIDIA's financing deal to all the strong earnings sending a signal that the AI trade is back, or the two data points we're getting out in the after-hours session throwing some cold water on this rally, Guy? What do you think?
The AI trade has been intact for a while. The AI trade, well, I shouldn't say that. The AI theme has been intact. The AI trade has not been intact, and you can see it from some of the moves we've seen in these stocks. I mean, when a SanDisk gets cut in half over the course of 8 to 10 trading days, you can't say that it's intact. However, I think sort of thematically, nothing has changed. I think people are now focused on valuations and trying to figure out, okay, where's the return on invested capital? How long can this last? And they're trying to sort of figure out who are going to be the winners. As David Solomon said on Monday, who are going to be the losers? And there will be a lot of them. But today suggests that they're still basking in the afterglow of the Monday interview we had here on this desk.
Yeah, I'll just say this as far as the trade or thematically being intact. I mean, just look at what we saw in the component suppliers, right? The hardware guys, and to Guy's point, with the SanDisk getting cut in half in 9, 10 trading days. And I'll just look at what happened in Nebius today, up 35%. I mean, that's either a lot of skepticism that was going into the print, and it seemed like that was the case, or if you look at today, I mean, what does that look like? Does it look like there's just overall euphoria as it relates to these names? I'll just say this: with CoreWeave up 20%, listen, if these guys are failing, if the neo clouds are not doing well, then you better watch out for everything else, because these are the first ones that are going to have a hard time if you do see a slowdown in CapEx, if you see a slowdown in demand. I mean, the customer concentration that you have here, and you have the backstop of NVIDIA specifically in CoreWeave, I mean, then you got a problem. And so as long as you start to see enthusiasm come back into these names, that's fine. So again, I think that it's great that these acted this way, especially on the heels of just the kind of semi and the memory sell-off over the last few weeks. But make no mistake about it, with all those companies having pricing power, that does weigh on margins of some of these buyers of those components.
So I thought CoreWeave was really interesting. So their business model very much on track, improvement in margins. I mean, the slight timing of the revenue thing, but that was nothing. I mean, there was a lot to like there. I don't own CoreWeave. I do own Dell as my largest position. Clearly, that's great for them if CoreWeave is moving at the pace that it is, and the others as well. So I think what Guy said, right, the theme is still there. We had that huge disruption from situational awareness, but I thought that NVIDIA thing was actually really interesting. We were talking about it yesterday with Steve Eisman about, okay, is this a new security, is this a new asset class? He didn't like that the semantics of that, but it is a new category potentially, and I think that can really extend this. I think it can sort of mature things faster. And one other thing that I don't know if Dan and I will get into it or not, but we were talking earlier outside over there about depreciation.
Right.
And Dan loves talking about depreciation. I try to get him talking about other things, but he doesn't.
You know who doesn't like talking about it? The hyperscalers.
I don't agree with that.
Really?
I don't agree, because I think they're seeing, we have these depreciation schedules, but in fact, we are finding that those chips are they're productive for longer. Now, what I would think the bear argument to that is, okay, then why do you need to switch immediately then to the next right? But I think there's enough demand out there that demand for both, and I think you'll have several different pricing models to go to. Chips that are much older, but do the work good enough.
Right. Tim, your thoughts?
Well, I don't think anybody's questioning demand, and I think we're all questioning where margins are going to get to. But in the short run, and we'll talk more about Cisco, but monetizing AI, especially if you're either on the software side